Live.
All right. Good morning, everybody. Hope you're doing well. My name is Jeff Gibby. I'm going to kick us off today. Thanks for being here. A couple things as we get started. If you have any questions, if you're watching on GoToWebinar, the questions box is off to the right-hand side. If you're watching us on YouTube and you have questions, make sure to ask those questions, or you can just ask in the chat. We'll watch both of them. So it is good to see you. I'm glad you're here. Thanks for being here. If you are watching us on YouTube and you like today's video, like and subscribe. It helps a great deal. Appreciate it. Again, if you have questions, make sure you ask. Let's go ahead and get the lawyers happy. Today's demonstration is designed to instruct you on using MetaStock and the accompanying software plugins. It is not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. The information, software, MetaStock and its employees shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. MetaStock and its employees do not endorse the purchase of a security, nor are they paid for this promotion of a security. No information contained in the presentation should be construed as an investment advice or the solicitation to buy a security. Thank you again for coming out today. It's really good to see you. I do want to, before we get started, I want to thank a couple of the sponsors we have. The first one I want to thank is Stocks and Commodities Magazine. Stocks and Commodities Magazine has been publishing since 1982. They've got a ton of subscribers, 1.3 million, and as a subscriber to Stocks and Commodities, you can look at all of the 17,000 articles they've ever written, ever. If you want to, you can get a free issue by registering today for today's summit at metastock.com/traders-summit. You can get a free issue there. So I want to talk a little bit about our Traders Forum community. Another sponsor of ours, they do a great job, thetradersforum.com. You can go up there, you can chat with other traders, learn a lot of lessons, and kind of share ideas, share, whatever. thetradersforum.com. It's free to join. We'll love to see you there. So we are, of course, MetaStock. MetaStock's been rated #1 32 years in a row. I love the fact that you can scan the markets with it, test trading ideas, forecast probable price movements, and get real-time alerts, commentary, and signals. Pricing on that starts at $75 per month, and you can get an extended trial at metastock.com/summit deal. So without further ado, just noticed there's a little bit of a problem with this slide. I want to welcome in Martha Stokes. Martha is a great friend of MetaStock. We've been doing business with Martha for decades. Very, very smart trader. Really has designed some pretty cool custom indicators that kind of go into MetaStock that look for accumulation and that kind of stuff. She's a chartered market technician. She's also a super great cook. She actually has made some of the best salmon when I was down there that I've ever had. And so we love Martha, not just for the salmon, but for all the stuff that she's done for the trading industry over the years and for us. So Martha, let's go ahead and get you started. And I show that you just muted your microphone. Let me go ahead and kind of make you a presenter here. Okay, we should be able to hear you, Martha. Uh-oh. Well, that was working a second ago. I can no longer hear you.
Can you hear me now?
Yes.
All right. All right. So I'm trying to show my screen. Can we see my screen?
Yep, we can see you. We can see the screen. Everything looks like it's going well right now.
All right. Well, let's get started because we have a lot of stuff to cover. We're going to, it's called Forget Stock Tips, Master the Forces Behind Price Action. My disclaimer is just like Jeff's, so if you heard him, you heard me. You already have all of my credentials from Jeff. Basically, these are my credentials that I always present to people so that they know who we are. I have a Series SEC Series 86 license approved to do what I do and educate, and that's very important. The future is now. The stock markets around the world are in a massive evolutionary change. It is imperative that you keep up with these changes. Everything you've learned so far, everything you will learn with all the other gentlemen and ladies who are going to be presenting this week is worthwhile. But there are things that, as an insider on the buy side and retired, I know things that other people don't know. However, retail news, retail chat rooms, retail websites, videos, training, several are often all outdated. So you have to be careful what you watch and listen to, because this evolutionary change is happening very, very rapidly. In order for you to succeed in the new global financial markets, you must understand the changes and how they impact your stock trading. NASDAQ and Amazon, AWS, have this new technology. They're moving into Europe that will dominate. And at some point, NASDAQ may be the main exchange of the world. Forget stock tips, stock recommendations, and so on. If you don't, your trading will deteriorate even more. I know a lot of you are struggling, and I'm trying to explain why. Master the forces. Are you working but struggling with trying to make your income be enough for you to have the lifestyle you want and you absolutely deserve? Are you retired, finding it harder to adjust to less and less as inflation keeps eating up more of your retirement funds? Are you worried about a recession or tariffs or trade wars or real wars? Most of the people I talk to are worried. Fact, there is always a way to make money in the stock market. It is the only thing, the only place in the world, the only thing that exists that no matter what happens to the economy or the world, you can make money. Write it down. Put it on a sticky note. Professional stock trading. Meanwhile, the professionals are not worried. They are busy making higher profits with easier trading conditions right now. At market open, they are already making profits. They trade on the millisecond. You are chasing runs after a huge gap up or losing money. What do the professional traders know that you do not? How can you trade like a professional trader who makes a 6 or 7 digit income annually? Many of my professionals do that or more. It is not about finding a stock to trade. It is about understanding the dynamics of the professional side of the market. What about AI? Oh, let's just have AI choose our stocks for us. A red light, green light just returned in an AI format. I just finished a course for my students about AI and how it is being used by the various professionals of the financial market. How the professionals of the market use AI is totally different than what you hear on the retail news and chat rooms. Totally different. AI does not choose stocks for professional traders. It doesn't. In fact, the SEC forbids it. Rather, AI is an additional tool incorporated into their trading system, procedures, and analysis that speeds up the process, because AI is doing all that data and analytics for them instead of them doing it. And so it speeds up their action and makes it easier for them to trade. AI analyzes metadata in milliseconds. So seconds before the market is opening and you're getting all ready because you've heard about this chat room stock, everybody knows about it. So you're going to be front run right from the get-go. It is used for understanding the overall market conditions, risk factors, and so on. They're all about risk. They're all about market conditions. So we're going to talk about market conditions today. In another webinar, I'll talk about risk factors and AI. I'm using a SPY chart today because that's what I had available when I was putting this together. And it follows the S&P 500 very, very closely. I've been getting letters saying, Martha, why are people saying the market is rallying? We're going to have a recession. We're going to have wars. We're have all this trouble. Everybody's going to lose their job. I said, look at this chart. This is support the market. This is support the market. Sell-side institutions got quantitative easing money from the FRB, Federal Reserve Bank, not the Feds, FRB. If you want to talk like a professional, use professional terms. And they have reversed this market and moved it up, and now it is moving back up. I'll tell you why it's moving back up. And now it's just shifting sideways to break out of this previous all-time high. So this is what's happening right now. We may have some little dips and panics by retail traders, but the professionals are buying, and I will tell you why. Functionality of markets since AI introduction. If trade wars, real wars, and tariffs are bad for the stock market, why has the stock market been moving up since April of this year? It is because of AI technology and all the new technologies. We have over 25 new technologies. I just found a new one the other day called spatial computing. Exciting. AI and market conditions. There are 6 primary market conditions in a bull market. There are 4 in a bear market. The stock market cycles, and each market condition is a different part of that cycle. Trading strategies for swing trading must adapt to each market condition. So should day trading. This is because different market participant groups control how price moves up or down when they are in control of price. And at any given time, it might be retail day traders, it might be memes groups, it might be buy side or sell side in control of price. And when they are in control of price, you have to adapt and be trading with them. Professionals trade each market condition based on which group dominates and controls price at that time. And they can control price for a day or a week or a month or several months. And dark pools have been controlling price for several months. Do you know what the current market condition is? Anybody? Do you have any students out there? Well, we're going to find out. So stay tuned. Is this a bull or a bear market? Bull markets and bear markets are not an inversion of one another. This drives me crazy. A bear lasts 8 to 15 years. A bull lasts 8 to 15 years. A bear 1.3 on average, and it's getting shorter all the time. It used to be 2 years and 3 years. Now it's 1.3 on average. There are different kinds of bull markets. The minor bull market is an uptrend of a few years. It doesn't last long. There are no new technologies. Minor bulls occur when other financial markets, such as real estate, 2003 to 2007, or the bond market in the late 80s, or the commodities markets during the oil growth in 2016, or even cryptos and their bull market impacts the stock market to some degree. So it makes a minor bull market. The average bull market has enhancements, but not a lot of new technologies. And we had that. We had the new 2010 to 2016 bull market because we had one great new technology called cloud computing. And we had cryptos growing from 2008 on what it became it's now no longer a fringe market. A great bull market endures far longer, has far greater return on investment and trading gains. New technologies create great bull markets. We have about 25 new technologies. AI helps all that. Semiconductors help all that. Sensors and everything is just massive. I have never seen so much new technology coming to market at introduction early adopter phase ever. And I have been watching the market since I was 12 years old with my grandfather. So we're going to go through this real quick. Buy-side institutions form the bottoms. Write it down. Buy-side institutions form the bottoms. Wealthy investors are very wise. They have mostly CEOs of great corporations have retired and they know what they're doing. Sell-side institutions are short-term traders and they have floor traders, and so do the buy-side. And we also have a massively growing group of professional traders that are independent, and we have a massively growing group of retail traders who are semi-professionals with trading as a business, which why I teach students. I have lots of professionals coming to me saying, Martha, I need help. I have a financial degree, I have a master's, but I need help understanding this new market. And I have a lot of students who want to become semi-professionals and they want to trade as a business, write off their MetaStock charting software, write off all their courses, write off all their expenses, which you hobby traders can't do. Corporations are a huge factor right now. What are the corporations doing that is so important that is driving this market? High frequency trading and hedge funds actually trade on the public exchanges. These trade on the ATS venues. There's 50 of them. There are 12 or 13 public exchanges. So they control 80% of all the market activity. You cannot see their activity on a level 2 or level 3 or whatever you've got. You see this group, 50,000 share lots, 100,000 share lots. That is not a large lot. That is a small lot fund manager or small hedge fund. And you'll be on TikTok telling you how great it is and everything. So do this, write this down. check out the small asset manager and how much assets he has under management. If it's 5 million or less, he's small. He's small and he's not worth listening to. Sovereign funds, foreign funds, everybody invests in the market. Why? Because we're the largest in the world. All of our financial markets are so much larger than everybody else's that it's absolutely ridiculous. If you added all of those together, all of them together, the stock market would still be bigger. So 200 different small markets around the world for stocks, because they only have a few companies. We have 1,000 giant companies. So all these groups come in late. You come in late. You should be down here because this can be a day, this can be a week, this can be a month. This cycles all the time. And of course, the odd lot investors get in late because they don't know what they're doing. You only account for 20% of the market activity. 20%. In 2020, $300 billion exchanged hands every day in the stock market. Exchanged hands. It's $1 trillion now. So why aren't you making the money you deserve? Because you have a great education, but you have huge holes in it and you need more education. Well, we're not going to get into the bear cycle right now because it may be a short-term bear that we have if we have action from the activity that happened over the weekend. I'm not going to get into that, but basically it's the inversion. What I want to stress here that's critically important is selling short does not drive the market down at first. What happens is the sell side, the professionals and the hedge funds and high frequency traders place sell short open orders. They place their buy to covers way down here. And because there are no retail buyers, there's a void of buyers. So the stock market free falls down. To drive price up, you have to have more and more buyers. To have it fall, if you have a lack of buyers, it will fall on its own fruition. It just falls. And then you guys get in late. You should be in here for the free fall because it's really magnificent when you can make that much money on a free fall. Corporations are vastly important. So far this year, there has been plenty of geopolitical angst. However, the U.S. Fortune 500, 1,000 corporations have been in a huge state of new technology adoption and AI integration since 2020. You just found about it out a few months ago. These changes have insulated most of the major corporations from the current global challenges. There are some that are not, and they are going to be in a funk. And that's just how it happens. Behind the scenes, corporations are gearing up for the resumption of the great bull market that started in 2003. This summer, buy-side institutions have started quiet accumulation much earlier than they normally do. They're starting to quiet, and I'm going, what is going on here? Because they usually don't. When they're going, well, we have bargain price stocks, fundamentals above the price. They recognize the benefits of AI to the market and public corporations, and they see what it's going to do. This is Apple's brand new Arizona manufacturing plant. They started building it in 2020, and it is US based, and it is solar powered, and it is harsh climate or severe climate proof, and it's going to be full. Apple says, oh, we're going to hire people, but that's not true. And they can't find people. So it's all robots and robotics and a few human beings that manage those robots and robotics. This is the future. Apple has 5 of these, some in Texas. All the corporations realized that supply chains were the issue with the pandemic. They couldn't get their stuff in. But here they go, wait a minute, look at Amazon. Oh my gosh, Amazon, it has its own chips. It has its own planes. It has its own trucks. It has its own ports. Its ships are so small it can get into little ports. It has its own docks. And it is making a killing during the pandemic. We're struggling. So they're all going individual supply chains. They're all doing it. All the big ones are going their own supply chains. End of conversation about supply chains and tariffs because they're local. So they don't have to worry about the tariffs. Buy-side giant institutions are called dark pools. The buy-side giant institutions are the most dominant and influential market participant group. They control vast inventories of stock in thousands of companies, trillions of assets under management. It oscillates between $200 to $300 trillion under management. If they needed to bail out the US government, they could. When they accumulate, the price is predetermined as in a very narrow penny price strike range. They use time weighted at price. Write it down. Time weighted at price. So I call these buy zones. It can take weeks for the dark pool to buy all the shares of stock for a mutual fund or a new ETF that they're developing. And they're developing ETFs up the yin-yang right now, all kinds of them, really exciting new ETFs. You could just trade the stock market and you wouldn't have to worry about any other financial market because there's everything there. There's Bitcoin, there's non-tangible tokens, there's digital assets, it's everywhere. Buy-side giants also support the market whenever there is a geopolitical event or risk to maintain the integrity of the current trend and market condition. Buy-side did support the market along with the sell side starting in April of 2025. They started to support the market in 2019 because they said, oh, we have a problem. And the giants, Vanguard and Fidelity, they all got together and they said, we have a problem. We have all these ETFs we sold, which are great, but what happens when the market crashes? If those ETF investors, long-term and everything, and all those 401k ETF holders sell all at once, we have a major market crash. How can we stop it? Well, we have to worry about the 401k holders, right? Yeah, okay, that buy these ETFs. We have to make those guys, those long-term investors that are going to retire and use that money, feel safe and comfortable. So if the indexes drop below 20, we'll come in and support the market. We'll push it slightly back up and keep it above the 20%. Because if we can keep it above the 20%, those ETF investors will not panic. They will hold us because they've been told, hold, 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 and they will hold. And sure as guns, it works. So that's what's been going on recently. The professional traders. There are professional floor traders, proprietary desk, independent professional traders, and my semi-professionals. They are aware of the entire body of market participants and what each is doing and how that market participant impacts price action. They are aware of who they are trading with and who they are trading against. Professionals use special order types and commonly trade 1 to 5 million shares in a single transaction. Are you seeing 1 to 5 million shares on your level 2 or level 3 screen? I don't think so, because they're trading on the dark pools. They use special indicators to identify which side of the transaction a large lot triggered, uptick, downtick, large lot versus small lot. That's what I teach. Independent professional traders hunt for dark pool buy zones because they know they can do nudges. They create the candlestick pattern called nudges. It's brand new. It's only been around a couple of years, which trigger HFTs, automated orders, which gap the market up or down at market open. You got that? Write it down. I know I'm going fast. High frequency traders. High frequency trading systems firms are fully automated. HFT activity dominates at market open, gapping up or down. That's mainly where they're at. HFTs use strategies to which the AI interpretive algorithms applies pre-programmed orders on the millisecond. HFTs fill the queues with thousands of small, small lot orders, milliseconds ahead of the market open. The computers of the market then adjust the stock price up or down based on the number of buy orders versus number of sell orders, not the size of the lot. HFTs create the huge gap ups at market open. This is why your trading orders often whipsaw or have poor fills. Futures only tell you how the market's going to open. It doesn't going to tell you what's going to happen the rest of the day. Sell-side institutions, the giant money center banks and giant financial services such as Goldman Sachs companies are the sell-side institutions. Banks are the underwriters for new IPOs. They perform the corporate buybacks as the bank of record for all the Fortune 1000 companies. Banks are short-term traders. The floor traders of the sell side are the most talented with extensive experience and trade all the financial markets. They are the powerhouse of short-term trading, and they trade against you every single day. They are brilliant. They are plucked out of the universities after they have their financial degrees and stuffed into a floor, and they are left alone. And only 1 in 20 make it as a junior trader. The rest are fired. They have multi-leg orders that fill in milliseconds and front-run retail traders and investors. That's their job. That's what they do. Or they start buying a stock or doing buybacks, and then you see that run and you chase it. So know what they look like and know what they're doing, because you can trade and make money. You can piggyback off of all these guys. The sell side is no longer the most influential market group. Buy side now has that status and they dominate. And the sell side and the buy side are at war with one another. They are at war with one another. And you see it in the advertising. Yeah, retail advertising shows you who's dominant right now. Small funds managers. The small funds management companies are firms with less than 5 billion assets under management. If you don't know if you're dealing with a small fund or a large fund or asset management company, whatever they call themselves, go look on the internet and it'll tell you what they're worth. Giant buy sides have trillions of assets under management by comparison. There's no comparison. Small funds companies do not have the capital reserve, nor the experience of market, nor the expertise of or skill of the giant buy side or sell side. These small funds are trading and gambling. Smaller fund companies are a big group of 10,000 to 15,000 companies and are often franchises such as Edward Jones, who finds great salespeople, hires them, has them put down 50,000 or 100,000 for their to be a franchisee, and then they give them products to sell to people mostly by age or financial bracket. Their limited experience and lack of formal financial services degrees puts them at a huge disadvantage. They use VWAP orders, which cause an acceleration of price up or down. Volume weighted at price. Time weighted at price is ping at this price. If it goes above that, it stops pinging. If it goes below that, it may ping and bring it back up. So it's pinging so that you have this narrow price range. VWAP orders are extremely dangerous. And they drive the buy side crazy. They don't want to be in, they'll let them run the stocks up, but they're not driving the stock. They're triggering the stock. Okay, the difference there. Trigger to move. Trigger these guys to do the VWAPs. So the VWAP hits. So there's more volume. So then another VWAP hits. Then there's more volume. And then another VWAP hits. And there's more volume. Suddenly, can you imagine what that's like if the market's running down? Is it accelerating? When they start panicking and they start selling, whenever they get their triggers. So market condition analysis scans are extremely important. They're very, very important to what you understand. And I have written these for MetaStock years ago when Jeff came and proposed that we should have a partnership. And I just think it's been fabulous for us. It's just been amazing for both of us. So I say, give me all the stocks that are moving with momentum to the upside for that day. Give me all the stocks that are moving to the downside for the day. That tells me the bias the market is going to have for the next trading day, because it's very consistent. Futures may be up or down, but it doesn't tell you what the market's going to do the rest of the day. Give me all the stocks that are having quiet hidden accumulation with uptick, downtick, large lot versus small lot indications. And that tells me how heavy are the dark pool by institutions doing. Are they heavy? They're heavy right now. They're really heavy. And it's not like them to be heavy right now. That's too soon, but they're heavy. And then I say, and then HFTs chase those, of course. So it also tells me where the HFTs are. It tells me what industries they're accumulating in. It tells me what stocks they're heavy in, that type of thing. Consolidation scan tells me where the pro traders are, because the pro traders have penny spreads. So their candles are super small. They're not big. They're small. They make everybody else push the price up, and they just sit back and ride the train upward. And overbought tells me if the stocks are trading and turning in their trading ranges or at their starting to top. That is the warning signal that we may have an intermediate term correction or a risk of a bear market. The RSI strength indicator, market condition indicator, tells me how many stocks are moving with improved price momentum. This tells me that we have a shift from professionals entering and nudging and smaller funds pushing and driving the price up. That tells me that it's time to start getting into that. So these are what I have for my students, and they just love them. And every morning I do the market condition analysis report and a market open report, so they know what's going on, and then they have the stocks that they can check and look at. So we're going to start with the bottoming market condition, because that's where all bull markets start. The bottoming market condition is exactly what the name implies. Either a bear market or an intermediate term correction is ending and a beginning of a new bull market, or a resumption of a bull market is beginning. We had that in April and May. It is critical at this transition phase from a downtrending market to a bottoming market that becomes an uptrending market that you understand this transition and are prepared to buy with the professional traders rather than against them. There are many shapes to the new bulls, to the new bottoms. There is a bull shape, which is a long-term bull. There's rounding, which is faster. There's the triple bottom is still there. The W bottom still forms sometimes. V is very common. Severe V's. We have severe V's right now. U shape is often, it's a small, very short, very quick one. And basing bottom, which is flat. Brand new bottoming market condition. Buy-side giant institutions create the bottoms, always. When stock prices fall below fundamental value levels, as they did in April, dark pools start buying bargain price stocks. They don't buy cheap stocks, they buy bargain price stocks, stocks that have high quality fundamentals, but their price of their stock has dropped below. That's why some of those candles can be really large on the support the market, because the fundamentals are way up here and the stock price is right down here. Well, they're just going to drive that right back up because everything they buy is going to be still a bargain. During a bottoming, retail groups are afraid of the market, and they're afraid it's going to will go down more, and so retail groups hesitate and often sell at or near the lowest price as dark pools are buying, or you start selling short when the dark pools are buying because you can't see them. I'm going, don't do that. Terrible. Retail news is full of fear, negativity, and misinformation. Every bull market has negative news. By the time it gets positive, the bull market's been running for quite a while. Fear destroys your ability to take advantage of the huge profitability within a bottoming market. And this is a bottoming market. It has a very steep velocity run up and then a crashing market as the buy to covers are way low. Then all of a sudden it starts slowing down because the buy side are going, wait a minute, we have fundamentals in these areas. And then they do this flattish bottom, and then pro traders nudge, 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 and up it goes. So you need to trade with them rather than against them. And we can see the quiet accumulation. Heavy selling by smaller funds down here, and they're selling, and the buy side's just going, yeah, go ahead, sell. So it's very exciting. Platform market condition. Platform market conditions follow a bottom market condition sometimes. The platform market condition is only taught in techno-trader courses because for some reason, everybody thinks a platform market condition is a volatile market. And it's not, it's different, but they don't see it. Platform market conditions started appearing in 2002 when the market switched from fractions to decimal pricing, and suddenly the market is too efficient. Nobody can make any money. So they changed, they adapted. Dark pools strike the penny or half penny trend in a narrow price range, creating this newer type of trend, which is wider and longer than a typical consolidation, but has very distinct highs and lows. They stop buying when it hits that price high range, and they start buying when it hits that low price range. That's what makes the platform market condition. Dark pool TWAP orders create this. Buy-side giants create and control the platform market condition. Why? Because you're too afraid to buy. Oh, I'm scared. I'm scared. The market's so bad. I'm going to put my money in real estate in 2003. Meanwhile, platform market condition just coming up. It's like, whoa. Professional traders search for these patterns to create nudges and triggers to move price upward via HFTs and smaller funds managers buying. In this market condition, you have many choices on how to trade and can hold for a longer period of time to have a higher income monthly with far fewer trades. This is very popular. I had two students who started with me, and they were both MIT graduates, stellars, extremely intelligent people. He went to work for Boeing and is the top manager. She decided for a while, she decided to retire and raise her children because she wanted to stay home. She started platform position trading in 2003. And a few years into that, she says, Martha, I make more money trading platform position trading than my husband does at Boeing. Aren't you proud of me? And they're both retired now, and they're having a fun time. This is the platform market condition. There's a certain low where the price triggers, and there's a certain high where it stops. And in between, pro traders are nudging and it gaps it up to the next level. As fundamentals improve slowly over time, this is a 3-month, this is a 4-month, the pattern will continue because they'll keep moving up. And then at some point this becomes, and I'll show you this other chart later on, it starts shortening, the time starts shortening because now the growth of the company is accelerating and this is a cycle. So it starts with a bottom that's not shown on this chart and it slowly moves up. But everybody says, oh, the market's so volatile. Well, you're not holding long enough. And these are all the indicators that tell you what's going on. These are my indicators. Moderately trending market condition is a trend that follows a platform condition or trading range. Moderately trending market conditions are often missed entirely by retail traders who are using outdated trading strategies and are unaware that the market has completed its bottom development to a level where stocks will move with strong momentum, but periodically will move sideways. The moderately trending market has a steady uptrend over many years and shows up during the middle years of a long-term great bull market. Frequent minor to intermediate term corrections are common and maintain the integrity of the uptrend over many years, but you shouldn't be selling short because they're just brief corrections. This market is dominated by professional traders setting up triggers that initiate HFTs, smaller funds, and later retail traders and retail investors who always buy in late on speculation. Momentum is reasonably stable for swing momentum or platform position trading, and you can make steady income with all three. Retail groups often mistake minor corrections for a bear market. It is not. You gotta stop listening to that retail news. Ugh. So moderately trending market, this is what it looks like. It starts with a bottom. The bottom is not on this chart. And then it platforms for a little bit. And then it gaps up and platforms for a little bit. And then it starts running up speculatively. And then it corrects a little bit. And then we have some more nudges, another platform, a little bit in the intermediate term correction because prices went below fundamentals. And then the sell shorters try to drive it down. The buy side moves in because those prices are below the fundamentals, then it goes speculative again. So, but this is very tradable and you can hold for a longer period of time than swing trading and make a ton of money. Velocity market condition. The velocity market condition is the shortest of all the conditions, lasting a few days to a few weeks intermittently during a bull or bear market. Velocity, like moderately trending, can be either up or down. This is one of the most exciting market conditions as more and more retail traders are buying speculatively. However, it is also the most problematic for most retail day traders as they chase stocks rather than being in that stock before it begins its velocity run. Why not do overnight like the pros do? End of day, buy the stock. First of day, sell the stock. You don't know that strategy? Here I am. Velocity uptrending market conditions occur when the retail traders, retail independent investors, foreign and sovereign funds are buying speculatively. These groups have minimal to no real education and limited experience. They just don't have the depth of that education that buy-side institutions have. And since I was buy-side, I have more knowledge. These groups control the velocity runs, which often have no overlapping of candles as price tends to open up or slightly above the previous day's high due to the rising overnight order flow from the retail groups. The angle of ascent warns traders that the trend is too steep to sustain for long. Angle of ascent or descent is critical for you to learn. Professional traders always sell with great care, creating tiny resting days or really small profit-taking days because they don't want to disturb the uptrend before they can get out. So this is a velocity run here. And it can go even more speculative than it has, but it's a gap up on earnings news and then it runs speculatively. Well, pro traders are in right here and dark pools are in right here. And they're just loving this. They're just going, yeah, this is cool. We have 401ks who are happy campers and they're good to go. Trading range market condition is the most challenging market condition to trade. Most of the time, retail traders, day traders have no idea that the index or stock or market is in a trading range, as these trends are so huge that they are not visible on daily charts, but are visible on weekly charts. How many of you ever check weekly or monthly charts? The trading range market condition can develop over on the intermediate term trend or on a long-term trend. The longest and worst trading range market started in late 1960s and ended in 1982. Leveraged corporate takeovers and skyrocketing inflation with oil prices soaring are the cause of such a long trading range market condition. And buy-side institutions have learned a lot since then because they came into the market in the 80s. Also, there were no new technologies of any significance during that era, so it was flat. Trading range market conditions occur from time to time and are usually a correction phase on the long-term trend that is very wide. Special training is required to profit during a trading range market condition. I don't recommend trading ranges. This is just a stock. It's workday, and it's sideways, and it's a trading range, and you can see how difficult it is. It had a momentum run up because some dark pools decided to invest in some of this, and then it has gapped down again. So they're just waiting to see if it's going to recover or not. But you have to understand that this is a very, very up, down, up, down. I mean, when you see this on your day trading screen, go fishing. Topping market condition. The topping market condition occurs at the end of a bull market. The great bull markets of prior years were 1929, 1950, and 2000. Great bulls occurred due to numerous new technologies of those eras, all coming to the consumer market and small business market within the years of those great bulls. What is important in a topping market condition is that all the retail side of the market ignore the warnings. All the retail groups believe the market will go up and up and up, and speculation becomes irrational exuberance and euphoria. It is critical not to be caught up by the hype of retail opinions that are emotionally driven by a brilliant, brief moment in the stock market. Velocity warns of an impending topping market. When everyone thinks that the prosperity will go on indefinitely, like in the late 90s, that is when well-educated traders and investors start selling their stocks, as a great bear market always follows. I made 50 points one day and I didn't hold, I sold. It went up a little bit more, but I didn't care. This is a topping market. Topping markets nowadays don't really do the head and shoulders. They do flat tops, they do V tops and that type of thing because they crash really fast because of the ETFs and everything. So topping market condition is one where you really have to watch it, and then there's dark pools because it's gone below its fundamental levels in many stocks. So market participant groups, you need to learn why and how each of the 12 market participant groups affect price and volume. Each group has a distinctly different footprint on the stock chart. They're easy to learn, but you need to identify them. The size of the candlestick, where the candlestick forms, whether it has a wicks and or tails or not at all, tell you who controls price at that time. Within each group, the trading activity is very similar. So buy side all trade the same, sell side all trade the same, retail traders all trade the same, day traders trade all the same. You must understand the wide disparity between the groups in terms of venues. Are they trading the public lit exchanges or the dark pool ATS venues, or buying directly from the company? Buy side buy directly from the company all the time. That's why percentage of shares held by institutions is over 100% sometimes, because they haven't factored in those new outstanding shares. What order types do they use? The speed of their execution, millisecond or a minute. Access to information, everything that way they can get on the social medias and chat rooms and stuff, or no information. Lot sizes and intent of the trade. Over the past few years, the financial markets, especially the stock market, have fractured into a multi-venue structure that has never existed before. You have to learn it and understand it. And it's not hard to learn, but I'm it, folks. You got to learn what you need to know. TechnoTrader tools for consistently successful trading. Market condition analysis is cycle analysis. It's imperative that you learn this. Relational technical analysis. What I teach is not just technical analysis. You can learn that anywhere. And you have good technical foundation, but you need to learn relational technical analysis. Trade management planner, Howard made this, and it was just awesome. I'm going, our students need this. Our students need this. And he goes, I made it for me. And I said, Howard, this is brilliant. he logged out what was going to happen that month, how many trades to put on, how lot sizes, everything. And I'm going, you don't have to trade as much as you have to. You don't have to trade as much, students. It was amazing. It was mind-boggling. Students realized that if they focused better, they could trade less and make 2 to 3 times as much as they were making. You need your daily trading journal for yourself, but if you want to trade as a business under the IRS or European requirements for that, so that you can write off all of your expenses, MetaStock, all your courses, everything, even your webinars and all your time, then you need to have a documentation, and that's the trading journal. MetaStock trading software that includes scans and sorts, and of course I'm promoting my own scans and sorts. Hybrid leading indicators we have designed for MetaStock because they show things that no other indicators that are available publicly do. I do not give them out publicly because you have to have the education to use them. You have to understand what you're looking at, and that takes education. Controlled bracketed order types. Howard created a controlled bracketed order type. I came home one day and he's talking to a market maker from the New York Stock Exchange. His name was Herzog, and they're laughing and joking as if they're best friends. And I'm saying, who are you talking to? Who are you talking to? And he says, Herzog, the market maker from the New York Stock Exchange. And I'm going, I just like my jaw dropped to the floor. I said, you're not talking about. So I waited till he ended the conversation, and he's laughing. He's saying, yeah, that's great, that's great. I'm going, what did you do? He said, he loved my order. He thought it was fantastic. He wants to use us on his floors. I told him it was great. I'm going, oh. So that's what we teach, and we still teach it. And his bracketed order type is still used today by sell side. Buy side entry signals, sell short entry. There are buy entry signals and sell short entry signals that you need to learn that are not in the candlestick books or any of the candlesticks that you've learned. They're brand new ones. Exit signals are trailing profit stops or taking profits. If you don't think that stop losses don't work, it's because you're using percentages. Please don't. Please don't. Everybody sees your orders. You have to place them just like the pros do, just where the pros do, and then they will work. Run gain potential. Calculation, do you even know what that is? It tells you how far the stock can run in a high probability. So you know how many points risk, gain, and potential. You need your trade calculators. We provide a trade calculator that provides accurate risk analysis, stop loss placement for you, entry price you should use, share lot size you should use, price range you should use, risk factors, profit to risk ratio, estimated hold time, and where you should exit. Simple, easy, step by step. So this is what you get. So these are trading stands that I made for all my students. They come in MetaStock, and you can check one out, and then you can see all the stocks that we are talking about. We have all kinds of communities and chat rooms that are private. So that comes with it. So your resources, you need a professional trading style journal if you are going to be trading as a business. Your personal trade management planner, if you don't have one and you don't become a student, you have to create one. The trade calculators that Howard created are provided for my students. You need trade calculators because a lot of times you lose money because you make mistakes. Scans, sorts, layouts, and parameters, you need to have them set up so that you can just click through really fast. I can go through 100 charts in seconds because I've trained my eyes, and that's what I train my students to, pattern recognition skills. Trade simulator, you must have a simulator, not a game simulator. This is serious. Trading simulators are something you will always use, always, always, always. I have a trade simulator, okay? I use it to test things, to see what's going to happen. And it is a safe way to practice and test and build your confidence. Confidence comes from making money. You can talk to yourself in the mirror all day long to tell yourself, you have confidence, you're a good trader. It doesn't work. The only thing that really works is making money consistently. Then you are very confident. Market condition analysis scans that we provide with our courses, controlled bracketed order, which is taught and given to you in our courses, morning market reports and market condition reports you receive as you're starting your student courses, daily market educator and discussion groups. You get your daily market educator at a certain point in your education. Start that, it becomes a subscription later. And we have communities within the TechniTrader student only campus. And you get to talk to professionals who are making money. because they're my students. So you get to have all these pros and you get to see what they're doing and going on. We have tutoring one-on-one. We have coaching one-on-one for new students and answer all of your questions as quickly as we can. So we're your one-stop thing, and we have the best support, bar none. Just ask any student. They will tell you that it's just. So we have TechnoTrader charting tools embedded into MetaStock for market analysis and trading styles. And we have leading indicators in MetaStock. MetaStock and TechnoTrader are a partnership that build your capital, that help you grow, build your profit. And well, like one student came to me and said, Martha, I have made so much money. I want to set aside for my financial future for all of my children, my grandchildren. And he says, should I do a hedge fund? I said, no, you should do a family fund. And then each one of those groups can have their own individual financial security. And you will have financial security for all future generations. And he goes, oh, this is so cool. I have never, ever in my life thought that I could do this. He says, I am so excited. And he says, I just can't thank you enough. And that brings tears to my eyes because this is why I do this in retirement. I could go out, golf or have fun, travel the world, but it's meaningless. This is my legacy. Join my legacy and make one of your own. We have something very special today. I'm trying something that I haven't tried before. And this is you can get your phone or Jeff, if you can type that in for me. That would be great.
I can.
Thank you. This is a limited time offer. You don't know the value of my education, no matter how much I tell you in these webinars. I can't express it. My students, after they take the course, and I get it every time, they can fill out a form and say, how do you rate it? 5 out of 5, 5, 5, 5, 5. Everybody loves it. They say, I never realized how much I didn't know until I started taking your course. You just don't know what I have. Your foundation is there. You've already learned a lot, and you'll learn more this week, and it's fabulous. But there's a big hole missing. So you get this for free. You get to start the Methodologies Essentials Premier Edition trial. You get to start your course for free. You have 24 hours to sign up for it. And you get to start it for free. Okay? And this will give you free access for a week so that you can decide. If you decide that I'm it and what my support and everything and all the communities and everything are what are right for you, then give us a call or email us at info@technotrader.com or contact us via email or whatever you want to do, and we'll get you finishing that course. This course is worth way more than what I charge. I always wanted to make sure that everybody could afford it. So we have all kinds of things, but this is free. There's no strings attached. If you don't find it interesting or worthwhile for you, that's just fine. But I encourage all of you to consider it and join us and see what I'm talking about, because you can't tell the value. You just can't tell the value until you start taking it. All right, I'll take some questions.
I got a bunch. Bob wants to know, how can Bob states, I can find most per trader nudges, but most do not move. How can I use indicators like quiet accumulation to increase my odds?
You use quiet accumulation by understanding where dark pools are and how they're quietly accumulating, because I can outline it and show you on the chart where it is, and then you'll see it. After a while, you'll be able to pick it out, but it's so subtle. And what we are looking at is gray bars. We're looking at gray bars for quiet accumulation. If there's blasting quiet accumulation, red or green, then that means it's smaller funds managers. So it's small green or small gray are pros, all gray are the dark pools.
All right, Nicholas wants to know, did you say that corporations buy time weighted at price?
Yes, they do.
And he also said, did you say TWAP?
TWAP.
TWAP?
It's called a TWAP. And that's why we pros call it. They call it TWAP. FRB, Federal Reserve Bank. TWAP, VWAP, that's what they call them. Yeah.
Cool. Okay. And you would say that TWAP trades VWAP. I like the way I pronounced it better.
Yeah, okay.
All right. Nicholas had quite a few questions that he wanted to kind of see previous parts of the presentation. And Nicholas, what I'd say is you can go to youtube.com/metastock and you can watch and pause and replay the video as much as you want. Bob said, are we in an upward bull market?
We are in an upward bull market that's being tested right now because we have some unusual events going on that haven't happened before. I'm sure you read about them. The markets try to insulate themselves from the governments of the world, all around the world. Every stock market tries to do that. Ours is really superior at doing that. You have to understand that all the regulatory entities are not part of the government. They're totally separate. The FRB is totally separate from the government. The government may say, oh, you need to do this, you need to do that, but the FRB will do whatever it thinks is best. Okay.
So, oh, go ahead. Sorry.
Insulated. Yeah. Corporations are insulating themselves too.
Now, the free trial to the Essentials course, I believe we just did a podcast with you, Martha, and you said that was your favorite course ever.
Yes, that is my favorite course. It is. I have 53 courses now because I have my professionals say, oh, Martha, this, and then everybody was going, well, what about AI? So I did an AI one. And yeah, it's kind of fun. But this is my favorite because it builds that. People go, I just didn't know this stuff because I'm talking like I'm teaching a professional. I'm teaching you like I would teach a professional. That's what makes it so unique.
Awesome. We're done. That's all the questions.
Thanks.
I want to say thanks for everything, Martha. Thanks for kicking us off today. It's always good to have you.
Thanks.
And thanks for being here. All right, and then I'm going to go ahead and take over. All right, let me make me the presenter. And we'll go ahead and do this too. Right on. Okay, very good. All right. Thanks again, Martha, for that. We will be having quite a few guest speakers on today. A lot of them we've designed really, really cool methodologies for. And we do have a summit action pack that I'm going to introduce to you right now. It includes Rahul Arora's Velocity, Jeff Thompson's Price Action Pivots add-on, brand new add-on. So it's Velocity, by the way. Serge Berger's TST Trender, Dan Passarelli's Red Green Knockout System, the JBXC system, the Jake Bernstein Expansion Contraction System, Oscar Carboni's Trendlines and Training Toolkit, 3 months of Learn MetaStock Premium, and then Unleash Your Power MetaStock. All these add-ons have been great. They've been very, very well received. And the retail value on that is $9,064 if you bought them all at retail price individually. You can go up to our website and do that if you want. We will be running a special promo on all of the add-ons that our guests are featuring today, and you can get it for $3,950. So to do that, you had to give us a call, 800-882-3040. You had to go to metastock.com/saleschat. As we move on to our next speaker, I just want to say thank you to one of our sponsors, Stocks and Commodities Magazine. Stocks and Commodities Magazine has been sponsoring this event since we started doing it 15 years ago, maybe. Like, we've been doing it for a long time. They do a great job. They've always been great sponsors of us. 17,000 articles. They've been publishing a physical magazine since 1982. 1.3 million subscribers. I love Stocks and Commodities because it comes in the mail and it's my reminder to kind of look at some new techniques, some new strategies, and every month it's going to deliver kind of quite a bit of information in the magazine. So there is a free issue that's available. It should have been presented to you when you registered. If you want to get the free issue and you haven't registered yet, maybe you're watching this on YouTube, go to metastock.com/traders-summit. All of the speakers today, including and the sponsors, including Stocks and Commodities, are offering a free bonus. metastock.com/traders-summit to go ahead and get that. So again, we're MetaStock. MetaStock's been rated the best software in its price category 32 years straight, including this year, by the way. We'll talk a lot about how it can help you scan markets, test trading ideas, get forecasts for probable price activity, get real-time alerts, signal commentary. 32 years in a row, it's been rated #1. You can buy a month, get the second and third month for free. You can do that at metastock.com/summit deal, metastock.com/sales chat, or give us a call, 800-882-3040. Our next guest is another good friend of mine, Serge Berger. Serge has been a partner of MetaStock for a number of years now, and just love how well he comes in, can explain what he's talking about, what he's looking for. When he says something, I generally tend to understand it, which is always a big plus when you're trying to learn some new techniques. Serge does a great job. I want to welcome him in today. Serge, how you doing?
Hey, Jeffrey, can you hear me okay?
Yep, I can hear you great.
Sorry, man. 1 second. I was just fumbling around my camera here and everything. 1 second.
No worries.
Sure.
Take it.
All up and running. Here we are.
We're getting the
hello.
All right.
Here you are.
I'm gonna go ahead and make you the presenter right now.
Yeah, I appreciate it. It's how are things, man? Happy Monday.
Oh, thank you. Things are going great. How is your? Are you enjoying your summer so far?
Yeah, it's warm here. That's why I'm rocking the golf shirt. It's just warm, you know. It's
yeah.
But it is what it is. It's summer, you know, so markets are a bit choppy, but I think there's actually a lot of opportunity here if you just know where to look. So we're going to cover that here a bit today.
Cool.
So am I okay to get started here?
Yeah, I'll get out of the way. It's your turn. Go.
Thanks, Jeffrey. I appreciate it. Well, good morning, everybody. Happy Monday. I'm going to turn this camera off here in just a second. I just want to make sure, trying to make sure you guys know that I'm actually here. I'll turn it back on just for good measure a bit later on. But we are here. You know, it's a pretty interesting Monday morning. We had a triple witching options expiration day on Friday, and so today we're actually seeing a pretty big move. I know this is, you know, sometimes not something that the equity market folks look at, but 2-year bond yields are on the verge of breaking, you know, towards sort of where the lows are where we were early in the month. And so that's something I'm watching. That basically would mean getting long bonds on the short end, right? It's important. We're not quite there yet, but something I was just talking about to another hedge fund. So that's something that we're watching. But other than that, you know, it's just, this remains a momentum market, and that's what I'd like to spend a bit of time on today with you guys. Can you all hear me okay? Just I know Jeffrey could, but you guys can just give us a quick yes in the questions box as well to make sure. And I think this is also being telegraphed on YouTube, so or streamed on YouTube. So if you guys can hear me, that would be awesome. Just to quickly confirm, but I'm going to say let's get started. And again, I'm going to turn my camera off here. Just it's more just so I don't distract myself. That's, in fact, that's the only reason. So I'll put it back on a bit later on, little later on. So, you know, basically, when we look at this market here, we look at a very momentum-driven market. And so, through the course of my career, I've been fortunate enough to see different kind of markets, you know, from bull markets, bear markets, choppy markets, trending markets, the opposite of that, momentum markets, which is actually what we're seeing now. And I think it's just important to understand, you know, what is a momentum market, and how to take advantage of that. And I've got a whole bunch of examples I can give you. I would love to have some ticker symbols that you guys might be looking for. We'll do that here in a bit, but let's first go through kind of explaining what momentum is, and then we're going to use our trender indicator, which I'll be more than happy to give all of you guys access to that want to later on as well. So we'll talk about that a little later on. But just quickly, risk disclaimer, this is important. You know, everything we talk about here today is really just educational. None of this is meant to be advice in any shape or form. So please do keep that in mind. Also, trading and investing carries a lot of risks. So again, just please make sure you get educated. Of course, that's what this is all about. And again, I can't speak enough about how important that is. But, you know, markets are constantly changing, and, you know, I see a lot of people particularly people that are new to the market or have only seen one type of market, they really do believe that there's a sort of, you know, unicorn a magical unicorn dust thing that just they can use any day, all day, whenever they want, and it'll always work. And that's just, I'm going to tell you right now, that's just simply not going to, that's not going to be true. So, you know, there will be markets that are momentum driven, there'll be markets that are trending driven, and that is going to require a different tool. Now, I also don't think one needs to have 1,000 different tools when it comes to the markets, but at least a couple of them, you know, to make sure that that you keep taking advantage of either trending markets or momentum markets, or quite frankly, maybe even boring markets. So those are sort of the three kind of markets that we tend to have. But when we look at the markets these days, you know, markets are constantly changing, and as they evolve, we as market participants would be wise to adapt. And of course, the advent of automated trading, now they use a fancier term called AI, right? Artificial intelligence. It's essentially the rise of the machines, and it has a large focus on a simple strategy definitionally that has to do with momentum. You know, if you see stocks, you know, that make headlines that everyone's talking about, that you read about in your Reddit boards, and you know, CNBC can't go one commercial break without explaining that one same ticker. Those tend to be momentum stocks, and they're very, you know, algorithmically driven. They usually end up blowing up at some point in a big way, but while they have momentum, they can have really, really big momentum bursts. And that is currently, or has been, I should actually take that back, that has been largely a focus in the technology sector. If you think about stocks like over the course of time, Nvidia and Microsoft and Netflix, of course, and Palantir, and we can, you know, we could rattle down names for 15 minutes and you would all recognize them. And those largely have been momentum names. And a lot of those names are typically driven by, again, in the most part, or for the most part, by algorithmically driven trading firms. That could be hedge funds, it could be, you know, a large family office, it could even be a private pool of capital somewhere. You know, there's a whole lot of different players in that space. But right now, we've seen a lot of momentum in the technology stocks over years, but we actually think that momentum is going to change into other parts of the market, particularly energy and material stocks. And we've already seen some of that. I can give you guys some examples in some of the uranium and stuff like that. That's starting to have a big move. But before we kind of go into this, let's just quickly put a definition around momentum. And I just want to make sure everyone is aware that this here is now my definition as it relates to the markets. The definition here when it comes to physics is just that. It's a physics definition. So if anyone here is an engineering person or someone that's a bit more detail oriented, you might be interested in what is momentum definitionally in the physical world around us. So it's basically P, that's momentum, equals M times V. So M is mass, V is velocity. So if you think about this in the real world, you can apply this formula. Again, P equals M times V, which is basically the mass times the velocity of a car, let's say, will give you its momentum. If we think about this a bit more in simplistic terms, which is what I like to do, I like to look at the momentum in the market as being something that is related to the acceleration of a stock. Think about this car here. This car might have been cruising along the road for, you know, 45 miles an hour, and then it decided to turn onto the highway and it sped up to, let's say, 75 miles an hour. So my definition as far as the markets are concerned of momentum is that acceleration from 45 miles an hour to 75 miles an hour as it relates to the example of this car. It's that acceleration which is where the momentum comes in, and where there's a lot of money to be made. And that acceleration is typically, in this day and age, not driven by one or two investors, but mostly by algorithms that are picking something up. Maybe they're picking up a big investor doing something, and then they basically move the market. So that is what I think about momentum. Now, the one thing that's really important to understand, or one of the things that's important to understand about momentum, is that momentum tends to be fleeting, meaning it's essentially temporary. It doesn't last. It's not a trend. There's a big difference, and I'll show you this on the next chart. There's a big difference between momentum and trend. And a lot of people make the mistake of not differentiating between trend and momentum, and then end up actually losing money in an otherwise perfectly sound investing or trading strategy because they are not willing to differentiate between those two, and they are very, very different. So momentum comes and goes. Again, it's like, it's, as I said, it's if the car is driving along at 45 miles an hour, speeds up to 75 as it pulls onto the highway, then that is obviously not a permanent state. It's not going to continue accelerating at that rate. Otherwise, at some point, it'll be taking off into the sky, into orbit, and who knows where. So that's not what that is, right? It's momentum comes and goes, and that's why it's the perfect scenario for traders. So if you are here today on this Monday morning, I might add, so first of all, thanks for being here. But secondly, if you are here and you consider yourself to be at least at times a trader, what you really are looking for, directionally speaking, if you are a directional trader, and most people are, you're looking for momentum. You're not looking for trend. There's a huge difference here. So again, momentum comes and goes. It can be violent, and it's not a constant. That's really, really important. And so particularly for those of you guys here that might even be using options or futures or just leverage of any type, or just stocks, right? Or levered ETFs or anything like that, what you're looking for is momentum. That's what you're looking for, which is not to be confused with trend. So what you're looking at here is a long-term chart of a stock. And when I say long-term, it's, a year and a half, 2 years. That's not very long, but let's call that long-term. For some people, that's an eternity. And what you're looking at here is two things. Again, it's the trend, which is the long-term thing, and then it's the momentum. So again, you could think about this like the car that we talked about before, which might have been steadily driving faster over time, but then slowed down for a while and then re-accelerated and then went back on its trend. So again, it's not a perfect example, but it gives you the idea that trend, and trend being the big long arrow, and momentum are not the same thing. As a trader, what I really want to focus on is momentum. Trends are great to hold, buy the dip, trend following, blah, blah, blah. But momentum is where the real money is being made when it comes to trading, particularly for those people that are very directionally focused. And again, certainly for those people that use options or futures or any levered instrument. And so what we have found over the course of time is that the challenges with traditional momentum indicators are several. Number one, the traditional momentum indicators tend to be a little bit late, and thus can result in basically late entries and exits. And that, of course, can lead to frustration and false signals and losses, and it's just not fun. Traditional indicators typically also don't adapt very well to quicker market changes, which is important that an indicator can do that in our view, because momentum, again, it's fleeting. Momentum does not stay. It comes and it goes. And again, we're going to look at a whole bunch of stocks and futures or whatever you guys want to look at. Just give me some tickers afterwards, and we can do that. So what we're going to use here, and again, I'll be more than happy to give you guys a way to get access to this indicator afterwards as well. But our TST trend and momentum indicator, TST just stands for the steady trader, essentially detects the change in momentum or the arrival of momentum much quicker. So basically in real time, and it uses very specific parameters to provide accurate signals, gives us profit targets and stop losses as the signal prints right away. So there's no second guessing of what to do. And so the timely signals reduce the false positives by a lot. So that's what we're going to show you guys. So as we look at this here today, in just a minute, what you're going to see is there'll be buy signals or sell signals and profit targets along the way. So that's what we're going to show you guys here right now. So I'm going to say, without any further ado, let's get into it and show you what this looks like. I can show you even just what's happening literally just today, just to give you a little bit of an idea. We can look at this on daily charts, meaning the swing trades, but we can certainly also look at this on an intraday basis. So even just like, for example, today, right here, right now, what you can see is this is a 5-minute chart of Tesla. And so this is where the market opened this morning. It's Monday morning here, we're live. And you can see we got a buy signal. And so far, Tesla from that buy signal up about 7%. You could show you similar situation, or the exact same situation actually in like the NASDAQ 100. So the NASDAQ 100, we received a buy signal right there, then it reached its free profit target, right? And this all happens in real time, and there's trailing stops as well, and the SPY as well, for example, just to round this off, and then we'll look at the daily charts again, buy signal out of the gate, and boom, off to the races, right? So this is what it looks like when you have, that's not the right chart, when you have a real-time live momentum indicator that is truly looking for momentum, and you can see how quickly it picked it up this morning in Tesla. So again, that's an intraday chart, but what I thought we would do is we would open up the MetaStock platform, and let's just look at some daily charts, right? So daily charts means like daily time frames, and if you guys have some tickers you want to type in, please do so. I prepared a couple of them here just so I have something to talk about while you guys give us some ticker symbols. So if you have some tickers you want me to go through on the daily chart or intraday as well, please get them ready. So if all I did, let's say here, this is United Airlines. If all I did here is use the trender indicator on the daily chart on United Airlines, let's say since last September, you can see, and if all I did is went from signal to signal, so we have buy signals and we have sell signals, right? And I'm going to show you like a super easy way of using this indicator. It can be used, in more sophisticated ways, but I'm going to show you like if all we did. So let's just take this stock, and then I see you guys typing in some tickers, so that's awesome. We're going to look at some later as well, but let's say that's all we did is we took the buy signal and went from buy to sell signal. Now I will tell you that we have an initial free profit target, which is what we call the exit signal right there. That's typically where we take initial profit. So then we have a free position we can run with. But if all it did on United Airlines, let's say since September, is buy here and then get out of it when we had the sell signal, that's 130% right there. That's 130% that move. And then let's say we took that sell signal and we had the free profit target reached, and then didn't get out of it until we had the next buy signal. That's 27%. Okay, and now we're getting a new sell signal. By the way, we're just not actually. No, hold on. Then we had a buy signal there. That one made flat profits, so literally zero. It actually made money because we have the free profit target that's being reached. But again, I'm going to show you guys a super conservative way of using this, so I'm not overstating anything, right? I want to just give you the simple one here. So that's just on this one stock. So that's that. Let's look at Roblox. Let me just quickly, I'll just zoom in a bit closer just so we don't have to use too much of the data. Okay, so let's just zoom in a bit more. So let's say we just take the latest signals in the Roblox. So Roblox is a classic. This is Paul is asking about Roblox. So you can see this is a classic situation where you have a stock that is essentially a momentum stock. And you can see we received a buy signal, very quickly reached the free profit target. And so far, this stock is up about 72% since that. Again, if one were to be an options trader, let's say, I would simply buy a call option. I typically will buy like a call option that basically, let's say, expires no sooner than 55 days or so. That's me. I know a lot of people like to use very short dated options, but after 26 years of using options, you learn a lot. There's a lot of people that still have to learn some hard lessons with short dated options. But you certainly, if one wanted to use a very short dated option, one could. Just need to keep in mind that at some point, the Grim Reaper does show up on that. Then you can see we remain bullish currently Roblox from a momentum perspective. Now, obviously, the longer this trend continues, the less this momentum move continues, the less the longer it gets in the tooth. So the point is not to buy it here. The point was to buy when we got the actual signal in Roblox. Does that make sense, Paul? Right. So I should mention that, and this is always a bit annoying, but I have a different screen resolution on this one versus the other one. So I typically like to just kind of recenter. So I always have to kind of go back and forth. How about BOTZ? All right, so let's just look at this. And I'm going to bring this up again. It just needs to load, and then I have to recenter. So it's a bit of a pain, but we'll get there. So this is BOTZ, and just again the daily chart. So we received a buy signal on the 19th of April, and again then very quickly reached that free profit target. So that means we typically buy 2 of. So let's say we buy 2 at the money calls, or 2 shares of the stock, or 2 ETFs, whatever. And the trade is obviously still working. It's not yet a sell. So if all I did since February is used our momentum indicator, then you can see that we had a sell signal, right? And again, the free profit target got reached very quickly right there. So that would have meant I made basically on that free profit target. So I made my my sort of 6.5% or something, and then the rest of the trade basically made, if I literally went signal to signal, made about 13.7%. Okay, so if all of it is used momentum, right, I would have made, but it's actually, I mean, again, you can see because we use a free profit target, and the reason we use a free profit target is because if I buy, let's say, 2 put options or short 2 shares of stock or whatever in this case, if I get rid of half the position, then I'm in a position usually where I can no longer lose money, because we have a trailing stop embedded here as well. But just, I want to show you guys the super ultra conservative way of using this, which is literally just going from signal to signal. So if I bought puts here or went short, and then I took, half the profits here, and then I didn't get out of it until I got a buy signal, I still would have made 13% on that second leg and about 6 or 7 on the first. The latest trade, which is again has been on now since April, whatever, it's now still working, and so far it's up about 7%. Does that make sense? I'll try to get up to all of you guys with ticker symbols. I see some good ones coming in. So let me just, oh gosh, 1 second. I'm trying to rearrange the screen here before, so it doesn't automatically give me a weird screen resolution. So here we go. So let me just quickly show you some different time frames. I think it seems like people are kind of wanting, intraday time frames, so on and so forth. So with HIMS, which I see some people asking, so this is an intraday chart now. I'm just quickly changing back and forth. So we actually received a sell signal before the market opened this morning. And of course, the stock since then is down, about 28 and 29%. So that's on HIMS. This is purely momentum driven, right? You can see sell signal there, and then the stock ended up moving lower. So that's on the intraday that I wanted to show you. Can you look at uranium? Sure. So uranium is an ETF, I think is what the question is. I mean, there's obviously individual stocks. I'd be more than happy to share that with you as well. But let's say all I did is use the trender and momentum indicator since, let's say, February, right? So for most of the year on URA, the ETF. Well, if I would have then, let's say, bought a put here, I would have again reached a free profit target, and then I got a buy signal here. So I made about 13% on that second leg. The first one made 5 or 6, whatever, and then 13% on the second. Then we received a buy signal right there, and so far that trade is up 55%. So 13 plus 55, even I can do that math. You're looking at about 68% of gains on just 2 signals in uranium. So that's just an ETF. Now I can buy a call option, and and again, typically what we would do is we'd buy, let's say, 2 of, either 2 call options or 4 call options or 2 shares of stock or 4 shares of stock, whatever, right, in pairs of 2s, and then get rid of half of it at the free profit target, so we have a free trade. We can no longer lose money, and of course, you can kind of imagine what the profits would look like on that. Coin is another one, COIN. So that's Coinbase, I'm assuming is what you're looking at. We actually had a whole bunch of focus on this particular stock, so I can show you this one quickly. So this is Coinbase, is the ticker symbol COIN. This is the daily chart. So let's say if all I did is use momentum, so our momentum indicator on Coinbase, we had a false, well, it's not a false signal, it was a valid signal, but it didn't work on the 13th of February. So that one would have lost 8%. Okay. Then we immediately got a sell signal. That one reached its free profit target and ultimately got stopped out for a gain of 28%. So 28 minus 8 is 21% of gains. And then we got a buy signal on April 23rd, and so far the stock is up 52%. So 20 plus 52, that is 72% of gains, 3 signals since February. You guys like this so far? Give me a quick yes in the chat box if this is making sense to you. Right, all we're doing is trading momentum, but it's important to understand that momentum is a different thing than trend. I think a lot of people confuse those two things, and then they start getting married to something, right? Momentum is purely a trading technique. If you want to talk about trend, trend following requires a different parameter. Here we're talking about momentum. So these points in time, right? For example, this buy signal here or that sell signal there, this is where basically machines came into the market and bought. Now, it's not going to give you 100% accuracy. Nothing does. And if you find someone who tells you that, please report them because they're lying. But basically, it picks up what we know is a known thing that algorithms look for, right? Not every algorithm, but a lot of them have a basic parameter around this. And so what our momentum signals are based on is what we know is a good input into a lot of computer algorithms. And we know that's typically when they start buying and selling. So in this case, you can see that first one there didn't work. Now, it doesn't mean that there weren't momentum algos buying. It just means that they definitely changed their mind by the next day. So we lost 8% on that one, then made 28 on that second one. The signal did, I should say. Got to remain compliant here. And then the buy signal since April 23rd so far remains valid, right? There hasn't been a sell signal yet, so it's still long. And so far, that's up about 52% or thereabouts. Does that still make sense to you guys? Right? It's not difficult. It's just all we're doing is we're trying to respect when do the algorithms, which have all the money, by the way, when do they come in and when do they buy or when do they sell? That's all we're trying to do, is making sure that we have an accurate signal on momentum. CCJ, this is Cameco. This is a company that plays in the uranium space. So here you can see we had a buy signal. So that one too didn't work, that first one. So that one lost, let's call that 6%. I know it's a bit hard to see. So it's a bit less than that, but let's be conservative, right? So 6%. Then the next signal, again, all we're gonna do is go signal to signal. Again, it reached a free profit target, and then that one lost 1%. Okay, so I'm down 7% on 2 trades. And then we got a buy signal in April. And again, it reached a free profit target. So far, this signal is up 60%. So lost 1.5, lost, let's call it 6, that's 7.5. And this one made 60% or 61. So this 3 trades since March up about 54%. Could have just bought a call option, whatever, or a put option on the short side. So clearly this would have been quite powerful. We looked at Oracle before. I'm happy to look at it again if you guys would like. Sorry, Roblox, not Oracle. Where do I get Oracle from? Oh, because I was looking at another chart. So just quickly to reconfirm on Roblox, right? So let's say, let me just bring it over again. I've got these weird, monitor things here. So these are the signals we got in Roblox since February. So let's say all I did is use momentum. So I had a sell signal, reached a free profit target, and then got us out for a gain of about 6%. Okay, so let's call that, again, it's more than that, but let's just call it 6% because we made money in the first half too, but let's just be conservative. I want to just make sure. So this initial position made 6. Then we had a buy signal here that this one definitely lost money. This one lost about 4. Okay, so 6 minus 4 is 2. And then we had a buy signal. Oh, this one was flat profits, or maybe this one lost, let's say 2. Okay, so minus 4. So let's call that minus 2 in total. So 3 trades lost 2% in total. And then we got a buy signal on April 21st, which remains valid, and it's up 74, 76, 5%, whatever. So I guess plus 72% on 1, 2, 3, 4 trades. So if all I do is use momentum, you know, it can be very, very powerful, right? Someone was asking about the S&P 500 before. I'm happy to show you this again. I showed it before, but if you guys want to see this again, I'm happy to quickly share with you. So like the S&P 500 intraday here today, we received a buy signal, and then it actually reached its profit target. Let me just quickly show you this. So it reached a profit target, and now we have a trailing stop that it just reached. So this is the buy signal right out of the gate. As I know someone was asking about that before, so I wanted to show you that here real quick. Cool. Okay, next. And let's see here. I'm just making sure I'm capturing you guys' tickers as well. All right. Yoges wants, and I'm sorry if I'm butchering your name, is looking at a company called ADPT. Okay, I have no idea what that is, but here you go. So we received a buy signal on the 2nd of May. Okay, let me just quickly check. And that buy signal is so far, it remains valid, right? So there's no sell signal yet. So far, the stock is up about 7-8% since then. So this is a momentum move that's taking place now. So it continues to be valid, basically, according to our indicator, the momentum move, right? Does that make sense? ON, can you look at ON Semiconductors? Yes. Okay. So ON Semiconductors, let's just have a look at this one. Just go back a few months. So we've had basically 2 signals since December. So if all I did is use momentum, then we would have reached that free profit target very quickly, and then ultimately being short ON or would have bought puts, that trade, the signal made 40%. So again, that's this blue line that I'm drawing in here, 40%. That's this. And then the buy signal that we received on April 30th remains valid, and so far the stock's up 34. So 2 trades since December, 1 short, 1 long, a total of 40 plus 35, let's call that. Even I can do that math, it's 75% in 2 trades on ON. Speaking of ON, you know, I can also show you ON. This is a sneaker company. I don't know if you guys know, I have a friend of mine who's involved very closely with that company's involvement. So I will quickly show you that one if anyone wants to. So that's ON. This is the sneaker company. is here. So we had, going back to January, we had 3 signals. That buy signal reached a free profit target, then got stopped out for a gain of a loss of 3%. So that's probably a flat profits trade. Actually, probably made profits because the first profit target was higher. So the first profit target on these is usually about 6%. So we made 6 on the first half, and then made lost 3 on the second. So let's call that 3% between this buy on this buy signal. Then we had a sell signal. Again, if all we do is go from signal to signal, so sell to buy, then it's 18%. It says minus because the chart went down. So it's 18% plus 2, that's 20%. Then we had a buy signal, which made 12%. And now we have a new short signal. So if you're looking for something that's kind of new and still actionable, again, this is not meant to be a recommendation. It's purely educational. But this one's still there. So we said 20% plus 13, or let's call it 12 to be conservative. That's 23% of gains on this stock. And again, obviously could have bought a call option when it went long, or a put option when you go short. Same thing on futures, by the way. I use this on futures all the time, like every day, pretty much. And so right now, ONON still has a valid sell signal as well. Okay. All right. Very good. You guys getting the hang of this, right? It's all we're using is momentum, and momentum is a very, very powerful force in the market. So let's look at PayPal. This is Yo just wants to look at PayPal. So we've had 3 signals in PayPal since February. So we had that one signal. Again, it reaches the free profit target, so we take half profits. And again, if all I do is go from signal to signal, if that's all I do, and again, that's an oversimplification, but I'm trying to show you the most conservative possible way of using it. This would have made 14%, so I could have just bought a put option, right? Would have probably made, I don't know, 50% or something, or 100, I don't know, depending on how aggressive you are with put options. And then we had a buy signal, which made 4%, and we now have a new sell signal. So 18% on PayPal, 2 trades so far. Right, and this one, latest one, obviously hasn't done anything, so can't do any math on that one. That makes sense? Palantir, of course, yeah, that was going to come up at some point. So let's talk about Palantir. Let me quickly bring that one up. Can you guys see yourself using momentum as a strategy? Right, momentum is very, very powerful. It's just, it has to be understood that momentum is temporary. It doesn't last, right? Otherwise, you talk about trends, and trends and momentum are 2 very, very different things. So we need to make sure we don't mix those 2 things, right? That's very, very crucial in my view. So let's say all I did on Palantir. Okay, let's do the same math, right? If all I did, let's just use that sort of word verbiage. If all I did is use is on Palantir, use momentum, I would have gotten a buy signal back in August. That one made 134%. Then I had a sell signal. That one reached a free profit target and then ultimately lost about 17%. So again, you have to subtract about 6% of that because it reached a free, so 11%. Then we had a buy signal that made 10%, let's call that, again, just to be super conservative. Then we had a buy signal that reached a free profit target and then lost 15, so that's a minus 9%. And then we had a buy signal, and so far that one is up 52. So I'm just going to quickly do that math. And again, that's if all we did is use momentum. That's the only thing. If that's all we did is use momentum, it would be 134 plus minus, I think we said minus 10, so that's 124% plus let's call it 10 just to be conservative. We're not even going to count that. Plus or minus 9 plus 152, let's call it, or 50. So that's 175% of gains that the trender indicator did with just 1, 2, 3, 4, 5, 6, 7 trades since last August, right? Now, you can do more trades if you start going into lower time frames, daily, the 5-minute charts, 15-minute charts, you can knock yourself out. But 175% of gains, you know, in, what do I say, 1, 2, 3, 4, 6 trades, whatever it was, to me, that's solid, right? You guys, again, just give me some feedback if this is starting to make sense. What about, yeah, sure. What about like S&P 500? If all we did is use the trender indicator on the S&P 500, if that's all we did, let's assume that's the only thing we're doing, is using momentum on the S&P 500. Okay, it's just, let's say all year. Okay, let's just take the entire year. All right. So if all I did, then I would have made on that first trade reach actually, no, this one, yeah, so this one was flat. So we got a buy signal, then a sell signal. So free profit target reached and then lost one. So let's, whatever, it actually made money, but let's just say it made no money. And just, again, I'm trying to be super conservative. Then we had a sell signal, and let's say all we did is go to the next buy signal. So that's 7.8%, let's say. Okay. And then the latest buy signal so far is up about 8%. So if all I did this year is use the S&P 500 and use momentum, this signal would be up, let's call it 16%. The S&P is up about what, 3% on the year right now? So 3% versus actually 16%, literally 3 trades, right? All the craziness of March and April could, for the most part, be essentially, you know, a sideshow. Because momentum is a very, very powerful force in the market. Same thing in the NASDAQ 100, right? So maybe some of you guys look at the NASDAQ 100 as your thing. We can do the same math there. So let's just, again, let's take the year to date just to stay consistent. This is the QQQs. So we had a buy signal. And again, well, let's say this one, let's just be conservative. This one lost, let's say 2%, just to be really conservative. Then the next one, again, just going arrow to arrow, down arrow to buy arrow, made, what is that, 8, actually it's 9%. And then the trade so far, again, free profit target reached. So far, the NASDAQ is up another now 12%. So 12 plus 7, let's call that 19, 20% is what the NASDAQ 100 is, would have resulted. And again, we also at the bottom have this ribbon. You can see where it says it's bullish, bearish, and bullish. And again, that's through the lens of momentum, not to be mistaken with trend. The trend and momentum are two very, very different things. I'll give you a couple new ones here that might be interesting for some of you guys. We looked at one before, but a couple ones that are on my radar right now were, like, for example, Visa. So let's just zoom in a bit closer since this one's a new signal. So this is Visa here. And you can see we received a buy signal in Visa in April, free profit target reached. And if all we did is go from signal to signal, this trade made, let's call it, this one made 1%, the first half 6%. So let's call it 4%, right? I'm just trying to do it like this so you have a visual. And now we have a new sell signal. So now we actually have a new momentum sell signal in Visa. Same thing in MasterCard, by the way. And it just hit the other day. And it has not yet reached the free profit target. Otherwise, we'd have a little thing called exit there. So that's how that works. Now, just quickly, I promised for those people that mentioned it before, I promised I would be able to show you if you want to use the indicator again. You can use it on MetaStock. There's other platforms as well, but I'm going to quickly show you, and we can go back to Roblox if you guys want to afterwards. I see some commentary on that. For those people that want to trade momentum, what we like to use is, again, this is the TST trend and momentum indicator. And what it's really based on is essentially price and volume, but specifically what we're using it for is to detect what are some of the major players out there doing the major algorithms? And we know that a lot of people have, a lot of algorithms have very specific things they look for. And a major input that's across algorithms of many types is what we're using here as the input here for this. Okay, so so that's what we have here. Now, if you are new to MetaStock, you can use, or if you're not new, it doesn't matter. You can use the trender indicator on MetaStock. There's some other platforms as well. I can talk about that later. And so, you know, what we actually do is we give everyone access for just $397 for a full year. So with that, you get unrestricted access to the indicator. You can use a MetaStock and TradingView and a couple other platforms as well that we can, again, I'm happy to tell you that later. But I wanted to show it to you here today so you can see how user-friendly it is. And I know Jeff does a great job showing you how you can scan for these signals. It's super simple, and we do members webinars all the time, so we teach you exactly how to use it as well. So it's $397. It's 80% off. If you want to use the trender indicator, again, hopefully you can see how well it works. The link that you can use to go grab it here, this is a webinar special, so if you want to save a whole bunch of money, you may want to go grab it there. It's $397. You get a full year's access to the indicator. You get bonus strategies as well, and you obviously get access to the indicator both on the daily chart as well as intraday charts. So you can go hog wild using it on any time frame that you would like. As well, we do live monthly coaching sessions. There's one coming up here real soon again, where we teach you exactly how to use it if you have questions. And I know Jeff has a great team that can and resources to show you how to use it on MetaStock as well. So that's how all that works. You can use PayPal and credit cards, yes. So that's all there. Let me just quickly check a couple of questions here to make sure I'm not missing anything. If you have a question, you can always call, right? So the number there is MetaStock's number is 800-882-3040, and I'm sure they would be happy to talk to you if you have any questions on this further. The next coaching session is just coming up. Again, we do them every single month. They're always in the members area as well, so you don't have to ever worry about missing out on it. In fact, I can quickly show you what this looks like. We send out trade alerts as well on these ideas. So some of our favorite trades, we send out trade alerts as well on the daily charts. We can't send you intraday alerts because you'd go crazy getting those all the time. But this is what the members area looks like. You can the open trades will be in there, the educational materials, monthly member meetings. It's all there in there, so you know exactly where to access everything. Let's see here. So Robert has a question, and he is wondering. I'm quickly just trying to read your question, Robert. Yeah, so you're asking a very technical question in terms of the back testing of it all. What you're getting into, Robert, unfortunately, is a compliance problem on our end. We have gone through an extensive revisit of compliance, and what we are not able to do is go back and give people some sort of a data on all sorts of tickers and back testing forever and ever. It just no longer becomes compliant. I don't know if you guys heard of the past few years, the educational side of this business has had a lot of crackdown, so we cannot do that. What I can tell you is that's what I'm trying to show you is how it works here in real time, so you can see that I'm not making random stuff up. That's where we are limited to what we can do from a show and tell perspective. But yeah, it's a good question. Again, unfortunately, it bumps into a lot of compliance issues that we have to deal with these days. The Julia is asking, so this index is mostly a right side indicator for trading. I'm not quite sure what that means, but maybe if you could rephrase that question, then I'd be happy to address it. I don't know. Let's see here. Jeffrey, if you had any questions or if there's anything that comes to mind for you, or if you wanted to show this a little bit, I'm putting my camera back on the scanner, or if you're around, I don't know. Just wanted to quickly check in with you.
I'm taking notes. Pawan wants to know if you can use it with TradingView and MetaStock at the same on the same license.
For sure. You can use it on the same license. So I mean, like for example, I'm like, let me just go back to this so you can see. So you can see what this looks like. So look, for example, I'm trying to show you, how it works. Obviously, here's MetaStock, so you can see, for example, here again, this is Roblox. Just a lot of people ask for Roblox, and then at the same time, by the way, we're getting a sell signal now intraday. This is now on TradingView on a 5-minute chart. So if you guys want to take note, right? So just to give you an idea, so we had the buy signal this morning, then it reached a free profit target. Now then we had a trailing stop, and now we're getting a sell signal. So the profit target is 593 on SPY. It's a live SPY chart for those of you guys that are wondering. So yeah, you can use it side by side. There's what is it? The other thing is called Ninja Trader as well. It works there, and it works in Thinkorswim as well, I should say. So you can use it for execution purposes there and for analysis here or whatever. I mean, obviously everyone's got a bit of a different setup, but yeah, that's how that works. Good question.
Can you talk about your lunch sessions that you do a little bit?
The live sessions?
Yes, correct.
Yeah, we do the live sessions, and basically what the live session will look like is a little bit kind of like what we did here today, except it's, I go into great details of how to use the indicator for, both for on the intraday side and on the swing trading side. So I think we were before, didn't we look at let's just look at SPY, just so I can show you this here quickly. So this is the SPY on the daily chart, and it's just, again, it's just go back, let's say to January, February, whatever, so you can just kind of see this. So what we do when we teach in the sessions is to teach you exactly, because I showed you here like the most conservative way of using it, right? I'm trying to not oversell, but really show you the most conservative way of using it. So, just going short or buying a put when you have a sell signal, and then closing that and going long when you have a buy signal is like a crazy simple way of using it. You can get way more bang for your buck, if you will, but if all you do is that, it tends to really work very well as well. What we do in the members sessions is we go in and we really teach you how to use it with our trailing stop and stuff like that. So that's what we do in those sessions as well.
All right, 2 more questions. Do you have the indicator on TradeStation, Tastytrade, or Interactive Broker?
Neither. No,
okay.
we have it on MetaStock, we have it on Thinkorswim, we have it on TradingView, as I showed you there, and the indicator is also available on this Ninja Trader platform thing. So that's where they are. Yeah.
I will say also though, if you don't have those, we will throw in a free trial to our award-winning MetaStock program that's been rated #1 for 32 years in a row. So there you go. And
let's talk about the scanning functions of this if you want to, or you can maybe another time as well. I mean, because what MetaStock really does here is really it allows you to scan for this stuff really nicely, and actually you Jeff are very kind to work with me on that to scan for these symbols these signals, which is awesome, right?
Yeah, and I can take just a second to show how you would set that up. It's really easy to do. So okay, I'm going to take over then. Thank you.
Yeah, please do.
Very much, Serge.
I'm happy to stick around for questions if you want. I mean, it's
cool. Let's do this though. I'm going to go ahead and turn my microphone on. I'm going to go ahead and make me the presenter real quick. I'll show my screen. And it's just super easy. A couple things that I really, really like. I talk about this all the time. I run scans all the time in MetaStock. I've opened up our Power Console just to show you how this works. Right here, we've got a day trader mode. So if you're looking at intraday signals, you can run that, or you can use a swing if you want to find daily signals. Let me go ahead and run that. I want to point out with every version of MetaStock, you can run this scan at any time during the day and get a pretty up-to-date result, at least a 15 or 20 minute delay. So I'm going to go ahead and run that to kind of just show you for the purposes of making this super easy. I'm going to run a really small list just so it'll come back real quick. I'm going to run the NASDAQ 100 and we'll see if we have anything. Okay, so I just select the scan that I want to run. I select the scan. You go ahead and click on Start Exploration, and it's very, very quickly going to run through and kind of identify any of the stocks that have an actual signal for today. You can kind of see how fast it's going through. It's almost done, and that quickly I can see that Tesla had a long this morning, or at some point today. I shouldn't say this morning because it's up to about.
Oh gosh, it did, man. It was an unbelievable run right out of the gate, and it just nailed it.
Let's open it up. I'll take a look.
Yeah, 5-minute chart.
I'm going to go ahead and open this up. And what I'm going to do is I'm actually going to apply the template too. Tesla's been going a little bit crazy today. A little bit of a news-driven announcement. If you haven't been watching, I think they launched cyber taxis in Texas. So, but what I want to do is I'm going to put that TST swing on here. Okay, go ahead and click Apply. And here you can see where you would have got your initial buy signal. Here you had a sell. Here you had a buy signal. If I wanted to get a little bit more information about that, all I had to do is click into this commentary right here. It's going to say, okay, you're currently long. I'll zoom in on this a little bit. Here's your initial profit target, your stop loss. Really kind of lays it all out for you. So did that quickly. We're able to scan through 100 stocks. Found one that's been moving pretty good today. There you go. Yogs wants to know if we can definitely give you a call, Yogs. Yeah, definitely. All right, let me kind of recap what this is. Serge, thank you very much for coming in here today. So let me go ahead and jump into this. With it, you're going to get all the indicators you need to run it. I love the fact that you can go in and customize this. You can kind of add your own parameters. There's a lot of things that you can custom with it. You have the day trade and the swings. Those are custom presets that are already pre-built for you. And of course, the scanning, we just did that. We only did 100 stocks, but you can scan whatever you want, whatever instruments you want, whatever countries you want. And it runs fairly quickly, helps you identify. What I like to do when I'm trading is I want to be able to skip all the stocks that aren't hitting an opportunity and just focus on the ones that do. I love that about MetaStock. So you can scan for intraday trades, you can scan for day trades, and you can scan for any custom setups you've got. You do have the ability to test this. There was a question about testing here earlier. There is a tester in the program that'll allow you to test and see exactly how well it works on whatever instruments you're interested in. The expert advisor is going to give you those targets, the stop loss, clear, straightforward instructions to kind of give you everything you need. Just a great integration. So your commentary, again, that's going to include the stop losses, the profit targets, the trailing stops, all that kind of stuff. As part of your purchase, you're going to get 12 minutes access to the education, the trade alerts, the risk management plan, step-by-step tutorials. You'll get a live bootcamp that we sat down and recorded here with Serge. When we initially released this, it's available for you. It's an instant access download. You get the live monthly coaching sessions, all of that kind of stuff's included. And this is actually August 23rd is when we release this. And so these sessions have been done, they've been recorded, and they're ready, available as soon as you actually get in there. So normally it's $19.97. At the conference today, at the summit we're doing today, you can get it for $397. To do that, give us a call, 800-882-3040. metastock.com/saleschat or metastock.com/trender. Yogs, I will kind of pull you up here and have somebody give you a call. They'll be happy to talk to you too. So if you have any questions, if you're interested, give us a call, 800-882-3040. This will be part of our big Traders Action package, where you're going to get the brand new velocity, the price action pivots, which Jeff's going to talk about just here in just a second. You'll get Trender, you get Red Green Knockout by Dan Passarelli. the JBXC Complete. All of those are great. You'll get some training from Oscar Carboni on how to mark up your charts and how to find support and resistance levels. 3 months of Learn MetaStock, Unleash the Power of MetaStock workbook and CD. Normally all this stuff would be $9,000, but we've got a kind of a summer special right now, $3,950 if you want to get it all together. To do that, give us a call, 800-882-3040 or metastock.com/saleschat. So as we move on, I want to say thank you to one of our sponsors, the Traders Forum. If you haven't yet, just go to thetradersforum.com, sign up for a free account there. You can join us for market chat. We'll learn about technical analysis. It's a free membership, thetradersforum.com. Our next guest is another friend of mine, Jeff Tompkins. Jeff, initially, when we started working with him, it's been, I think, about 8 years now. He had taught a lot of people how to trade on a platform called Udemy. In the time that I've known Jeff, he's absolutely blown up. He manages a hedge fund now, really does a lot in terms of the training and the stuff that he does, the stuff that he participates. Has an awesome first name, obviously, but also like just when he speaks, it's very, very clear, very easy to understand, very concise. I think you're going to like him. So without further ado, Jeff, let's go ahead and get you started.
Great. Thank you so much, Jeff.
Cool. I can hear you, which was a concern we had until about 5 minutes ago. Let me go ahead and make you the presenter right now. Okay.
Great. You should see my screen.
I can see it. I can hear you. I'm going to get out of the way. It's your turn.
Sounds good. Well, thanks again, Jeff, and welcome everybody. Great to have all of you here today. So we'll go ahead and dive in. We're going to be talking about price action pivots and how to forecast trend direction. Before we do that, I'll just go through a quick disclaimer with you. Trading securities and options involves risk. Prior to buying or selling an option, an investor must receive a copy of characteristics and risks of standardized options, and of course need a broker to trade securities and options and must meet suitability requirements. Any results that we do cover in our session today are not necessarily indicative of future performance. They may be based on actual trades or hypothetical results, but due to the time-critical nature of trading, brokerage fees, activity of other traders, we don't guarantee that anyone will mirror the performance what I share. All right. So by the end of our session today, we'll spend about an hour together. You're going to discover how to use price action pivots to spot turning points in the markets. This valuable information can be used to forecast market trends before they occur. So we're going to throw all the lagging components of trading out the window. Most indicators are lagging. Most of us know that. And so we're going to eliminate all the lag today. So whether you're just starting out or you're a seasoned veteran, this is must-have information for today's markets. So I'll just give you a brief background on myself if you're not familiar with me. I'm Jeff Tompkins. Again, great to have all of you here today. I have over 2 decades of experience trading the stock, options, and futures markets. I received my professional training as an intern at the trade desk at Morgan Stanley back in the early 2000s. And about 10 years ago, founded Altos Trading, where I'm the chief investment strategist. We've rapidly grown to over 60,000 members in over 100 countries across the globe. As Jeff mentioned, I'm also a hedge fund manager, so I manage money for my clients at Altos Capital. And in fact, price action pivots are one of the core methodologies that I implement inside my hedge fund. And I'm also the creator and developer of the price action pivot indicator, which we'll be talking about on our session today as well. So let's dive in. There's a few things we need to know when we're making trading or investment decisions. All right, so we'll kind of start high level and then gradually dig deeper, but we obviously need to know when to buy, when to sell, and maybe even more importantly, when to stay out of the market. Okay, so when we're placing directional trades, right? That's really the purpose of trading versus buy and hold investing, right? Is to gain that edge in terms of market exposure. When do we actually want to be in the market, have exposure to a risk and opportunity, and when do we want to stay out? Okay, so we're going to look at that, and we'll talk about how and why periodicity highs and lows provide crucial trend and reversal forecasts. So everything that we'll look at today is entirely fractal. It can be applied to any asset class. It can be applied to your favorite stock, ETF, futures market, FOREX pair, cryptocurrency, as well as any time frame. Okay, so we'll look at how to identify when markets are likely to reverse trend. This can completely turn your trading around by itself because number of things, right? When you get into a successful directional trade, there's always the question in the back of your mind, when is the trend going to reverse? That's often the unknown and the fear that we face in terms of whether a successful trade, ends up, moving against us, and we watch our profits evaporate or even turn into a loss. So we'll focus on how to mitigate that. How to identify key supply and demand points. Okay, so like all markets, right? Financial markets are based on supply and demand, buying and selling pressure, and price action pivots can help us accurately identify those shifts in supply and demand. And we'll also look at how to set accurate entry, stop loss, and take profit levels. So again, kind of a core necessity of all trading methodologies, right? You have to know when you're going to get in, how you're going to define your risk, and where you're going to take profits. Okay, so that'll all be explained and laid out for you in our session today. So as market trends prepare to reverse course, okay, we have this shift in supply and demand, and there are actually clues within the price action or the candlestick patterns to future directional movement. Okay, and we're going to use a 5 candlestick pattern. And I say minimum in parentheses because there are some less common exceptions to that, and I'll explain what those are. But typically it's going to be a 5 candlestick pattern to identify when these trend changes are likely to occur. And once the pattern is completed, we'll have a blueprint for forecasting directional trend. And again, without any lagging component. So, throw your MACDs, your stochastics, your RSIs out the window. We don't need any of that. This is all based on pure price action. And they only require a basic candlestick or OHLC chart. That's open, high, low, close chart. So you really just need a very clean chart. You don't need a bunch of indicators added to your chart. And we're going to be tracking changes in candlestick highs for short setups and candlestick lows for long setups over 5 candlestick periods. And again, minimum, and I'll explain why that there might be some exceptions to that. Now, price action pivots can predict market shifts and quite accurately. This method can be applied on any retail trading or charting platform and can pinpoint turning points in a security with astounding accuracy. So we're going to get into the MetaStock platform here in just a second, and I'll demonstrate that. But because it's a common question when you learn a new strategy or system or indicator, what does this work on? What can I use it for? Well, as I mentioned previously, you can apply this to any asset class, equities, ETFs, futures, Forex, any time frame, whether you're trading off a tick chart, a daily chart, weekly chart, monthly chart. The same methodology applies. Okay. So let's go ahead and dive in. We'll go over to some charts in the MetaStock platform, and I will walk you through the price action pivot methodology. So hopefully you can see my chart here, and let me get my drawing tool up, and we'll just use a daily chart of the S&P 500 ETF, the SPY. Okay, and let me actually also zoom in a little bit here to make it a bit easier. And if anybody has any trouble seeing anything, any audio visual issues, just please let me know, but I'll do my best to make this visible to everybody. Okay, so again, we're looking at a daily chart of the S&P 500 ETF, the SPY, and we'll start with one second, let me get the pen back here. We'll start with a bearish price action pivot. So we'll look at both, and essentially just the opposite rules apply. But we'll start with a bearish price action pivot, and then we'll give some examples of bullish price action pivots. And they're all over the place on this chart. So once you understand the methodology, you'll be able to spot these on your own. But there are a few rules we need to go through. There are different kind of approaches or methodologies for pivots. So pivots aren't a new thing. They've been around a long time, and ultimately the idea behind them is to spot shifts in supply and demand or buying and selling pressure, and therefore a change in trend or directional movement. But again, there are different approaches, and I've done a lot of research on the different kind of methods or approaches to identifying pivots using price action. Okay, and I'll share with you the one that I've found to be most reliable in terms of forecasting with with a degree of advanced notice, right? And only using price action, not lagging data. Most indicators, as I mentioned, if you look at like an RSI or a MACD, they'll use what's called a period, right, setting. So they'll often use like a 14 period or 21 period setting. Well, that's essentially telling you it's lagging by, potentially weeks if you're applying it to a daily chart. Okay, so we're not going to incorporate any lag here. So again, we'll start with a bearish price action pivot. And actually, let me just zoom in a little bit more here. Okay, and we'll go back to February, which is the previous all-time high in the S&Ps. There's a very obvious bearish price action pivot here. And so we'll look at the steps. So the first thing you want to identify is the prior price action. So let's just say that we are focused on February 19th. So this was, again, the previous all-time high in the S&Ps. Okay, so we'll just kind of, hop in our time machine, go back to February 19th, and then we'll look at what was occurring prior to that day. And that was the S&Ps. Well, obviously they were in a fairly tight channel or range, so we were just kind of oscillating back and forth here. If we look at the daily candles, and we'll just maybe look, 4 or 5 days back, what do we see occurring? Well, we see that the let me change the pen color, make that a little more clear for you. Let's see here. Let's go with blue. Okay. All right, so what do we see? We see a series of higher lows and higher highs. Okay, and there were some bearish days where we had closes below the open. There were some bullish days, closes above the open. That's not important. We just want to see that there, in this case, was a prior uptrend. So buyers were outpacing sellers, right? There was more demand than supply. Now, eventually, like all markets, supply-demand curves shift, right? So there's a shift in buyers and sellers, and when sellers eventually outpace buyers, right, that will cause price to rotate lower. Okay, but for the time being, going up to February 19th, we see that the S&Ps are putting in new highs. Now, for a bearish price action pivot, we're not concerned so much with the lows. Okay, in fact, in this case, prior to February 19th, we actually put in a lower low, but we still had a higher high. So for a bearish price action pivot, we're only concerned with the highs of the candle. Okay, so let me just kind of clean this up a little bit. All right, so we're tracking the highs. We see that we're putting in higher highs. We put in another higher high on February 19th. Now, when we go to the next trading session, the next day on February 20th, we notice something changes. We put in a lower high. Okay. Now again, you don't need to be concerned with the intraday price action and where we close relative to the open. In this case, it was a bearish close, but only that we put in a lower high. So this tells us that now the supply demand curve is shifting, right? We didn't have enough buyers to come in and put in another higher high. Okay, so this is where we want to start paying attention. Okay, this isn't yet enough confirmation to tell us that sellers are going to take control, but it's our first clue. Okay. So then we go to the next trading day. And what do we see? We put in another lower high. Okay. So just to quickly recap, we need a prior, for a bearish price action pivot, we need a prior uptrend where we're making a series of higher highs. We then need that supply demand curve to shift and a lower high to be put in. That then needs to be followed up with confirmation of another lower high. And that's what occurred. So this is, although we backed up a little further here just for context, right, to identify that we've been in a prior uptrend. In this case, it was for about a week. That could have been any period of time. For the price action pivot setup, what we need are a bearish price action pivot setup. We need 2 lower highs to the left of the pivot candle and 2 lower highs to the right of the pivot candle. So for this example, remember, we don't know this has occurred yet, okay, on February 19th. So that's the day that we traveled back to. We don't know this has occurred. All we know is we put in another higher high. And then on February 20th, that's the day everything changed. And we put in a lower high. So this is where we start our candlestick count. Clear that out. Okay. So on February 20th, okay, at that point in time, this is merely our potential pivot candle right here. That's our potential pivot. So then we'll go back and we'll say, okay, we previously had lower highs. Okay, so that'll be candle 1. This will be candlestick 2. This is our potential pivot. And then on February 20th, we have a lower high. That'll be, or sorry, let me redo that. That's supposed to be candlestick 4. Clear that. Okay, so this is 1, 2, potential pivot, candlestick 4. And then on the following trading day, we have another lower high. That's candlestick 5. Now I want to, although it's not the case in this example, I want to point something out. This candlestick 5, the high of that day, of that trading session, could have been higher than candlestick 4, and that would still qualify. It just has to be lower than the potential pivot candle, which again is this candle right here. Okay. So there's some kind of different nuances that, and we'll look at some more examples, but this was kind of a picture perfect bearish price action pivot. But candlestick 5, the high of that candle could have been higher than 4. It just needs to be lower than the potential pivot. So now we have a confirmed bearish price action pivot setup. Okay, and there's our 5 candlesticks. So this now becomes our confirmed pivot candle on February 19th. Okay. Now, that's great, but what do we do with that information? How do we, actually trade this? So we'll talk about entry, defining risk, stop placement, and profit targets. Right. So typically what I'll do here is if I'm going to initiate a bearish position, I might be, shorting the SPY or maybe buying a put option or a vertical put debit spread. A number of ways this could be traded. My triggered entry is going to be, in the case of a bearish price action pivot, below the low of the entire 5 candlestick pattern. Okay, so that's going to be just below the low of candlestick number 5. Now that might not always be the case. It's possible that candlestick 1 could have been the low. Okay, but I'm just going to take the low in the pattern. In that case, in this case, that is candlestick number 5. Okay, and I'll if you're just kind of using more intuition or eyeballing this, you know, you can just kind of go a little bit below the candle, maybe a few ticks below the low of that candle. Okay, that's going to be our entry. Now, the reason I use this approach rather than just jumping right in and shorting the SPY is I want to see some follow through, some confirmation. Okay, and in this case, we got that in the very next trading session. Okay, we'd follow through, and then we get a big sell-off. In terms of defining risk, okay, so stock placement. The most kind of conservative approach is just to place your stop above the high of the pivot candle in the case of a bearish price action pivot setup. Okay, so you can just go, a few ticks above the high of the pivot candle. You can also use highs inside the 5 candlestick pattern. So if you want to tighten up your stop, you can go above the high of candlestick 5 or candlestick 4. So there's some discretion there if you prefer to do that, but typically I'll just go above the high of the pivot candle. Okay, that's our defined risk. Okay, so entry down here, stop up here. Okay, and I'll just, I'm not gonna spend the time to calculate exact ticks, but I'll just kind of eyeball this. So let's talk about profit targets. Okay, so we've got roughly, I don't know, what would this be? Maybe 10, 15 points roughly, okay, of between entry and stop. So I look for a 1-to-1 risk reward initially with this setup, okay? And that's not arbitrary. It's based on a lot of research, time, experience using this setup and looking at trade expectancy, meaning how often is this setup successful relative to the risk reward that you're taking. And 1-to-1 tends to produce a nice positive expectancy over time. You'll notice that a lot of these go on to make much more significant directional moves. I mean, in this example, that was obviously the case. So when I say initially that's my profit target, I'll often scale out at a 1-to-1. So let's say I shorted 500 shares of the SPY down here, right? I might book profits on half the position and then leave the remaining half open for a runner. Okay, and you can manage that with trailing stops. You could set a 2-to-1, right? Which may be somewhere down in this vicinity. Okay, but initially just a 1-to-1. Okay, so that is a bearish price action pivot setup. Now, a bullish price action pivot setup is just going to be the opposite. And actually, I'll use this example. There's a number of them in here, but I'll use this example because it actually demonstrates that exception that I mentioned to the 5 candlestick pattern. All right, so we're going to fast forward here to, fast forward from our previous example, but back in time from now to April. And we'll look at, this would have been April 21st. All right, so let's just say we're back on April 21st. We're looking for trade opportunities, kind of trying to figure out what the market's doing. Okay, where is it going to go from here? And what do we notice? We see that the SPY was making a series of lower highs, lower lows. Now, with a bullish price action pivot setup, we're not concerned about the highs like we were with the bearish price action pivot setup. We're looking at the lows. Okay, so are we making lower lows? And we were, okay, over the period of a few sessions. But here's that exception that I mentioned, and that is inside candles. So there were actually a couple days here back in April where the high-low range of the daily candle resides within the high-low range of the previous candle. Okay, so there weren't enough buyers or sellers, so in either direction, to break that previous day's range. So this is kind of a volatility contraction scenario where there's more of an imbalance of buyers and sellers, kind of more of a balance between buyers and sellers that isn't shifting significantly in one direction, and it indicates kind of some indecision. Okay, so we're going to ignore inside candles. Okay, and this is the exception where the price action pivot setup could exceed that 5 candlestick pattern. All right. So we've noticed that we're making a series of lower lows. Now, on April 22nd, something changes. We put in a higher low. Okay. So at that point in time, April 21st becomes our potential pivot candle. It's not yet a confirmed pivot because we need to put in another higher low. But we'll start our candlestick count. Okay, so this is going to be candlestick 1. We're going to ignore the inside candle. This will be candlestick 2 because we put in a lower low from the 2 days prior. Then we're going to ignore that inside candle. This is now our potential pivot on April 21st. April 22nd, we then put in a higher low. So this will be candlestick number 4, right? 1, 2, potential pivot 3, 4. Now we're just looking for one more higher low. Not necessarily higher than candlestick 4, it just needs to be higher than the potential pivot candle. And that occurs the following trading session, and that becomes candlestick 5. And we now have a confirmed, I should have drawn that a little more to the left, 5 candle or bullish price action pivot. Okay, so this is now a confirmed pivot candle. And I'll clean this up. It's starting to look like a Picasso. So then we take the high of the 5 candlestick pattern, again, ignoring the inside days. Okay, that looks like it's going to be candlestick number 5. And we look for an entry just above the high of that daily candle. Okay, so just roughly right about here. All right, then we're going to define our risk. Now this is a rather wide bullish price action pivot. When I say wide, I mean from entry to if we were to place our stop down below the pivot. So we can still use that approach, and that would have worked out just fine here with a 1-to-1. Again, just eyeballing this, but would have easily achieved the 1-to-1 here. But maybe here might be a case where I want to tighten my stop up a little bit, maybe put it below candle 5 or candle 4, get a little bit tighter there. But often these more extreme pivots, so a wider range between the entry and stop, can go on to make pretty explosive moves like we saw here in April and May, later April and May. Okay, so here's our profit target. Okay, and you can see these all over the place now, right? They exist all over the chart, and you can certainly just trade these purely based on the price action. You can combine them with other methodologies. I like to look for price action pivot setups that align with like key support or resistance levels. Like here's one back here, right? Rotation higher, sell off back into a level of support, bullish price action pivot, nice setup. So looking for kind of horizontal price levels of support or resistance can work out really nicely. And then it can also help keep you out of the market when there's not follow through. So I'll just look at an example here. Let's see if we can find one. A lot of these go on to make, or actually follow through, but here's an example. Get my pen back up. Okay, so here was a bearish price action pivot setup, right? We have a series of higher highs. There's our potential pivot. So we then need two lower highs to the right of the potential pivot, right? Two lower highs to the left, two lower highs to the right. There's candle 1, candle 2. This is now our confirmed pivot as we have two lower highs to the right, 4 and 5. Entry down here. Okay, that's the lowest low in the 5 candlestick pattern, but didn't follow through. Okay, so you simply wouldn't have taken a trade here. It would keep you out of the market in cases of whipsaws or choppy market conditions. Okay, so they won't all necessarily follow through and result in what I would term a triggered price action pivot setup. Okay, so you can see these all over, and we just recently had a bearish price action pivot. In fact, this is a good example and why I use 5 candlesticks. So here, right, we're making a series of higher highs. Okay, that all changed here. We put in a lower high. Okay, and this is actually a triggered bearish price action pivot because, right, this is the pivot candle 4, 5. Okay, entry here. It looked like we were potentially setting up for a bullish price action pivot. Okay, because here we put in a higher low. However, we would have, in fact, this was a bullish price action pivot because candle 5 was a higher low than the pivot candle here. Okay, but once again, no follow through. So the prior bearish price action pivot remains intact, right? And here we did get follow through into the entry. Okay, now this looks like it would probably just be at a break even or maybe slightly in profit at the moment. But occasionally, like in this example, you might see a conflicting pivot. In this case, a prior bearish pivot followed by a bullish pivot that didn't follow through, and then the bearish pivot triggered. So you want to stick with the one that is confirmed. You got the full 5 candlestick setup, and then has reached the triggered entry price. Yeah, that's an example. So let me see if there's anything else I wanted to point out here. I think that mainly covers the rules. I am gonna leave time for questions as well, but let me talk to you about a few other things first, and then we'll cover questions. So what we've done in partnership with MetaStock is build all of this logic and methodology into an indicator, so that you don't have to be constantly trying to track candlestick highs and lows, calculating entry, stop, and profit target levels. So in partnership with MetaStock, we've developed the price action pivot indicator that does all the heavy lifting for you. And this is what it looks like on the chart. We'll go back over to MetaStock and I'll show you. But it gives you a very clear red down arrow for a bearish price action pivot, or blue up arrow for a bullish price action pivot. You can see the dotted lines. It calculates based on the specific characteristics of the asset, so its volatility, average true range, and gives you a very appropriate entry, stop loss, and profit target level. And it gives you accurate buy and sell signals with 0 lag. So there's no lagging component to this indicator. Okay, it's purely based on the current price action. It uses a proprietary pivot algorithm. It reads the market in real time. It's going to give you exact entry, profit target, and stop loss levels. It helps you forecast short-term and long-term trends with astounding accuracy. Again, it can be applied to any asset class: equities, ETFs, futures, Forex. It also comes with a scanner. So we'll talk in a minute about the scanner inside MetaStock that allows you to scan thousands of stocks, again, whatever asset class you want to do, in literally seconds, right? So you know exactly when a pivot shows up on your chart, okay, without having to sit there and watch it constantly. It can be applied to any time frame. I love using price action pivots for my directional options trades. I do a lot of options trading, and for those of you who also trade options, you know that for directional option strategies, timing is critical, right? You can't be using lagging indicators. So it helps us identify key shifts in supply and demand and confirm pivots that can help us then make more informed, confident directional options trading decisions. The indicator doesn't repaint. So once you get a confirmed signal on your chart, it's there, it's set in stone. If you're not familiar with what repainting means, some indicators will change after the fact, and they'll look much better in hindsight on the chart than they do, with foresight. So that doesn't occur with the price action pivot indicator. As I demonstrated, it has a natural built-in protection to help us avoid whipsaw market conditions, right? We need to have the directional follow through. It helps us capture a lot of the trend before it reverses, so we're not getting into the trend way too late. It's designed to limit losses, let our profits run, right? We initially target a 1-to-1 risk reward, and then we can scale out and manage with trailing stops. It can be used with any other indicator system for added confirmation. Maybe you already have an indicator system that you're using. This is a great methodology to really confirm that you're trading on the right side of the supply-demand curve, okay? And removing guesswork, right? You're never wondering, what price level do I get in? Where do I enter my trade? Where do I define my risk? Where do I take my profits? Okay, so it's all designed to help cut the learning curve and help you start trading with more confidence, accuracy, and consistency. Okay, and what we've done is put together an incredible package for the MetaStock Summit that I'll walk you through and then let you know how you can get. Okay, so this is the MetaStock Price Action Pivot Indicator package, which includes 12 months of the Price Action Pivot premium signals, okay, on the MetaStock platform. that normally retails for $14.99. It's also going to include live strategy sessions that we hold on a weekly basis with our members at Altos. We do those every Tuesday evening at 7 p.m. Eastern. And like we did today with the price action pivot setup, we start out with a market analysis and overview of the market, key levels, and then we'll cover typically a new strategy every week, like we did today in our session. So you'll get access to those, and to me, I host those on a weekly basis, which I'm there to help, coach you, answer questions. Only limitation is I can't give you personal individualized trade advice, but I'm there to help educate you. My personal coaching typically starts in 1997 and goes up from there. But we'll be meeting on a weekly basis. We do record those sessions, so if you're not able to attend, you have access to the recordings as well. You get exclusive invitation-only Facebook group access to our private Facebook group of around 900 members. You're also going to get additional online training through our Professional Trading Series online course that covers many of our other, highly consistent, successful, and profitable trading strategies. It's over 10 hours of content. You can watch it at your leisure. It normally retails for $900 for the full Professional Trading Series curriculum. And ultimately learn to trade equities, futures, Forex, options, whatever market you're interested in with consistency. Okay, and there are 2 bonuses as well. So we had kind of limited today. We have about an hour or so together. We've actually built an entire 2-day workshop around price action pivots. So we go into a lot more detail, go through a lot more examples in a 2-day workshop, which we recorded. And so you'll have access to this full 2-day workshop. Again, you can watch it at your leisure. Day 1, we spend a lot of time just going into the mechanics, but we look at not just the mechanics of the price action pivot setup, but different ways to use it, like in different market conditions, different assets, and using it alongside, for instance, as I mentioned earlier, like support and resistance levels. Okay, so finding a bullish price action pivot off a key support level or a bearish price action pivot off a key resistance level. Okay, that's all covered in much more detail inside the 2-day workshop. And then on day 2, I actually trade the setup live with real money in my own personal trading account. So you can actually watch me trade it live and hit some profitable trades in that 2-day workshop. Bonus number 2 is our latest ebook, How to Create Risk-Free Trades. This is a ebook that covers money management tactics to mitigate risk and even in some cases remove risk from your trades. We normally retail that for $97, and that's also going to be included in the package. So the total retail value on the MetaStock Summit package today is over $5,000. We are knocking 80% off. You can get this for $997. You get everything you see here in the package. It belongs to you, and it is limited at that discount to 25 seats. So if you don't want to pay the full price for this, you want to make sure you scoop one of those up at that 80% discount. It will go back to the full price once those 25 seats are scooped up. So to claim your spot, you can go to metastock.com/PAP for price action pivot, metastock.com/PAP, and lock in that 80% discount. We also have a guarantee. So if you're not convinced this is the right indicator for you, we do offer a full 30-day money back guarantee. So go ahead and scoop it up at the 80% discount, give it a try, practice, right? Go back, look at different charts, and you'll see the incredible accuracy for yourself, right? And then you can make your decision there. Again, you're going to get once you join, so once you go to metastock.com/PAP and you join, you're going to get access to a members area. So give us a little bit of time, but you'll get all set up by today. Okay, you'll have access to our members area inside Altos Trading. That's where you're going to find your workshop. Okay, so that's bonus number 1. You're going to get the 2-day price action pivot workshop. Again, it's going to go over everything in a lot more detail than we had time to do today, and then you'll actually get to see me trade this with my own real money. And then you get the ebook, which will also be found inside your members area as well. We get thousands and thousands of testimonials from our members, and these are just some of our members who use our indicators like price action pivots. This is actually our second indicator that we've developed with MetaStock. The first was trade trend. So we have a lot of happy MetaStock trade trend users as well. I'm going to go ahead and open up the Q&A in just a second, but I want to first hop back over to the MetaStock platform and show you what this looks like on the MetaStock charts. So let's do that real quick. Okay. So here's what the indicator looks like. So this is just the same chart of the SPY that we were just looking at, daily chart of the SPY. And now you can see that we have some symbology on here that identifies bullish and bearish price action setups. Here's the one we just talked about, right? So you're going to see a diagonal red down arrow for a bearish setup. Okay, this simply indicates that's a confirmed bearish price action pivot. You're then going to see, if it follows through to the suggested entry price, a confirmed either vertical red down arrow for a triggered, right, meaning that it hit the entry price, or a vertical up green arrow for a triggered bullish price action pivot setup. So again, not every setup will trigger here. You'll see some that did not follow through, but that's how you know whether there was a follow through in a confirmed setup. Now, the other really cool thing, and I'll open this up, is that comes in with the indicator inside the MetaStock platform that's exclusive to MetaStock, is the expert commentary. So the cool thing about the expert commentary is it's going to tell you everything you need to know to place a trade based on a setup. Okay, so like if we go back, let's go back to this one. This was back on February 24th. Okay, we see that we have a triggered setup. Or we can actually just go back to, let's go back to the 21st. Okay, that was our confirmed bearish pivot, but we didn't yet have a trigger. Okay, so the expert commentary is going to tell you, okay, that there's a new pivot high. Okay, we now have a short trade status. This pivot is a setup signal for a new potential short position. It's going to then give you the target entry price. So you'll know to the penny exactly what price you should enter. In this case, if you're going to short SPY, it's also going to give you the projected profit target. Okay. It's also going to tell you to ignore the setup if price trades at a certain level, or there's a long entry signal. In other words, a bullish price action pivot. So this is all spelled out inside the expert commentary. So you're not left guessing, what price do I enter? Where do I place my stop? Where do I place my profit target level? So that's all spelled out inside the expert commentary. Okay, and then lastly, you'll notice up at the top of the chart, there's something called PAP trade status. So what this is, and this again is unique to the MetaStock platform, is a nice way to visualize whether we're in bullish or bearish pivot conditions, or not at all. Okay, so like here we had a shift in supply and demand from bullish to bearish. We have the bearish pivot, okay, and then we get the follow through. Okay, but then we have a period of time where there is no pivot. That just tells us that the bearish pivot is continuing to follow through. We don't have a conflicting bullish pivot, okay, until here, right? And then you can see this all lines up with what's actually happening on the chart. So that kind of gives you a nice way to visualize whether we're in bullish, bearish, or neutral pivot conditions. And in some cases, there might be some overlap, right? Where supply demand curves don't shift perfectly on a dime, right? There might be a little bit of overlap between bullish and bearish pivot conditions, but that is also included inside the indicator here. And then in addition to that, so you get the expert commentary, you get all the pivot signals on your chart, you get the price action pivot trade status bar above your chart. You also get the scanner. Okay, so when you go into the Power Console, you can actually, number one, you can back test the system, and then you can also scan, any of the markets that are provided. And obviously, MetaStock has a very robust offering and access to various markets where you can scan for bullish and bearish price action pivot setups. So literally at the click of the mouse, it will print out the list for you of all of the current setups. And then again, I mentioned this can be applied to any time frame. Okay, so I can go down to a 5-minute chart of the SPY and I can see all the pivot setups. Okay, I can go up to an hourly chart. Okay, and I can see all of the bullish and bearish pivot setups. Okay, so any time frame, again, all you need to do is change the periodicity of the chart. All right, so I'll go ahead and take any questions. I will give you our contact information as well. So our website is altostrading.com. Our support email is support@altostrading.com. Again, the link to claim one of those 25 seats at the 80% discount is metastock.com/PAP. I will also put up the package and all the other goodies that you get inside this package, along with an entire year of the price action pivot indicator. And now I will be happy to take any questions. So if you want to go ahead and put those in the Q&A. Hey, Art, good to see you. Flying is going well. Yep, all is well. I hope everything's well with you as well. Let's see. Okay. Got a question on what time frame do I trade? Most of my trading, I would say, is off of higher time frame charts, daily, weekly, monthly. I do some intraday trading as well. In fact, I run a trade room. We do some intraday trades inside the trade room, but I would say mostly off of the higher time frame charts. So good question there. Yeah, and so in regard to the 80% discount, so we don't lock you into any contracts. MetaStock will be handling your order. They'll be taking your order and getting you all set up on their end with the platform. We'll be getting you set up in our members area where you'll access all of your bonuses and extra goodies and things that you see here. But we don't lock you into any contracts, so you're free to cancel anytime. And again, you do get that 30-day guarantee. And then if you want to continue past the first year, okay, we'll never raise the price on you. You are grandfathered in at that 80% discount. Okay, so you are grandfathered into that, yes. Let's see. Paul's asking, does this work on Indian stocks? Yeah, so this can be applied to any market, any asset class. Totally up to you as long as you have access to that market inside your platform. Absolutely. And when I pass it back over to Jeff, he might be able to answer more detail on questions related to markets they provide access to inside the MetaStock platform. Paul also asked, can I use it in FX coins? So yeah, again, Jeff might be able to answer questions in terms of very specific asset classes that they provide inside MetaStock. But as far as the indicator goes, yes, any asset class, any time frame, absolutely. Let's see if I'm missing any. Yeah, and then as far as the rest of the things in the package, again, those will be in the members area, your 2 bonuses. You'll be sent an email, a welcome email with login information. So we'll get you set up with a username and password. So again, that should all be done today. So you'll have access as soon as we get everybody set up. And then that won't expire. So when you go in and for instance, you access the price action pivot 2-day workshop, there's not a time limit on when you have to, complete that. You can do it at your leisure. You can watch it all at once. You can watch a little bit day by day, but that'll all be available for you inside the members area on our side of things. Okay, well, it looks like that covers all the questions I've seen come through. So I just want to thank all of you for being here. I hope you got a lot out of the session. I hope you find price action pivots a valuable addition to your trading arsenal. Welcome to all of you who are scooping up the price action pivot indicator in our exclusive package for the MetaStock Summit at the 80% discount. Welcome aboard. Looking forward to working with all of you. Jeff, I'm going to pass it back to you. I know we have about 5 minutes or so, but you might want to go through some more details and maybe demonstrate the scanner or anything you want to do on your end.
For sure. Yeah, absolutely. We do cover the National Stock Exchange of India. I'll just show it. Thanks, Jeff. I appreciate you coming in.
Thanks so much.
All right. Very good. Let me go ahead and do this. I'll show my screen real quick. And then what I'm going to do is turn on my camera. Let's see, did I take the presentation controls? I think so. Yeah, okay. I should be all good. Let me go ahead and do this. All right. Scanning. You'll be happy to know, if you want to be able to run scans, explorations, that kind of stuff, there are only about 300 or so different exchanges you can use globally. I'll show you, I think I have a complete list loaded here in my MetaStock. If not, I very quickly can add it. So let me go ahead and kind of just go in here to MetaStock. We talked a little bit about how easy it is to run a scan, but one of the things I didn't talk about was the market coverage that's available in MetaStock. So let me go ahead and show that real quick. I'm going to go ahead and open up the Power Console right here. I'm going to go ahead and go down to scanning. You can see it right here. And just go ahead and kind of type in I think it's under PAP for the scan. If I want to do a long entry, I'm going to go ahead and kind of click on that. Probably won't run this, but I do want to kind of just talk about all of the lists that are included. So let me go ahead. I'm going to come in here to the public list. I'm going to actually just kind of give you an idea. I've kind of limited it so that the list that I see in MetaStock is just the American markets, but there are tons and tons of different exchanges that are available. So if you're interested in Australia, Bombay, Bursa, Hong Kong, there's tons of different exchanges, Singapore, whatever, Thailand, whatever it is that you're interested in covering, you can actually have in here. You can scan against it. And it's very, very straightforward. One of the advantages we have as a software company is the data that we get is provided by LSEG, but the London Stock Exchange Group. They purchased the Thomson Reuters data feed, and they've been working with that. In fact, they just launched a huge upgrade of it. But part of that is it has some of the best news, the best information, the best coverage on the planet. And you can see that in this list of stuff that you'll be able to do in Europe, North America, Asia, any of the futures markets, tons and tons of just different coverage that you have access to and can scan against, can apply this to any markets that you're interested in. So that's really kind of how that boils down. You can use it on anything. Jeff did a really good job about talking about the platform and kind of how it works. It does have an expert advisor as well that'll tell you what your long and short trade status is, where your profit targets exist, where your exits exist, all that kind of stuff is kind of identified and pointed out in the software. I love it when the software does that because it kind of helps you remove that element of emotion out of the market and just be able to trade with confidence and decisively. So you get the trade status indicator as part of it. You can scan for long entries, long setups, short entries, and short setups. Those are different explorations that you can run. Again, with any version of the program, whether it's the DC or the RT, you can run a scan anytime during the day. You'll be able to see any setups that exist up to in that particular moment of the day. Very, very, very powerful. So talked about the expert advisor, that's included. We did record a bootcamp session to help you get started in that. Jeff did an initial session where he kind of talked about in detail about the different indicators and systems and that kind of stuff. After he was done, I took over and I kind of said, okay, well, here's how you can kind of identify and limit the securities that are in your list so that only the ones that you're interested show up. Here's how you run the scans. Here's how you apply the templates. Here's how you work with everything. The idea being is we're getting a lot of new customers to MetaStock because they like price action pivots. And we want to make sure that you get off and get going on the right foot. And so anything we can do to help you, and that includes provided unlimited access to our support, a one-on-one installation appointment where we can sit down with you and kind of walk you through the software, as well as all these trainings that are available as well. So As part of the special offer, you can get 12 months of the price action pivots. It's normally $1,500. The live trading sessions, which is a $550 value. The personal coaching, the boot camp, the Facebook group access, invitation, the online courses, the learning to trade stocks futures with consistency, the 2-day workshop, the free ebook, all that stuff's included. You also get 12 months of access with 12 months of access to all of the coaching materials and supplies. Normally, individually, that would be like $66.36 just by itself. It's $997 here at the event. You can do that by a couple of different ways. You can call 800-882-3040. You go to metastock.com/saleschat, or you can also go to metastock.com/price action pivots to take advantage of that. And all of those links are down in the chat over here, so you can kind of get to them as well. So go ahead and take advantage of that. It is also, you can take advantage of that, and it's also part of our complete package. And I have a slide for that, but it's in the wrong order. Let me go back here real quick. Let's talk about the complete package. If you want to get everything that we're talking about today, all the great indicators, the systems, the methodologies, the training, all that kind of stuff that we're talking about today. Normally, just the retail price on that alone would be about $9,000. Here at the event, you can get everything that we're talking about for $3,950. So it's an extra big bonus discount on everything. If you want to do it, give us a call, 800-882-3040 or metastock.com/saleschat. If you just want to get the add-on, metastock.com/PAP. So let me go ahead and fast forward a little bit through the slides. And as we kind of get in and start to the next speaker, which is me. Before we do that, though, I want to talk about Stocks and Commodities Magazine. Stocks and Commodities Magazine has been a great partner of our Online Traders Summit since we started doing them. They've got 17,000 different trading articles, 1.3 million subscribers. They've been publishing since 1982. You can get a free issue if you go to metastock.com/traders-summit. Register for the event today. All of the speakers and presenters and sponsors are giving away a bonus item. Theirs happens to be a magazine. You can sign up for all of the bonuses while you're up there. So I also want to say thank you to the Traders Forum. The tradersforum.com is where you can find that. It's a free community of traders. You can learn a lot of lessons about candlestick patterns, different indicators, stop methodologies. We do some cool events. We do like a little bit of a training session every Tuesday. And we have a guest expert that comes in every Thursday. And we just do kind of a long form podcast style interview. They're great. You can join for free. You can chat with other traders, share ideas with other traders, lots of resources that are available and up there. thetradersforum.com is how to kind of join that. Okay. We are MetaStock. We've been rated #1 32 years in a row. Well, I'm going to talk right now about how it can kind of help you test ideas, scan markets, do forecasting. We want to cover forecasting. We can't talk about everything in an hour, but you can get real-time alerts, commentary, signals. Pricing on that starts at $75 a month. That's our what we call our MetaStock DC program, delayed charts. It'll give you a daily chart, weekly, monthly. It doesn't give you any of the Reuters news. That's available for a little bit extra, but for $75 you can get all of the stuff that we've been really talking about today, scanning, all that kind of stuff. Our offer today is if you buy a month, we'll give you the second and third month for free. $25 a month will get you running until 9/23, September 23rd. So you can do that, and as well as sign up for any add-ons that you're interested in at metastock.com/summit deal. You can call us at 800-882-3040, or you can go to metastock.com/saleschat. Now, I think Greg wants to introduce me.
Yeah,
so
I did want to.
All right.
And also, if you're not inundated enough with URLs, there's also metastock.com/traders-summit. In case you're watching on YouTube and you haven't yet registered for this event, by doing so, you will be eligible for all of the free bonuses that are offered by the presenters today. So don't forget that. Anyway, hey, I just want to come on real quick and say, this is Jeff Gibby. Have you met him? He's right there. Jeff has worked for MetaStock. I just want to do a quick introduction because hate it when somebody has to introduce themselves. I'd like to myself introduce myself. Never works. Jeff has worked at MetaStock since about 1926. He is
the Great Depression.
one of the longest standing members in the MetaStock team. He is, if you haven't noticed, generally involved with all of our live events. In fact, I'd say Jeff is probably in about 97% of all of the live events we do. I'll also put Jeff in about the top 2% of people who are, I'd say Jeff is probably in the top 3 people in the world as most knowledgeable of MetaStock and how to use it for successful trading. So he's a really good person to listen to. He's also a devoted dog lover, dad, and good Samaritan all around. And I know you'll enjoy him. Take it away, Jeff.
Okay.
Did I miss anything really important?
Not really. No, I think that covered all of these.
I think you're the only person that's worked for MetaStock longer than MetaStock's actually been in existence.
No, that's not true. But you could have also talked about the chickens that I raise.
You did.
All right.
There's no gatekeeper. Oh, we should also mention that Jeff is also over the forum. So if you just can't get enough of Jeff through our webinars and seminars, definitely go to metastock.com. No, what is it? Forum.
TheTradersForum.com.
Yeah, tradersforum.com.
It's a cool site. It's growing. We just hit. Do you know, Greg? We just hit 1,000 members.
I did not. I mean, of course I knew that.
Well, there you go.
I remember 1,000. All right, break a leg. I'll get out of your way.
Awesome. Thanks, Greg. All right, my name is Jeff Gibby, like you just talked about. Let's go ahead and get started. I'm going to talk about strategies and trading strategies and kind of finding the right one for you. Since I'm going to talk for about an hour, I'm going to make my lawyers happy first. Today's demonstration is designed to instruct you on using MetaStock and the accompanying software plugins. It is not a recommendation to buy or sell, but rather guidelines to interpreting and predicting specific indicators and features within the software. The information, software, and techniques presented today should not be used by individuals who are aware of the risk inherent in trading. MetaStock and its employees shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. MetaStock and its employees do not endorse the purchase of a security, nor are they paid for the promotion of a security. No information contained in the presentation today should be construed as investment advice or the solicitation to buy a security. So there you go. Also, like I'm gonna kind of, we might run a little bit of an exploration today. We might look at stocks, that kind of stuff. What I really want to do is kind of teach you more about kind of the underlying thought process for what a security is and how to trade it. I don't want you to necessarily buy something just because I say something. I'll be really specific about that if we are looking at stocks that have live signal. With that being said, if you do have signals you'd like to look at, type them in the chat right now, and I'll be happy to look at them. As we kind of get started, I do want to just kind of talk a little bit about my experience with the company. I started not in the 1930s, but actually started here in 1997. When I started, I was in inside sales. I did that for almost a decade, like 9 years. And it's been a great place to work. I very, very much enjoy working here. I've been here seen a lot of companies come and go. And it's just been a great company to represent. After I was inside sales, I kind of started working our business development team. Worked with a lot of really, really good traders, including all of the speakers, obviously, that are speaking today. But it's been a lot of fun. I very much enjoy it. I'm grateful for it. So, symbol requests, go ahead and put them in there. One thing that I do like to kind of talk about is one of the things that we're proud of. There's a couple of things I really kind of like to brag about when we start to talk about MetaStock. One, I think it's pretty impressive. For 32 years in a row, it's been rated number one by the readers of Stocks and Commodities magazine. I just love to brag about that. If you, there's obviously not a lot of companies that fall in that category. So if you've been using MetaStock, the other thing I really like is a lot of our customers have been with us for decades. I've been with us for decades. I've been part of MetaStock for decades, and I know customers that have been customers since I started very, very early. So if you've been with MetaStock for a number of years, I appreciate it. If there's anything I can do to help, feel free to reach out. The other thing, since I said there's a couple of things I'm really proud about, is our support. So our support team just does such a really, really good job. They're phenomenal. if you ever have questions. It's not like some of those other companies where you're on a chat bot that's just not going to give you an answer that you need, or an answer that's correct, or an answer that points you in the right direction. If you chat in with us, you're talking to a person. They're very skilled in terms of being able to help you and all that kind of stuff. So Yogs is interested in the Heikinashi channels and the Ichimoku cloud. We won't talk about that in extensive detail today, but we do Heikinashi, and I do a class on the Ichimoku cloud as well, Yogs, that you can probably find up on our YouTube channel. But that's not something that we're going to talk about today. But appreciate your interest. Actually, in 19, since you brought it up, the Ichimoku Master is an expert advisor that does a lot of buy-sell signals. We started to include that in 19 for free, and you should take a look at it. It's very, very cool. It's cool enough that I'll do a whole hour-long class on it, just not today. So in any case, today I want to talk about, and what I'm going to talk about, is the importance of trading with a plan. Okay. I think it's extremely important. We'll talk about that in detail. I'm going to actually kind of walk you through how an indicator, or a technical indicator-based system, works by teaching you about MACD. We'll talk about Gerald Appel, kind of the way you design the indicator, how it's calculated, and how you can use it to look at how you can interpret it in 3 different ways. After that, we'll talk about if MACD is a great system or how it compares to other systems. And then we'll talk about scanning per trades. And for everybody that's here, we've got a little bit of a special offer that'll help you try out MetaStock. Spoiler alert, is the 3-for-1. I already told you about it. So as we have questions, I'll be kind of looking over here. If you have questions, feel free to ask them. I'm still waiting for some symbols. I'm gonna kind of talk about MACD on a chart. You might as well give me a chart you want to look at. So give me some charts if you want to look at them, and let's kind of get going. For now, a question for you guys. What do you think is the best profession for trading? And I've made this as easy as possible. You can kind of type in an answer here. Do you think it's a teacher or an educator? That's A. Do you think it's an engineer or an architect? That would be B. Psychologist, psychiatrist would be C. A pilot would be D. A performer would be E. And an artist, musician would be F. What do you think it is? And I think this is an interesting question. Obviously, over the course of the last 20 or so years, we've worked with a lot of like market gurus that kind of fall into some of these categories. Like, for example, Chick Bernstein is talking a little bit later today. He's written like something like like 1 million books on trading. Not really that many, but it's over, I think 60, 70 maybe. And he started, him and Dr. Alexander Elder, somebody I also have a great deal of respect for. They both started as psychologists in the market. So that might be a pretty good answer. That might be maybe a number 2 answer. Another one that we get a lot is pilot. And it's kind of funny. We have Chuck Hughes. Chuck Hughes was a fighter pilot before he started trading, and has obviously built his whole optioneering team and built some really cool strategies in MetaStock. Another person that is retired now, but that did a lot of work around candlesticks and trading, and was a money manager, stated money manager. He was a literal top gun. That was Greg Morris. So the correct answer, Yogs, thank you, is D. Actually, it's a pilot. And I think if you think about that in terms of why that is, or why it might be a pilot, obviously when you have a pilot, they have a very, very clear set of rules for what happens. They have a checklist for what happens when they take off. And they go through that checklist on a very, very disciplined way. Same thing with they land. Same thing with if there's an emergency. Everything is kind of very disciplined in the approach that they have in terms of kind of the way they're going to operate the plane and the way that works. And so that's why I think it's D. If you're not familiar with Richard Dennis was actually labeled Prince of the Pit. He was a very, very popular. Let me see if I have notes here. Yeah, okay, here we go. Sometimes the details out. Here's in Prince of the Print. He borrowed $100 and reportedly made that into $350 million. He did that over the course of about 6 years. He believed you could teach trading. He actually had a bet with a guy by the name of Bill Eckhart. And if you've heard of the turtle trading strategy, he was one of the original trading. He was one of the original turtles. But he believed, okay, you can teach people how to trade. All they need to do is be able to have discipline. They need to follow rules. You can teach people how to trade. And another famous trader of the time, Bill Eckhart, kind of disagreed with him, so they decided to test it. And they brought in a bunch of traders. They funded them with their own money, and they were not successful at all. They were extremely successful, and they became very, very famous with the turtle trading methodology. Here's a quote that he said in the newspaper. That he said, "I always say you can publish rules in a newspaper and nobody would follow them. The key to trading is trading with consistency and discipline." So I think that's awesome. One of the things I think that helps with that is understanding why you trade. I think when you go and make a trade, you should always have a good idea of why you're trading, why you're getting into the market, where your stop losses are going to be. And those are decisions you should make in advance before you get into the market. So today what we're going to do is we're going to talk about MACD. And if you're familiar with MACD, this might be a good refresher for you. If you're brand new to the market and just found our YouTube channel, this might be a good way for you to kind of learn a little bit more about how indicators work in general and specifically how MACD works as well. This is Gerald Appel. Gerald Appel wrote the MACD indicator over 40 years ago, a very, very popular indicator, one of our most popular indicators on our YouTube channel. He wrote about 17 different books on investing. He published a newsletter that was called Systems and Forecast. He published it for 46 years straight. And also, in addition to that, he ended up publishing about 5 books on photography. So there you go. This is the person that created the MACD. What I want to do is to kind of use this as a way to show you how technical analysis can be objective and not subjective. And so the idea here is what we're going to talk about is kind of how it's calculated, how it's used, and that kind of stuff. So let's kind of jump in here. There's some advantages to the MACD. It's objective. Most technical analysis systems are extremely objective. That makes them scannable. That makes them testable. That makes them understandable. And most of all, it means that you're not trying to guess what's happening. Okay, they're easy to interpret, and they help traders trade in the direction of the overall trend. I'll also say that it's not just a trend indicator. Because of the way that it's calculated, it helps you understand momentum as well. And we'll talk about that. Okay, some disadvantages: the MACD can be prone to whipsaw, especially if you're in a market that isn't moving in a specific trend. If it's bouncing from a high to a low to a high to the low, you can get whipsawed on it. It's also a lagging indicator because it's based on some moving averages. So let's go ahead and talk about how it's calculated. Okay, when Gerald Appel developed the MACD, he didn't use whole numbers. A lot of people will use 26 exponential moving average or 12 exponential moving average. He didn't use whole numbers, but these are the closest numbers that match up. So if we wanted to calculate the MACD, he'd actually use the 0.075 and 0.15 exponential moving average. For the purpose of just the demo, and what most people do, the closest whole numbers that you can use are that 26 period exponential moving average and the 12 exponential moving average. All right, Yogs, thank you for the symbols. I thought nobody would come up with some. All right. And you're just in time too. You've probably seen this before. Okay, let me go ahead and we'll just open up a few charts here. I was looking at Tesla a little bit earlier. This is XOP. What I'm going to do is I'm actually, so that I can show you this, I'm going to type in a couple symbols here. Now, if you're new to MetaStock, everything starts with our power console. And what I'm going to do is I'm going to go NVDA here. I'm going to put a space in here, and we're going to do all of Yoge's symbols, MSFT.O, and we'll do Apple. And Apple, I swear, because of the way that the Apple symbol is, I'll never be able to spell Apple properly again. Every time I go to spell Apple, it's all AAPL. But in any case, What I also want to do is right here, I'm going to apply a template to these charts. I'm going to come down here to, I think there's a MACD one. And that'll actually put on, yeah, MACD histogram. We'll go ahead and open up the chart here. And I prefer white. So what I'm going to do, I'm just going to go ahead and make this a white background real quick. We're going to make it a light background. Boom. And I'm going to take off for now the expert advisor. So actually, now I'm going to go jump over to this NVIDIA chart. Or maybe the Microsoft one. Okay. And let's make that a white background. Okay. And now let's go ahead and remove the expert advisor just because for now, I want to talk about how these are calculated. So I'm going to go ahead and detach the expert advisor. Okay. And we've got a chart right now with the MACD indicators. I'm going to make things a little thicker. I want you to be able to see them. And just because I prefer to look at stuff in candlesticks, I'm going to make them candlesticks as well. Okay. Now, right now, we've got all of the lines of the MACD. I'm going to highlight how they're all calculated. So the first thing I'm going to do is I'm going to take a 26, remember a 27 exponential moving average and a 12 exponential moving average. So we're going to go ahead and apply this to the chart. Up here, I've got the indicator quick list. It has several hundred indicators in there. I'm just going to type in here moving average. We'll go ahead and grab this moving average, and we'll go ahead and put that 26 period on there as an exponential. And I'm going to make that one, let's make it blue, and let's make it kind of fat. I want you to be able to see it. So this is our longer term moving average. I'm going to do the same thing for a shorter term moving average. Go ahead and drop it onto the chart. Go ahead and put 12. I'm going to make that exponential. Okay. And we'll leave it red, but we'll make it a little bit thicker. Again, just want you to be able to see it. Okay. Now, the first line that we're going to talk about, I'm going to ask you to ignore the other lines for now, but the first line that we're going to talk about is the MACD line itself. So I'm going to make that thicker as well. And to change things, you notice it's really easy. I just right click on what I want to change. I can go to properties. I can double click on it. We've spent a lot of time making this work like a Windows product, like other products you're using, because we wanted, from the very, very start, we've wanted to keep the analysis forefront. We didn't want you to go, oh, how do I add this indicator again? How do I attach something? How do I change it? We want it to be very, very intuitive to use. Okay. If I want to calculate the MACD, which is this yellow thick line, that all I would do is I'd take the shorter period moving average, which is 12 exponential. I'd subtract it from the 26 period exponential moving average. And the difference between that would be this yellow line, or the main MACD line. Okay, that's it. That's all the calculation is. We're comparing a shorter term moving average to a longer term moving average. It's very, very straightforward. Okay, I think it's important to understand this because then you can kind of understand how momentum comes into play. Okay, if you're kind of familiar already with the way that a moving average system works, you know, generally when a moving average crosses up above a longer term moving average, it means the price is starting to go up. Okay. And it's the same thing. When we're looking at that, generally, that's what you're looking at with MACD. If your MACD is starting to rise, it means the difference between these two moving averages is getting closer together. Then you have a bit of a crossover, and they'll separate in price. So the faster this moves from negative to positive, the faster you have a rise in price. Okay. Conversely, if you have a fairly good low drop in price like you did right here, you can see that reflected in the MACD as well. It's going to come down faster. Okay, as you start to get sideways, or if you have periods of sideways market, I'm going to call this a sideways market. There's very, very little difference between your MACD, or between your moving averages, and it gives you a closer, shallower MACD. Okay. So not only are you looking at kind of the direction of the stock by the pointing of which way the MACD is moving, you're also looking at how fast it's moving because you're comparing a moving average to another moving average. So that's that's the other thing. So let's kind of talk a little bit about the other lines and kind of what they are. This right here, this dotted red line, I'm going to make it a little bit bigger now. Just I double click on here. I'm going to make the signal line. That's our second plot here. It's red. It's by default. It's dotted. I'm going to leave it dotted, but I'm going to make it a lot fatter. Okay. If I wanted to tell you what that was, it's very, very straightforward. This is just a 9-period exponential moving average of the yellow line. Joe DePel called it the signal line. So what I'm looking at when I look at the signal line, I'm looking at the difference of these moving averages, and then the signal line is just the 9-day exponential moving average of this value. He called it a signal line for a couple of reasons. He could use it as a signal. Okay, so the way that you interpret this, I'm going to attach the expert advisor again real quick because it helps me explain it. Also helps you understand it. I'm going to go ahead and I'll click on this guy on the top hat right here. I'm going to go down to MACD. I'm going to go ahead and attach this to the chart. Before I do, though, I want to talk a little bit about what the expert advisor is, because there's all kinds of different methodologies. There's a few hundred that are in here, and there's some really, really cool ones. Like there's some that I really like. There's one that'll actually identify all the candlestick single day signals on the chart, and that's just included in MetaStock. There's one that does Ichimoku, like Yogi was talking about a little bit earlier, and that's on the chart as well. But let's just do the MACD one. So when I attach this expert advisor, it's going to make a few changes to the chart. You'll see right, oops, let me attach it. Okay, you'll see right here we've got a little bit of a bullish and a bearish ribbon. I'm going to go ahead and kind of just draw a horizontal line where that goes from bullish to bearish. Okay, I'm going to do that right here as well. You can kind of see where it kind of was a little bit whipsappy. We had a bullish, bearish, bearish, bullish, bearish, bearish. Okay. The way that you read the MACD is very, very simple. If the MACD to determine bullishness and bearishness, if the MACD is trading above its signal line, it's going to be bullish. It's that simple. Okay. If it's trading down below the signal line, like right here, it's going to be bearish. Okay. So right here where we have the MACD being in a bullish zone, that's basically all that means is that you're trading up above the signal line. Okay. When you're trading down below the signal line, like it's been doing since right about here on the chart, actually May 23rd, when it's trading down below that signal line, what you have is a little bit of a bearish reading. Okay. So the first way, and the first way you can use the MACD indicator as an indicator is using the MACD on its signal line. Okay. When we start to get more bullish, you're going to see this MACD buy signal. When the MACD will go from bearish to bullish. And when that happens, it's called a signal because that's when you can buy MACD based on that, or buy Microsoft based on the MACD. So right here, we would have got that buy signal. Here, when we went bearish again, and it's still kind of been going up since then, but here when it went bearish again, you could sell or exit your position. Okay. So that's method one in terms of interpreting it. And again, it works sometimes. In the case of Microsoft, we've been long and it's been going up for a while now. We might get a signal that we're going to go long again, but we haven't got it yet. Okay, so if we took this sell signal, let's say we took it at the open on this day, 456, we're down a little bit. It's up to about 478 now. So, but we're here where we would have bought MACD based on it. We can look at that at 387. If we would have sold it when we got the sell signal, we would have been, I'm just getting my vertical line. Okay. We would have been right here at about the 460. So it's completely objective. I can see exactly where our buy sell signals are. I can see how well it performs on the chart. It's objective, not subjective. So again, the first way we look at MACD, the first way we can look at MACD is, are we above our signal line? If so, we're bullish, we expect the price to rise. And in this case, it's been rising. If we're bearish, we expect the price to go down. And in this case, it's actually still been going up, which will happen. But that's the way that we can kind of look at it. Okay. Let's talk a little bit about Netflix. Well, I see Netflix. We'll look at Netflix real quick too. Let's talk about the second way you can use MACD. Okay. So we talked about the signal line. It's a 9-period exponential moving average. Oh yeah, I forgot. That's okay. Down under here, this actually wasn't developed by Gerald Appel. It was developed by Thomas Asprey, and it's what's called the MACD histogram. And the MACD histogram is just the value of the MACD subtracted from the signal line. Okay, so if I wanted to kind of look at that right here, this MACD histogram, if I just took the value of the MACD, subtracted it from the histogram, it's going to show us the difference between these two numbers. Also, it'll go positive when we go back above the signal line. You can see where it went positive here. When we go down below the signal line, it's going to go negative. You can see that right there too. So that's the third indicator. And you can use, some people like to use the histogram. It kind of gives you an idea of how much difference there is between the signal line and the MACD. Gives you that momentum idea. And it also gives you a clear idea of where you have the cross because it goes from above 0 to below 0. But that's all it is. It's just the difference. Okay. Let me go ahead and get here. It is a trend following system. This feels like it should have been earlier in the presentation, but the way that we use MACD, as I've been kind of talking about, is this trend identification. You can use it also for overbought, oversold readings, which I'm going to talk about next. You can also look at it to kind of find divergence. Okay, and we'll talk about that as well. Okay, for trend identification, we kind of talked about that. If you're up above the signal line, that's going to be bullish. It's your initial signal that you can go long if you're using MACD as an indicator. Okay. All right. The next thing you can use for is overbought, oversold readings. Okay. Because we're looking at overbought, oversold, because we're looking at momentum and we have momentum built into it, you can kind of come in here and once it starts to get overbought, oversold, it can be a little bit of an early warning system. And I try and be careful when I talk about overbought, oversold, because one of the things I learned very early as a trader was the markets can kind of stay in a trend for a really, really long time. They can stay irrational for longer than you can stay solvent, right? And so if I'm looking at things to be overbought, oversold, it generally means that we're in a really, really good trend. But there might be a bit of a reversion to the mean. It should be used as an early warning system, okay? It's advisable to use some sort of a confirmation, or if you're using it as an overbought, oversold indicator, you could use it as a point to move your stop loss, okay? I don't know if we had any, oh, we did. Look at these areas here. When we start to see MACD starting to kind of show signs of being overbought or oversold, we'll start to kind of flag the bars. Instead of red and green, you see how they're blue now? It's just kind of giving you an indication that MACD is getting in an overbought, oversold region. And what I want to kind of just do is show you how the commentary works on the MACD, because I think the way they worded this was pretty good, okay? And you'll notice it was overbought, oversold for, I'm gonna say 1, 2, 3, 4, 5, 6, 7, 8, 9 bars. And then it did pull back a little bit and then it kind of started to move up again, okay? So that's why you want to use price as a little bit of a confirmation. Okay, let me go ahead and kind of show you the commentary here. Commentary can kind of help you keep track of these things. When I open up the commentary, what you're going to see is you're going to see a buy signal that happens right here. Michael, I'm going to read your comment in a second. All right, okay. All right, so right here, as soon as I open up that commentary, you'll see this, okay? I'm going to just kind of move that back and put it right here on this blue bar, okay? So right here, at this particular point, remember we're ignoring all this commentary details afterwards, after this little blue signal. But right now it's saying, currently the MACD is bullish since it traded above its signal line. The MACD crossed above its signal line 17 bars ago right here. Since MACD crossed above its moving average, Microsoft's trade prices increased 20%, 18.48 to be precise, and has ranged from this high to this low, okay? The MACD is in an overbought range. Prices may continue to move higher for some time. Wait for prices to move lower before considering any short positions. Okay. I like the way that they worded this because, again, when you're looking at overbought, oversold, things can stay overbought for a while. They can stay oversold for a while. And when I would use them as a kind of maybe an early warning system. Okay. Michael says, Jeff, you can use MACD histogram as an earlier entry signal when the peak or trough reverses. Aggressive but highly effective when buying options at a lower price. Thanks, Michael. Okay, cool. All right. And there are obviously a lot of different ways you can interpret and use indicators for sure. The third one I want to talk about though is divergence, because divergence, Dr. Alexander Elder called divergence. He, in his book, let's see, what was it? Come Into My Trading Room, I believe it was. It might have been his other book, but I've read both of them. They're great. And Come Into My Trading Room, I believe he talks about indicator divergence, not necessarily MACD divergence, but indicator divergence as being one of the most powerful signals in all of technical analysis. Okay, and I think that's pretty cool. I'm going to kind of show you kind of how to look for divergence on a stock. Particularly what he likes is MACD divergence. And so we'll talk a little bit about kind of how that works and that kind of stuff. So, or how you can kind of look to identify that on a chart. Okay. And let's see if there's a good example of kind of how this is working. I'm going to look at NVIDIA a little bit here. Okay. All right. We'll draw up NVIDIA a little bit, but first, I'm going to actually go into white mode. And the reason I like kind of NVIDIA is I think we have a little bit of a better kind of example of where we can draw this. Okay. What I want to do is, as specifically as I can, talk a little bit about how you can find divergence on a chart with the way that Dr. Elder looks at it. He's going to look for MACD to be above 0, and he uses MACD histogram, so I'll use MACD histogram in this particular case. What he's going to be looking for is the histogram to be above 0, come down to below 0, and then set a new peak. Okay, so in this particular case, I'm going to look at this peak of MACD and this peak of MACD. Okay, and this is objective. I'm going to draw a trend line on here right now. The trend line I'm going to look at is just going to be a measurement tool. Okay, so if I look at the peak that we have here and I draw a line to the peak we've got here, that's going to be an upward trend line. We move up about 1.4 points from this MACD histogram peak to this MACD histogram point. Okay, what I'm going to do is I'm going to look at the price at those peaks as well. So if I kind of look right here, grabbing that same measurement tool, I'm going to basically come down here. I'm going to pick kind of the peak that's close to that point. I'm going to draw it to the peak of this point. Okay, and then the price between these two MACD peaks, the increase was about 18%. Okay, so if I'm looking at this trend line, I'm looking at this trend line, they're both pointing up. Okay, that's not divergence, they're kind of giving you the same reading. Okay, what would be divergence is if price made a new peak, but MACD failed to make a new peak. If we had something that looked a little bit more like this, that's what Dr. Alexander Elder would call a MACD divergence. Okay. And the other words that he would typically use for that is basically that's price setting a new high with MACD not confirming it. The terminology that he uses is this is breaking the backs of the balls. And it's a very, very good indication that NVIDIA would start to go down in that scenario. Again, he calls it the most powerful signal in all of technical analysis, and he likes to use it with MACD. In this case, we didn't have MACD divergence because, again, you have kind of a upward trend line on both of them. This MACD buy signal would have given you a good result. This one sell signal would have given you a really good result. But that's the third way that you can look at MACD. Okay. Now, the reason I spend a lot of time kind of talking about MACD, we talked about how you can use it, how it's calculated, 3 common ways, and even a 4th one that Michael shared with us in terms of ways you can kind of look at MACD is on a chart. But the thing I like about technical analysis is it's objective. Oh, okay. It's the new trading for a living. Divergences are most about powerful signals in all of technical analysis. There we go. Okay. Let's just kind of recap. We talked a lot about MACD, how it's used, kind of some of the different interpretations for it. But I wanted you to kind of think about like what I've talked about for the last like 38 minutes. At no point did we say, hey, I think this is going to be well. I think the tariffs are going to be hard on the market because this happened. I think that the corona stimulation is going to cause one of the best bullish markets we've ever seen. I think None of that happens. Technical analysis at the heart of what it's doing is it's looking at price. It's a study of price. And pure technicians will say that the study of the chart incorporates all of the investor perception about what fundamentals are doing. And it's a shortcut to the analysis. The reason I like it is because you can take kind of the MACD, you can look for trend reversals. It's very objective. We're not trying to make guesses. We're not listening to Uncle Tim and what he's saying. What we're trying to do is just determine based on kind of what the price is doing in an objective way where we should be buying and selling. And because of that, it's objective. I believe objective systems can help us with our discipline. And I believe, like I said at the onset, that that's important. Because it's also objective, it's also something that is testable. In other words, any of these charts that I can kind of look at, I can come in here and I could say, well, okay, we got a buy signal based on this here, and we went short here. Okay, so if we bought here and sold there, would that have been good? Yeah, that would have made us X amount of points, right? An increase of X%. Okay, if I sold here and bought there, I probably would have lost a little bit of money. If I bought here and sold here, break even at best. If I sold here and bought here, probably made a little bit. I can kind of see if I bought here and sold here, I can actually go in and say, okay, if I would have bought here and sold here and bought here and sold here and bought here and sold here, how would that have worked on NVIDIA? Okay, how does that compare to the other systems? Is it the best indicator that I should be using? And because it's objective, we can use software to test it. Okay, I'm going to go ahead and kind of just start that right now. I'm going to go ahead and click on our Power Console. I'm going to come to a system test, and we'll just type in a couple symbols. NFLX for Yuri. I do like to point out here that I can test as many of these as I want. Okay, I'm only going to do a few right now because it takes a few minutes, and I just want to get you the general idea. But the idea here is I want to say, okay, well, if I'm interested in trading NVIDIA or Netflix or Microsoft or Apple or whatever stocks you want, how did MACD perform over the last, you could go back to 1980 if you wanted to. How did it compare to other systems that might be included in MetaStock? How do those work? And before I even learn about MACD and spend 40 minutes teaching you about MACD, I can get an idea of how well that compares to other methodologies, which you should learn how to use if you decide you want to trade them. I'm going to just select a few of them. There's probably there's a couple hundred systems that are included in MetaStock that you can test. I'm going to do these ACT systems are based on the work of John Ellis. They're included as part of it. I'm going to do, there's some performance systems that are in here. All of those are included. I'm going to do these Ichimoku ones as well. That's mostly for you, Yogs. You asked about them. I'm actually just going to select all of these. No, actually, I'm going to select them all this way. Okay. So all these systems are included with MetaStock. I didn't get all of them, but there's at least a couple hundred that you can do. You can also fairly easily go in and add your own stop losses to them. You say, hey, how does it work with this stop loss as opposed to this stop loss? You can design your own if you want to. All that stuff it's a very, very flexible platform. And that's one of the reasons it's been rated #1 for 32 years in a row. What I'm going to have the software do is I'm going to come over here. I'm going to start with $10,000, and every time I get a buy signal, I'm going to go 75% in and buy it. And then, so my first trade will be $7,500. If I grow my account to 100, it'll be 75% of whatever that is, right? Okay. For broker, I'm going to have it just test stock positions and 0 points per transaction because commissions are kind of a thing of the past nowadays. I'm going to have it do realistic market prices. That means if it gets a MACD buy signal today, it's going to wait till the end of the bar. And so it'll buy at the next open. That's what we call realistic. If you do all of your trading at the end of the day, you could just say, hey, I want a 0-day delay and buy on the close. Okay, I'm going to leave it at the realistic option where it buys at the open tomorrow. I'm going to go ahead and click on OK. I'm going to go ahead and start this system test. I'm going to go ahead and do a time check. I'm doing all right. I do need to go a little bit quicker. But right now it's running 360 tests. It's 93% done. It's now done. And so it's taken all of those different systems that I selected, and it's testing those stocks that we told it to. That would be Microsoft, NVIDIA, Netflix, Apple. And I think those are the ones we picked. Okay, this report right here is going to tell us how well those systems worked over the last, I believe I did 2 years, like 500 bars. And so if I sort them by average net profit, these are methodologies that worked well, and these are methodologies that didn't work well. Okay, what I want to do now is objectively understand kind of the performance, because if we're talking about MACD and we're taking our signals off of MACD, how well did that work? And I'm sure it's going to be up here. It's a fairly good system. There's a MACD right here that made about 12% over the last 2 years, okay, over the test period, okay. So out of these methodologies, which ones work best? Well, our best performing one would have been this PS derivative moving average system, and here it gives us some metrics. We traded about at average gain on this basket of stocks was about 75, well, was exactly 75.72%. Its best profit was 13,000. Its worst profit was 965. It averaged 2 trades on those stocks. So over the test period, it only bought and sold about once a year. There was I believe I set it up for 2 years in my test period, with our average trade versus our average loss being 1.5 to 0.5. So for every time we lost 50 cents, we got $1.50 in a winning trade. Our average profit versus our average loss is an A number, because we probably didn't have enough losses in there. Okay, so we can kind of look at kind of how frequently this is trading, how often, because it isn't just about how much money we're making. If I kind of look at some of this more active systems right here, there's a number that says 72. Well, 72 into 2 years is about 36 trades per month per stock. That's a lot of trading. That's 3 per month per stock. And that for me is a little bit more active than I want to be, especially if I can be way less active and make 75 instead of 28%, whatever that number was. So here I'm kind of looking for something that's been consistent. For me, I would like a little bit more losing trades, and if I did want to test this, I might test it over a larger time period. With the data that we offer from LSEG on a daily basis, you could go back to the 1980s, but 2 trades just isn't enough of a kind of like a history for me, right? Because one of the things that also kind of sticks out in my head is Robert Deal used to say, you can win 90% of your trades and still lose all of your money, depending on kind of how much those losses are going to be, right? So I would want to have some losers in there, a little bit more trades. And an easy way to do that is to kind of expand the history you're using. Okay, let's jump down a little bit here, though. We've got a dynamic momentum index, number 3. This is another performance system. The performance systems were created by Robert Demon. It made about 50%, but it has 77 trades per stock. So its best profit was 1148, with the worst profit being 119. Our average profit versus loss was 4.8 to 2.5, and our average profit versus average loss would be 326. So let's go ahead and just kind of look at this one, because again, we'll take a look. I'm gonna go ahead and click on view right here. So here are the stocks. We did Netflix, we did Nvidia, we did Microsoft, and this is Apple. Okay, based on this particular system, which was the PS Dynamic Momentum Index number 3, Netflix was the best over the last couple of, between 620.23 and 623.25, so just about 2 years. We made about 111% with 12 trades. 8 of those were winners and 4 of those were losers, with an average loss profit of about 10.93. Okay, so what we're kind of trying to see here is we can kind of see how well this indicator worked. We can also see what stocks it worked best with. And that's one of the things that's pretty unique about our system tester, is it allows you, like, you could test the whole S&P 500 if you wanted to, and it would give you the results for kind of how well something worked over a broad range of instruments instead of just one. Okay, if I click on Netflix here, though, what I'm going to get is I'm going to get a performance report. And just based on time, I'm going to kind of start to go a little bit faster here, but I can see what the profit is. We made about 111%. Annualized, that's about 50%. You can compare that to buy and hold. You can see what your average profit, you had 12 trades, 8 of them were winners and 4 of them were losers. Our average profit on an open trade was about $1,500. Okay, remember we started with $10,000. Our average loss, on the other hand, was 133. So you can kind of get an idea of how many, in terms of most consecutive, we had only ever had one loser in a row, where our winners, we had about 3 in a row. Okay, there's a buy and hold index, profit loss index. There's all kinds of numbers here that can kind of help you understand the system. I'm not going to go through them all, but if you click on help right here, and just kind of, it'll give you what those are, how they work. We're kind of coming up on a little bit of a time, and I don't want to kind of be too rushed. Here I can see though what our equity looked like. Okay, and if I still like it, I kind of want to see what it looks like on a chart. I can see what our drawdowns were. This is pretty consistent. I don't want to see is a lot of huge ups and huge downs, huge ups, huge downs. I'll save that excitement for the Ferris wheel. But if I still like this, I can kind of what I want to do. And what I would encourage you to do is actually learn about the methodology. In this case, I'm going to plot this on the chart. I'll show you exactly how you can do that. So this was the PS momentum system. Okay, I've got it plotted on the chart right here so you can see exactly where it would have bought, where it would have sold. Here we had a short position that we exited. Okay, but you can see exactly where those come in and kind of take another look at it. If I like it, I'm going to go ahead and plot the expert advisor on the chart because it's going to explain to me what's going on with it. So right here, this is called the PS Dynamic Momentum Index, number 3. I'm going to go ahead and attach that to the chart. I also love how easy it is to find what you're looking for here in this system. They've made so many nice little changes. And I think if you've been part of MetaStock for a while, that you'd agree. And over the course of the last several years, like the changes of MetaStock have been more dramatic. So here we would have gotten a buy signal. Okay, I'm just going to kind of jump to this day. Right here it says, okay, enter long today on a market on close order at the market price on tomorrow's open. I want to understand a little bit more about how this method works. Who designed it? Who created it? Again, I don't think you should use system testing as a way to skip out on your education. I think that education is going to be important. With MACD, it helps us understand momentum and why we're getting signals and how the trend is kind of giving us clues. I think that also that understanding our systems will help us with discipline, which is, I think, where most traders fail. Okay. So the dynamic momentum index was developed by Tushar, Shanley, and Static Kroll. It's basically an RSI that automatically adjusts its own period. It's an automatic adjusting RSI, relative strength index. The system enters long when the DMA crosses above 30, and then when it crosses down below 80, it'll come out of overbought. It will also exit if the price was above the 200 moving average. And so it's telling us to kind of skip to the point here. It's telling us, okay, the dynamic momentum index is what this is based off. Here's why you're getting buys and sells. If I want to learn more about the dynamic momentum index, I can come in here to the MetaStock help file, and it'll tell us how that's calculated, how to work with it, how to use it. I could Google it. I could look up Tushar, Shanley, and Static Kroll, which both of those guys were awesome. Tushar, we do a lot of demonstrations with him. He comes in, very, very smart guy, very, very good system designer as well. So the last thing I want to show you, simply because, well, I am running a little, actually I'm doing okay. I sped up to the point where I'm back up to where I'm good. But the last thing I want to show you though is like how to run a scan, because again, scanning is something that I love in MetaStock. The ability to go in and find those stocks that have an opportunity is something I do every day at least, every day the market's opened at least, sometimes twice a day, just to kind of go in and say, okay, what's going on? Because I work, you know, today I'm going to be doing the summit all day, but I've already run the scans that I want to do to kind of find. There's already a couple of stocks I'm looking at. If I want to run an exploration in MetaStock, let's say that we really liked, I'm going to go to the Explore tab again. So we talked about charting, testing, now just the scanning we talk about all the time, because I think it's such a valuable tool, because it's something that kind of helps you implement and use that. But if I wanted to find that dynamic momentum, let's say you really like that, you want to find stocks that are giving a signal for that, as long as you spell it right, you can come in here. There's that number 3 system. I run a scan. I kind of get the results that I'm looking for. So let's kind of just come back in here to the side. Again, we have a special offer that's available 32 years in a row. MetaStock's been rated #1 in its price category. That's amazing. It's awesome. And we do have 2 different versions. I'm just going to talk about it, both of them. With the MetaStock real-time version, the real-time version is going to come with basically an institutional quality newsfeed. We call it Zenith. It was developed and designed to compete with Bloomberg. If you're familiar with Bloomberg, Bloomberg's about $1,300. I think it's about $22,000 a year, about $1,300 a month. This is $210 a month. It's just including that Zenith application. Okay, the Zenith application has tons of really, really good macroeconomics. It's got fundamentals. It's got news, and we could spend a whole day talking about it. They just redesigned a new version of it that just is launching, and it's very, very cool. It's got works with Apple. You can use it on an app. It's very, very good and web powerful. So that's included, but you also get MetaStock. So it's $210 per month. If you're just interested in MetaStock because of like all the stuff that we've talked about with scanning, testing, and that kind of stuff, in our MetaStock DC is $75 a month. DC stands for delayed charts. It's going to give you daily, weekly, monthly, quarterly. You will, it's only delayed. You'll be able to look at those timeframes on a 15-minute delay basis on most exchanges. But you'll also you'll be able to go in, regardless of what platform you have, see what the chart is doing during the day, run your scans during the day, see if there's any opportunities that exist in the market right now, get a list back, look at them, all that kind of stuff. And all of that's available. It's just $75 a month. So some things that we include, this slide got a little bit messed up. Let me fit this in. Sometimes I copy slides from other slides, and if I don't do it right, it kind of bleeds off the screen. We have some bonuses. These are just bonuses that we included with the last one. Yogs, you had talked about the Ichimoku Master. This used to be an add-on that's $400. It includes scans for buy and sell opportunities for the Ichimoku. Helps you determine bullishness and bearishness. It breaks down all the support and resistance criteria, gives you current and expected future trends, helps you identify potential reversals. It used to be $400. It's just included. One of the other things I wanted to highlight is we put together a new gap identification system. So if you want to scan for gaps that happened overnight, there's a scan for that now. It includes volume verification. It's got a simple commentary that kind of helps you understand things. And it's a $300 value that's just included. Part of the software install. We just included this as part of it. Michael Murmer's very popular ETS system. It's a trend identification system. Gives you entries and exits. It's part of the software now. It's no longer something you have to buy. Dick Bernstein's going to come in a little bit later, and he's going to talk about his expansion contraction. That's a new indicator that we're including for free. And we'll talk in a lot of detail about what that is. There is a full add-on that has scanning, but just the indicator is included for free now. We'll also include training. We want you to be one of those customers that have been with us for decades. So in 10 years, hopefully you're still using MetaStock, still loving it. Lots of customers have been with us as long as our employees have. Like our average employee retention is about 13 years right now, and it just keeps going up. But we do understand it's a toolbox, right? The better you understand how to use that toolbox, the better it's going to work for you. As such, we put together a lot of training videos. These are 14 videos that are included that are going to give you chart basics, indicators, line studies, power tools, how to use them, how to use back testing, how to use some of our favorite systems, the scanning. I got tired of reading through it all, but this is kind of a listing of everything that's included with the training. We do offer a white glove installation support appointment where they'll walk you through the software. They'll show you any questions. They'll answer any questions that you've got. It's a dedicated one-on-one meeting. And of course, you do get unlimited access to our support. So anytime you have questions, you can call us, you can chat with us, you can email us, whatever is the most convenient way for you to get an answer, you can do. But they can help you with any questions or any issues that you have with the software. So again, what we're going to do, all of that stuff, I mean, just based on the inclusions of the freebies alone, it's a $1,320 value. We're going to let you do it for $75. For $75, you can get 3 months. That's about $25 a month. You'll literally be, if you set up today, you'll be running until 9:23. So if you have questions, I just realized this is wrong too.
Yeah, Jeff, I was going to mention that. I was waiting to see if you realized it. You did. Good for you.
All right. It's on an upcoming slide. Yeah, I always realize my mistakes.
I put the slide in the chat on both chats.
Yeah. MetaStock.com/summit. You can call us at 800-882-3040. You go to metastock.com/sales chat, and you go to metastock.com/summit, or just click the links in the chat. So that'll work too. Yeah. We're going to talk about a couple more really awesome add-ons. We are offering a very big discounted rate on all the add-ons that we're talking about today. Velocity, price action pivots, TST trend dealer, the red green knockout, JBXC complete. All of those would be normally $9,000. We have some brand new add-ons that have been really well received so far. Here at the event, you can get everything for $3,950. Give us a call, 800-882-3040 or metastock.com/saleschat. So, all right. As we wrap into our next speaker, I want to say thank you to Stocks and Commodities Monster Magazine. I'm going to regain my ability to talk in just a minute, but you can get a free issue of that if you go to metastock.com/traders-summit and register. All of the speakers were giving really cool bonuses today as well, so make sure you register, make sure you get that. And we talked all about this. Metastock.com/summit deal if you want to get that extended trial. If you have any questions, give us a call, 800-882-3040 or metastock.com/saleschat. Our next guest is Dan Passarelli. Dan Passarelli is a friend of MetaStock. He's a friend of mine. Dan has a really good, I like to call it, the way I like to explain it is a momentum resumption system or methodology, which for stocks that have been in a really, really good, what he calls a green run, pulls back a little bit and kind of ways to identify whether that run's going to continue. So I'm gonna let him talk about it. I don't want to spoil his whole presentation, but Dan is very smart. He does a really good job with his presentations, and we love having him on. So without further ado, Dan, how you doing?
Hey, Jeff, I'm doing great. How are you, my friend?
I'm good. I'm good. I can hear you really well. I'm going to make you the presenter real quick. Now, I think the reason you chose your brand colors is they're very similar to the Xbox colors. Is that correct?
No. No.
I thought I might throw you a little bit with something like that. I can see though all of your, I can see your slide. I can see you. You look great, by the way. And then I can hear you. So I'm gonna get out of the way. Your turn. Go.
All right. Well, hi friends. How are you today? I hope you're feeling good. And I'm Dan Passarelli, and I'm really glad to be with you right here and right now. Before we get started, I need to point out options are not for everyone. Read characteristics and risks of standardized options before trading. Get a copy of that by emailing investorservices@theocc.com, and don't trade with money you're not prepared to lose. This is my promise to you. I'm going to share with you how to easily spot high profit momentum trade opportunities using stocks, ETFs, futures, or Forex, so that your trading is completely simplified using this tested trading system that we've created for our traders that hundreds of our students have used to go from that demoralized feeling we've all felt at some time to that feeling of satisfaction and self-assurance that we all know is possible. And at the end of this presentation, I'll share how you can take the next step so that you can start getting immediate results. Is that a fair deal? What do you say? Hit that questions box. Let me know. Yes? It sounds like a pretty square deal. Let's see here. David says yes. Ari says yes. Janice says yes. Estefan says yes. William says yes. Ashley says yes. Good. Now, in order to get the most out of this, I ask that throughout this training and afterwards, make this about you. Consider turning off your cell phone, close Facebook, all your open tabs, shut the door to the room you're in, and let yourself get immersed in what I'm about to share. Let it in and let it become a part of you. And be sure to stay till the end. The most important things I will share come later. So that said, let's keep it positive and let's have some fun. This gives you an idea of who I am, what I do, some of the organizations I've worked with. I wrote 2 of the most popular books on option trading, worked with every major options broker in the US and abroad, as well as pretty much all the options exchanges in the world as well. And hey, I get to be on TV a lot, which is kind of fun. I got my start down on the trading floor of the Chicago Board Options Exchange, and I traded there for years. These pictures literally span 30 years of being involved with the trading floor. I traded some huge stocks like the Ford Motor Company, AT&T, Carnival Cruise Lines, and I traded some of the little ones that no one's ever heard of. And a little secret here, the little stocks that no one's ever heard of is where you make the big money, when you know about opportunities that no one else does. Now, I want to jump into a discovery that I've made. Does anyone know what this formula is? No? Okay, well, good, because we're not going to talk about it again during this presentation. We don't need to, and here's why. I have an extensive background in trading, but the fact is, I'm no mathematical genius. When I was a kid, I was, a troublemaker sometimes. I'll admit it. I got good grades, didn't really have to study, usually. But this is a story about a time that I should have. In my senior year of high school, in my advanced math class, instead of paying attention to the lecture, I and a few other kids would play poker. That's all we did all day, all hour long, the whole class. And man, I made a lot of money in that class. But the problem is, with math, it builds. If you miss something this week, you're lost next week, and you're hopeless the week after that. So needless to say, I didn't learn a lot of advanced algebra concepts. I crammed, I passed, but I didn't learn much. So fast forward freshman year of college, and I had to take an algebra refresher course. Oh, so embarrassing. I always prided myself on being smart, and algebra is not that tough, but I had to take a refresher. Now, one thing you might not know about me is that I was the first Passarelli to graduate college, and I almost wasn't. Here's where my story gets a little interesting. Now, I'm a competitive kind of guy, mind you. So sophomore year in college, my cousin, who is 1 year younger than me, was in my calculus class. Calculus? I was very intimidated by calculus. I was afraid that I would struggle. But more importantly, I knew that if I failed the class and had to retake it, my cousin would be a credit ahead of me. And maybe he could end up graduating before me. And there was absolutely no chance that I was going to let that happen. So I put on my A game. I was ready to work as hard as I could to win, which I'm guessing, trading's competitive. I bet there's a lot of folks here who feel that way, right? You feel that way? Yeah. But there was one other factor that came into play that was a huge saving grace. I had a great teacher, one that I could relate to. He made it easy for me to learn, and I did. I ended up acing calculus and had the honor of being the first in my extended family to graduate college. Thank you very much. Now, like I said, I'm no mathematical genius by nature. But I spent a lot of time in option trading, 30 years. And I do whatever it takes to create great trading systems for myself and for you. So I studied the math of things like relative strength index to see how they tick. And I realized there's some hidden keys within these equations that can predict when momentum is more likely to continue. Now I'm going to share that hack with you. the concept of RSI is that it measures up strength versus down strength. Too much up strength can lead to an overbought scenario, which can lead to a reversal. So there are certain patterns that can prevent momentum from burning out. And it can actually help it lead to continuation. And the pattern that I've identified is the red knockout. It is a momentum trading strategy that can lead to outsized profits. It's a simple 4-part chart pattern, very easy to identify, and the profit targets are easily set. They're actually baked right into the system. You can use it with options, stocks, ETFs, indexes, futures, even foreign exchange. Let me start by listing the steps in the red knockout system, and then we'll zoom in and we'll go through some examples. Now, this is important. Write this down. Step 1 is the setup candles. That is 3 or more green upday candles that make up the green run. If the pattern continues, we have the red knockout or the RKO candle. That's a red candle with a smaller body than the 3 preceding green candles. If the pattern continues, we have the trigger candle, which is a green candle that takes out the high of the red candle's high on higher volume. And finally, if we're ready to trade it, we see a confirmation candle, and that candle opens above the high of the RKO candle, and that signals trade entry. So let's break this down step by step and go through how it works. Step 1 is the green run. You see that here, right here, circled in yellow. So we've got 1 green candle, a 2nd green candle, and a 3rd green candle. There are 3 or more consecutive green upday candles. Now, by the way, a green candle and an upday candle are 2 different things. What's the difference? Well, an upday means that the price is up from yesterday's close, or whatever the close was for the previous candle if you're looking at it on a smaller time frame, which you can do with this as well. A green candle means that it's up from today's open. So those are 2 different concepts. Now, if we see this pattern continuing to play out, which obviously this one does, the next thing we would see is the red knockout candle, the RKO. That's a red candle that is immediately following the 3 or more green upday candles in the green run, with a smaller body than each of these 3. Okay? And it is red because it is down from the open. It might not be down from yesterday's close. It could actually even be up from yesterday's close, but it's down from today's open. Next, we would see the trigger candle, which is a green candle that takes out the high of the RKO candle. When I say takes out the high, that means it trades above the high of the RKO. And then if the pattern has completed itself, I mean, we're ready to trade because we see the confirmation candle. That candle opens above the high of the RKO. Okay, see that? So let's slow it down a little bit. This is American Express Company, AXP. If we have a red knockout setup, what is the first step we look for? You remember? Setup candles, right? The setup candles are 3 or more green upday candles in a row. Do you see that on the chart anywhere? How about right there is the first one, and right there is the 3rd one, right? One, this one is up on the day and up from yesterday's close. This one's up on the day and up from yesterday's close. So what this does is this establishes that the trade is setting up. Are you getting this? Yes? Good. Now, what is step 2? Do you remember what that is? That is the red knockout candle, or the RKO. If the red knockout candle shows up on the chart, it's very easy to identify, and it means the setup might be materializing. The RKO is a small-bodied candle, smaller body than each of the 3 green setup candles, that could open higher or lower, like I said, but the key is that it's down from the open, and thus it is red, and that it is skinnier than the previous 3 candles. So the next thing we would see is the trigger candle. So the trigger candle triggers that the trade is indeed setting up, and you're getting ready to time your entry. We call this the trigger candle because it's kind of like when a marksman is all set to fire on the target and gets his finger on the trigger, ready to take the shot. Then finally, step 4 is the confirmation candle. That means the trade setup is confirmed. It has got a green arrow. Green means go, fire away. All right, so let's look again. And now what I want to do is go over the roles of each of the 4 components of this setup, because I want you to leave here really deeply understanding exactly how this works, so that when you see one, you'll be able to trade it. Fair enough? Okay, so these 3 setup candles make up the green run. Why this is important is this sets up like a mini trend, okay? And when I say a mini trend, like having 3 green candles in a row isn't like the most amazing thing in the world. Like, you're going to see that a lot. It doesn't mean anything unless the pattern continues to play out. And if you see lots and lots of green candles in a row, well, the pattern can reverse itself. So that's what takes us to the importance of the red knockout candle. If the candle just kept having update, 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 green, 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 we would see the RSI just burn itself out. And the pattern would end up probably reversing itself. So we need just a mini pullback. A mini pullback. What's it?
Your audio had gone out for just a sec.
What?
Your audio had gone out for a second, but it's back.
Oh, okay, okay. Sorry. So yeah, this is just a mini pullback, so that it doesn't burn itself out. And obviously, if this was a red candle that, like, you know, shot down 5% or something like that, well, that's too big of a thing. We only need like a mini pullback, just a breather. And another thing that it does is it gives people a chance who miss this run to get back in. So if we've got the green run, a mini trend established, and then just a mini pullback, I mean, if it continues pulling back, well, you know, that's not any good. I mean, that's not a trading signal. But if the trend is actually continuing and we got the trigger candle, now it's like, okay, I might be ready to get in on this. But we always want to have a confirmation that that move is continuing. And so what we do is we, on the next day, and I trade on daily candles this, but like I said, it can be used on any time frame. When the market opens above the red knockouts high, that's when I get in. I tend to get in right there on the open. 1, 2, 3, go. So let's run through several examples now to see how this plays out in real life. This is Erie Indemnity. First of all, is there an RKO set up on this chart anywhere here? Do you see one? Nice work. There is the first one in the series, and there is the 1, 2, 3, 4, 5th one in the series. Remember, it could be 3 or more green update candles. Wow, so this is like a pretty strong mini trend here, right? And then we have our RKO, which is actually an update, closed above yesterday's high, but it's got a very, very small body. Then we have our trigger candle. Okay, trend is continuing. We got the breather, so more people are getting in and they're giving it more momentum. Momentum, momentum, momentum. I'm getting ready to take my shot here, and 1, 2, 3, fire. There is my confirmation candle. And if we follow our profit target rules, which I want to go over in a second, we would take it off right here. Okay. Like I said, the profit target rules are baked right into the system. Now, how about here in CAT? Is there an RKO set up here anywhere? Look closely, do you see one? There's the first green update candle, and there's the third one. Good job. And we call this the green run. So next comes our red knockout. And why is it called the red knockout? Because like I said, in any trend, it's healthy for it to have a pullback, just enough to enable traders who missed the green run to get in, provide some follow through. So the red candle just gets knocked out of the pattern. And we look for continuation, and that's just what we get here. We get the trigger candle, we wait one more day for the confirmation candle, and we get in on the open. We prefer to time the entry close to the open on the confirmation candle. Why? Because not always, but anecdotally, I would say most of the time, we get follow through to the upside on the confirmation candle. Not always, but more often than not. So it gives us a little bit of an extra edge. Then we have our profit target set. And when we reach this, which actually happens to be just the next trading session, so this is like a quick in and out, nobody gets hurt type profit. I love it. Now this is APEI stock. If we look here and here, this is 1, 2, 3 setup candle in the green run. It's followed by a classic RKO, smaller body, little teeny weeny pullback. It is engulfed by the previous green candle. We like it when it's not on a lot of volume. I'm going to start to kind of build on this to give you more little hints and tips and clues. We like this one on smaller volume, but the next one, the trigger candle, we like to see that on higher volume. We like to see, because higher volume means more conviction. So we definitely like to see that. And then this opens above the high of the red candle, even though it's a doji. It's still very tradable. That is a confirmation. 1, 2, 3, go. So what I like about this stock in this example is that at the time I took the screenshot, it's just an $11 stock. Folks who don't trade options can just buy the shares. Though the options in this stock were liquid enough too, if you want to use the leverage power of options, but you can do this with stocks, options, futures, anything. Works on anything that you can get on your MetaStock or whatever charting. The RKO indicator works in all time frames. It's very versatile for day traders, swing traders, short-term traders, even long-term investors. when I worked on improving what criteria to use for the setup candles, the red knockout, the trigger candles, and the confirmation candles, I spent a lot of time on it. It was a really great and humbling experience. And it reminded me of my old boss, Steve Fawcett. You see two people here, right? One of them, one on the left, of course, is Sir Richard Branson, and the other one is Steve Fawcett. For those of you who don't know Steve Fawcett, the late Steve Fawcett, he was not only a famous trader, but also a famous adventurer. He held many world records. He attempted to set one flying around the world in a hot air balloon with Richard Branson. That's why he's in this picture here. And I remember one day, Steve took all of his traders out to dinner. There were about 45 of us. And after dinner, he asked us, why do you trade? And it's not about the money or whatever. The real reason. Why do you trade? Because as floor traders, standing all day long, by the end of the day, your feet hurt, your back hurt. There are people yelling in your ear, getting their spit on you when they yell. Why do you trade? What's your real deep-seated reason? Is it to have more freedom to take time off and play golf or whatever? Or is it to secure your retirement? Or to put your kids through college? And that stuck with me. So I ask you, hit that questions box for me. What is your reason for trading? Please share. Please take 1 minute and share what is your reason for trading. What is your reason for trading? And no, Michael, we don't do this across earnings. What is your reason for trading? Ashley says pay for kids' college. Excellent. Dennis says retirement. Excellent. Anybody else? Good. Just throw something in there. What is your reason? Why is trading important to you? Why is actually making trading work important to you? Fred says, give to my church. Great. So now look, Steve Foss was a great mentor. Without having him in my life coaching me, I could not have become the trader that I am today. But there was one thing that Steve was known for saying: I'm still learning. When I met Steve, he was a gazillionaire, super successful trader, but he was always tweaking his process, always learning, always moving forward, always making his trading better for himself and his traders. And man, I'm thankful for that because I was one of his traders. He kept improving always. So I also started the process of improving, and I worked on the exit point now. So here's how that works. Setting these price targets, it's actually really easy. Here's how the price target's calculated. We're looking for a repeat of the green run after the RKO candle. Think of it as like a teeter-totter. If it goes up this much in the green run after the RKO, we want to see it go up that much too, but we do it a little bit differently. We don't want to be too big of a piggy. We want to log more wins. So here's how we measure it. We take the low of the first green setup candle and subtract that from the high of the last green setup candle. And then we take the sum of that range and multiply it times what I call a haircut. Meaning we'll take maybe 70% of that range, 80% of that range, 90% of that range. Because like I said, we don't want to be a piggy, right? If it went up $10 in the green run after the RKO, maybe, hey, if it goes up $7, I'll take my profits there. So we're going to take that green run range, multiply it times the haircut, so a little less, and add that to the high of the RKO candle, and that is what sets my exit price. This is very, very simple risk management. Immediately after buying the stock, set a profit-taking order, good till canceled, and set a possible stop loss, good till cancel also. If you do both of these, we're going to do them OCO. One cancels the other. That prevents you from, you know, selling for a winner and then also selling more, right? You don't want to do that. Now I say a possible stop loss because if you're trading stocks, yes, you're going to use a stop loss. If you're trading options, just buying calls, yeah, you probably use a stop loss. If you're trading spreads, which there are times that you will do a spread, I actually show you in a later video how to do that. I'll tell you about that in a second. You would use a different method and not a stop. But here's the idea. We got the setup, green run, red knockout, trigger candle, confirmation candle. We got our price target. This couldn't be easier to do. Work the system works. I want you to leave here today with all the tools that you need to be massively successful with this. And well, you know, I bet you do too, right? Would you like me to share with you what we've discovered makes RKO trades even better? Would that be okay? Yeah. Here are a couple little hints. When a short-term moving average crosses above a long-term moving average, and when the RKO pattern goes through one of those moving averages, that adds extra credence to the RKO thing. When the when the RSI is rising, it makes it a stronger signal. Here's just a couple little tips for now. So, in summary, there are a few important takeaways. Momentum trades can yield outsized profits, and this is a time-tested system. So, what we have here is we have the setup candles, the red knockout, the trigger candle, confirmation candle, and the profit target. This is very easy to identify and see on a chart. But there is a problem. Do you know how many stocks there are to trade? There's 6,366 stocks to trade. Let's say, well, you don't want to miss an opportunity, right? So let's say you went through every stock in a day. And I don't know, this pattern's pretty easy to spot. Let's say it takes you 45 seconds to spot an RKO setup on a chart. If it takes you 45 seconds per stock and you go through 6,366 stocks, it would take you around 80 hours a day to go through all the opportunities out there. And that's only looking at one time frame. You don't like missing opportunities, do you? There's got to be a better way, right? And I bet you know that. You wouldn't be here right now if there wasn't a better way. So, are you ready for it? The RKO system is here. Over the past 4 years, we've created both a scanner that would easily identify RKO trades as well as the indicator that displays the pattern right on the chart, along with the price target. We wanted to make it so simple that it's impossible to mess up. So you now have a new opportunity to easily scan for top momentum trades that you would not be able to find without the scanner. And with over 6,000 stocks out there, it's almost impossible to just happen to come across one of these great setups. But with this easy to use 3-step scanner, it makes it possible because I have made the investment for you. You see, I know what it's like to struggle as a trader in the market. I do. I have had the pleasure of training thousands of traders. I wanted to develop a scanner that made it very easy to find profitable trades with great potential. And even for myself, before creating the RKO system, I came across one of these setups maybe once every 6 months. I would miss opportunities, but finally, I have invested both the time and the money to develop this simple, easy to use scanner so that you can harness it in just 3 easy steps. Imagine what your trading account would look like if you could sit in front of your charting software and have a powerful trading tool that identified both the trade entry and exit points in just seconds. Imagine if you could block out all the noise in the market and only focus on trades that have been identified for you. What would that mean to your trading business? Well, that's exactly what the RKO scanner does for you. These are some examples of trades, both entries and exits, identified by the RKO scanner and displayed by the RKO indicator. On the left, these are stock trades, and on the right are option trades. So on September 18th in BBU, who out there trades BBU? Nobody out there trades BBU. But with this, you would have seen this trade and been able to jump on it. On September 18th in BBU, a stock trader could have bought the stock at $21.89 and 7 days later sold it at up to $23.93. That's a 9.3% profit in just 7 days. On October 16th in GLD, a trader could have bought the ETF at $247.15 and sold it at up to $253.06, locking in a 2.4% profit in just 4 days. Annualize that, do that every 4 days, right? Let's look at the options. In MGM, a trader could have bought the October 37 calls at $1.59 and sold them 7 days later at $3.30, locking in 107.5% profit. To make that more tangible, if you bought, say, 5 of these calls, you would have made $855 profit on just that one trade. And that's just hitting the haircut profit target that was set. If the trader held on to this longer, or even took half the profits at the initial profit target and let the rest run to September 27th this time, the profit could have been over 170.4%, or up $1,355 on that same 5 lot. Holy cow. Look, even if you make, say, 3 of these trades a week and your results are half as good, how much impact can this have on you and your family's financial future? It is time to start getting the results that you deserve. Look, this is Nick. Our head coach, John, who's a brilliant guy, ex-Goldman guy. John and I shared with Nick what we're thinking. Nick was the first human ever to see the RKO indicator. And in fact, he was extremely instrumental in helping us. Nick said, using scanners, in particular the RKO daily, helps me find trades when I'm busy or might not be fully locked in the market. I run the scanner and do the checks and decide to take the trade or move on. It only takes a few minutes and helps me find the best trades consistently. What do you get with the scanner? Well, I want to invite you to join us and start using the RKO system right away. So first, you're going to get the red knockout system. You're going to get the red knockout scanner. So every day, you'll be able to have a list of all the RKO trades that are available in the market. This simple scanner searches the universe of over 6,000 stocks for the setup and makes it possible for you to find trades you'd never have access to without it. For you to profit with the RKO system, I need you to know how it works. So I created a video training course that shows you step by step exactly how to install this on your platform, how and why the RKO system works, how to set up the trades, the filters and cross scans to optimize the strategy, and of course, the targets and the trade management. So what this means is first you're going to get the red knockout system, and then you're going to get the RKO Accelerator video course. Now I can put these tools into your hands. I can tell you how to use them, but I know for me, I learn faster when someone shows me exactly how to do it. So the best thing I can do for you is to give you hands-on training. Every Friday for the next year, one full year, you are going to attend our online live group coaching class and watch John Kamisic set up RKO and other trades right there while you watch. John is formerly with Goldman Sachs, First Options of Chicago, Lind Waldock. He traded for a hedge fund and is the expert on the red knockout. In fact, he helped me develop it. He is just the kind of person that you want to listen to. But I wanted to make sure that you hit the ground running and get hands-on training to start getting immediate results. This is what Dennis Meitzel from East Peoria, Illinois said. He said, "Thanks, great class. Exactly what I was looking for. The class gave me a lot of insight into options and the Greeks. I'm a fairly new trader, but I've been putting in the work to move my skills forward." Look, this is what he said about group coaching. How would it feel to have top picks selected by John Kamisic, an ex-Goldman guy, every single day, right? Or at least every Friday. So what this means is first you're going to get the red knockout system, then you're going to get the RKO Accelerator video course, then you're going to get the weekly group coaching. This is a $5,247 package, by the way. You mind if I over-deliver? What I really want is for you to make as much money as possible trading the RKO, and I imagine you do too. So every day we're going to rank the day's RKO trades and list them out and give you our top RKO picks so that you can see what we think are the best of the best. This is the RKO watch list, and it is a $1,297 value. Plus, John will add a bonus trade every day from his daily group coaching class so you can diversify your trading and get all the top trades of the day by simply clicking one link to access your curated watch list. So what this means is you're going to get the red knockout system, that's the scanner, the RKO Accelerator video course, the weekly group coaching every Friday, and the RKO watch list. Now, finally, and this completes everything you need to make the RKO simple to trade. With the RKO indicator, we literally put the arrows right on your chart to show you the trigger candle, confirmation candle, even the exit price. So all the information is laid out for you. This could not be easier. So you're going to get the red knockout system. That's the scanner, the RKO accelerator video course, the weekly group coaching, the RKO watch list, and we're going to put the arrows right there on your chart. Plus, you're going to get updates every time we optimize the strategy to make it better for 1 full year. This is a $7,541 value. RKO works on the following platforms: MetaStock, Thinkorswim, NinjaTrader, TradeStation, TradingView. Now you may have noticed the red knockout trades, well, they're all for when the stock's rising, right? And for that reason, they do tend to work better in bullish markets. But the market doesn't always go up. And not all stocks always go up. In fact, some can have some pretty big bearish moves. And so I created the green knockout to double your chances of success. So today, you'll get both the red knockout and the green knockout. So you'll have the tools you need to trade any market up or down. So what that means is you're going to get the red knockout system, the RKO accelerator video course, the weekly group coaching, hands-on training right there, the RKO watch list, the RKO indicator, and you're going to get all this stuff for the green knockout as well. Buy now. You can see why the RKO trading system is a steal even at $10,041 in value. If all this did for you was identified trades that had 107.5% profit or 180% profit, even 25.1% profit, the question you need to ask yourself is, would it be worth it? Yeah. But you're not going to pay $10,041 today. Because you have made the investment on being here on this live training and for being one of my action takers, you're the elite. You're better than millions of other traders out there. And I want you to have the results that you deserve. Get started today for a one-time, small, easy investment of only $997 by going to metastock.com/RGKO. 1, 2, 3, go. That's MetaStock, right? metastock.com/RGKO. That's red, green, knockout. But to get all these bonuses, including the green knockout version of all this, to maximize your success in any market condition, you have to be one of the first 22 new members today, and you have to take massive action by going to metastock.com/RGKO. 1, 2, 3, go. Now, just to recap one more time, when you open your browser and go to metastock.com/RGKO and sign up today, you're going to get access to the red knockout scanner that is going to identify trades with the entry and exit points. On top of that, when you're one of the first 22, you're going to get instant access to the RKO accelerator course to get you up and running right away. You're also going to get access to the weekly group coaching, where we go live into the market together, and you can see exactly how me and John and our team use the scanner to generate profits in the market. You will also get access to the RKO watch list with our top picks of the best trades that John and I are looking to trade with the scanner. This way, you have the best opportunity to generate profits from the scanner by following the exact trades that I am looking to place. Further, when you open up your browser and type in metastock.com/RGKO and lock in your RKO traders package, you will also get access to the RKO indicator itself. This way, while we're coaching you in the live market each week, giving you access to my top watch list, you will also have access to this powerful indicator 24/7 across multiple markets to take full advantage of this great and easy to use indicator. Also, as we run more tests, do more tweaks, as the RKO continues to evolve and we get it performing even better, you will get automatic updates for a full year to both the scanner and the RKO indicator. Now, lastly, when you join us right now, you get the green knockout. You'll have the confidence of knowing you can trade any market up or down, but you have to take action today, right now, and be one of the first 22 new members. Now, I've been talking for about 50 minutes, so I'm going to invite you to type in your questions in the questions box so that I can answer them to help you make the decision to come and join us. While you're typing your questions in the questions box, I'm going to give you another alternative. You can also call 800-882-3040. 800-882-3040. Let me tell you one more time. 800-882-3040. You can call and talk to the MetaStock team, and they can answer your questions, help you out, and get you in at this discounted rate. Before I answer the questions that are in the questions box, thank you, friends, for typing your questions in already. I appreciate that. What if I can't properly install it? You can. It's easy. I literally send you a video, step-by-step instructions on how to install it and how to use it. Is it time-consuming? No. I know you're busy. Many traders have a busy schedule. I've designed RKO so you can literally trade the system in about 60 seconds per trade. What if I can't figure it out? You get a video tutorial plus hands-on training live every Friday morning. Speaking of every Friday morning, what time is that weekly group coaching, Dan? Well, it's live every Friday from 9 to 10 Central Time, which is 10 to 11 Eastern Time. Your most important hour of the week. And the class is recorded in case that time is not convenient. Now, another frequently asked question I get is sometimes people say, Dan, this is exactly what I'm looking for. I trade momentum trades, but I need to just be able to do a search and to have them pop up on my screen to save myself time and make this easier. I love this, but Dan, I have a hard time coming up with the $997. Is there a way to finance this? And that answer is yes. We have a deal with PayPal to offer you both PayPal as a payment option and PayPal credit. So you can lock in the red knockout today when you check out using PayPal and just choose PayPal credit. All you have to do is, well, do the same thing. Go to metastock.com/RGKO and click the PayPal button to get started right now. So I'm going to answer some questions. Paul, hi Paul. What period of RSI are you using? So I'm able to skip the RSI because this actually works better. I don't even need to use the RSI. I use this instead. Oh, Franz says, how much is the RKO in the second year? We can give you a discount the second year. Well, this is already a massive discount. This is a 90% discount. But if you roll over to a second year or do that now, we can give you half off the 90% off for the second year. So a total of around, what does that come out to? $1,500 or something like that. Just call 800-882-3040. We might have to do something special for you, but I mean, Franz, just do this. Sign up for the first year and we'll get you taken care of for the second year. You can just message me personally or Jeff and we'll come up with it together, okay? So just sign up for the first year now. Okay, we probably have time for a couple more questions, but I do want to make sure that you have the number, metastock.com/RGKO or 800-882-3040. Or if you just like to talk to people on chat, you can go to metastock.com/sales chat and just talk with one of the sales guys. They know all the answers to all this and they can get you signed up right then and there. I know, some people, they just like to go to the website. Some like to talk to somebody on the phone. Some people prefer to chat. Here's all your choices right here. metastock.com/RGKO, 800-882-3040, metastock.com/sales chat. Pick one. Okay, do we have any further questions before we call it a day? Any further questions before we call it a day? About how many signals do we see a day? Great question. So it depends on the day, right? If it's just a really slow day, like the day after Thanksgiving and the market's not really going up or down, yeah, it might be a couple. If it's a really strong trend heading up, up, up over the past few days, you might see several. You might see 5 or 10. If it's in a downtrending market, you might see 2 or 5 or 10 GKOs. And the really best part is, on any given day, you'll probably see some RKOs and some GKOs, which helps limit your market risk because you could be long some stocks and show some other stocks. Yours just says, can you show the PayPal credit slide, please? Of course I can, my friend. All you got to do is go to metastock.com/RGKO or call the sales guys or go to sales chat. All right. But, once you get into PayPal, you can just choose PayPal credit. Okay, great. I don't know, Jeff, was I supposed to end a couple of minutes early for you to give away your prizes and all that business, or do I have time for another question?
We're totally fine. I think the last question we've got is, do you trade across earnings? Do you avoid earnings?
Oh yeah, great question. Yeah, I see that from Michael now. We avoid earnings with this. We do have a system where we trade earnings, but that's something completely different. With this, we avoid earnings and just follow the momentum and not playing an event. Yeah. Very, very, very good question, my friend.
All right. Very cool. Let's see. Do you do options? Can you do options with RGKO?
Yes. So the pattern sets up on the stock chart, just like any other option trade. But we do options, and in the accelerator videos, I show you exactly which options to choose and why, when to do spreads, when not to do spreads. Usually you don't do spreads. Oh, I see Michael followed up. Dan, that's a lot of missed up candles and higher option price on entry. Yeah, right. I mean, Michael, if I had a crystal ball and I knew, oh, today's the day the trend is going to start, like magic like that, hey, you know what? That's what this presentation would be about. But I don't. So look, your job as a trader is to take money from the market, not to predict the future. That's not your job. That's not my job. It's to consistently take money out of the market. So we're not trying to capture the whole trend. There's no system that does that. We're trying to capture the part of the trend that gives us the highest probability of success. And that's the haircutted after the RKO. So yeah, very good question. Great question.
All right, very good. Let me kind of talk a little bit about how to get this. You already did a great job. Thank you very much, Dan.
Thanks, Jeff. Thanks for having me again.
Of course, every time. All right, let's go ahead and do this. And actually, in relation to the question we just had about whether or not you could do options, one of the things I love about MetaStock is the commentary. You can see right here on this screenshot that I took, if you're looking to take advantage of this trade, you could consider buying the 65 to 35 delta puts with at least 15 days to expiration near the open. Profit target set at, oops, that's not advanced, 87.44 using a 90% haircut. So very specific, tells you how to do the options if you want to do them. And of course, you could also buy and sell the stock. So it does include the indicators necessary, the expert advisor, the commentary, the template, and of course you can scan. You can scan for the entries, the triggers, whether that's the bullish entries or the bearish entries, whatever you're looking for. And again, with the new DC updates that we provided for free to everybody this year, you can even scan real time, or not real time, but intraday. You can scan during the day. I'm trying to find the right terminology to say it right. Even with DC, you can scan during the day to find entries for today. You get a 15-minute delay with DC. With real time, of course, you can go real time, but all this scanning can be done during the day, so you can find opportunities right now, which I love. I love scanning and just being able to kind of identify those opportunities. Dan was really good to kind of point out all of the stuff that's available here at the webinar. It's going to be a $997 price. That's going to include the course, the 12 months of coaching, the red knockout, and if you need it, we'll give you a free trial to MetaStock. So to do that, 800-882-3040, metastock.com/RGKO, and we'd love to talk to you. If you have questions, let us know, metastock.com/saleschat. So in any case, it also is part of the big promotion that includes like Rahul Arora's new Velocity add-on, the price action pivot toolkit from Jeff Tompkins, the TST trender, the red green knockout, JBXC, which is going to come up in just a minute, Oscar Carboni's trading program, the trend lines and toolkit, 3 months of our MetaStock. All that's normally like $9,000. At the event today, you can get a huge discount, $3,950. All of the non-subscription stuff has a money-back guarantee, so you can try it with very, very little risk. 800-882-3040 or metastock.com/saleschat. So before we run to the next presenter, I want to kind of just mention the Traders Forum. Traders Forum is a great sponsor of MetaStock. It's a really good website. You can go up there. We just got our 1,000th member. We're at, I think, 1,003. There you can kind of learn about candlestick patterns, technical analysis, indicators, methods, all kinds of stuff. You can chat with other traders. There's just tons of resources up there. And you know what? All that stuff that I mentioned is free. So you can do that at thetradersforum.com. Of course, we are MetaStock. We've talked about MetaStock quite a bit. If you just want to try MetaStock, maybe you want to see why it's been rated #1 in its price category for 32 years in a row. If you buy a month, we'll give you the second and third month for free. It has scanning, testing. We talked quite a bit about testing trading ideas to see what works just a few sessions ago. If you haven't tried it before, for $75, you can try it for 3 months. That's $25 a month. That'll get you run until September. Metastock.com/summit deal. You can call us 800-882-3040, or you can go to metastock.com/saleschat. You should try it out. There's a reason it's been rated #1 for so many years. Our next guest is Rahul Arora. Rahul has also been a partner of MetaStock for a number of years. He does a lot of work with Vince Vora with tradingwins.com. And he's going to talk about a methodology that he's designed that can kind of help you find stocks that are in really long persistent trends. So Rahul, let's go ahead and get you started. How you doing?
I'm good, Jeff. How are you?
Good, except for I can't speak very good today.
You've been on here since 10 in the morning, right?
Yeah, but I'm used to 40 hours. Like it's not a big deal. I shouldn't be losing my ability to enunciate just yet.
That's okay. When was the last time you had a real job where you didn't have to be camera facing and things like that?
Oh geez, I think, let's see. Well, I was in the
That's a great
military. Does
question,
that
Jeff.
count
When
as
is the last time you had a
job?
real job? I also want to know that. Last time you had a real job.
There wasn't phones? Internet? I would say that was the military, probably where I learned how to count pills for the government.
Really?
Yeah,
Didn't know that
yeah.
about you. I didn't know that about you.
There you go. I
Yeah.
consider this a real job, though. It kind of keeps me busy. Anyway,
Oh, that certainly does.
I can see your trade journal.
Okay.
And Lewis says, "Go on, Rahul. This is Luigi. We are here to support your presentation."
Louise is wonderful. And I also wanted to say a very big hello to our friend Michael Bryden. Michael has been attending these webinars regularly. I think I feel like Michael takes this as a bit of a part-time job here. Michael, great to see you. Luis, thank you very much. Thank you, folks. Jeff, thank you for that lovely introduction. As Jeff mentioned, Jeff and I have known each other, I think we met in 2012, 2013 or so, through Vince, my business partner, and we became friendly. And then, of course, Jeff offered us the opportunity to work with MetaStock, and we're so grateful to him for that. We've designed a few systems along the way. We started with our favorite trade setup, which was based on engulfing patterns, and we went on to the winning momentum strategy. From there, we did veracity, and we now have velocity. Actually, we did victory in between. That's Vince's most recent system, and now we're on to velocity. So as markets change, we feel that we need to adapt to the markets and have systems that are more sensitive to either volatility or to big movements or to markets going sideways. So as markets are evolving, so are we. So we get this question once in a while, like, hey, if that system works so well, I'm just gonna move this camera over a bit. If this system works so well, why not continue using it? And the reason for that is because markets keep changing, so we feel like we need to keep changing with them. Just let me know. I'm going to pull up the question panel here. Let me know if you can see my screen, which should have a chart of the NASDAQ ETF, the QQQs.
I will let you know we can see it.
You can see it, Jeff?
Yes, sir.
All right. Yeah, so now I'm going to pull up the old velocity presentation here, which hopefully you'll be able to see as well. You probably know that president, but let me go back a couple of steps here and start with me. A little bit about me. My name is Rahul Arora, and for the last 12 years, Vince Bora and I, we've dedicated ourselves to taking average everyday investors and helping them become millionaires through investing and trading. That is our goal. That has been our beacon that we've been following. And we're looking to find every single edge that we can to help our members get to that level. As I mentioned, we had created our favorite trade setup, veracity, victory, winning momentum strategy, and now the velocity system. I've been trading independently since the year 2000. Prior to that, I was asking Jeff, when was the last time he had a real job? Last time I had a real job was, I'm just going to open up my Diet Coke. It's not Miller time just yet. Last time I had a real job, I was actually a CPA. So graduated from university, joined a Big Four accounting firm, got a lot of really great experience through the accounting firm, learned a lot about business. And I would go into these businesses that had the most niche type of product. I'd go in and say, hey, what do you do? We make bottle caps. Oh, okay, you make the bottles and the caps? Like, no, all we do is we make these caps. I was like, how do you create a business out of that? I was like, yeah, we're doing about 20 million a year just making bottle caps. And when you look deep inside these businesses, you get to learn about PE ratios, you get to learn about churn, you get to learn about all kinds of stuff that I didn't think was relevant to me at that time, but now that I'm assessing companies from a fundamental perspective, all that stuff, if I feel like we have an advantage because we understand some of that stuff. Now, with AI, YouTube, all that stuff can be learned, but to be immersed in it for 7 to 10 years, that's the kind of education that's hard to get in a short amount of time. It's the experience that it's hard to equate. So I'm trading on my own. I'm at the accounting firm, trading on my own. I'll start trading options. The options industry at the time, certainly not as active as it is now. There was no Robinhood back in those days. You had to pay $7 for a trade and be thankful that it was $7. So I'm learning this business, and no YouTube at the time. I think YouTube started in 2004. No YouTube, so I'm going to the library, getting books. I'm going to the bookstore, buying books. And here I'm reading the Wall Street Journal, and I figure, I know options. I know I can read a chart. Well, I managed to turn my $10,000 portfolio very quickly, I might add, into about $1,600 because I was playing earnings. I was doing cash secured puts. I was doing all kinds of stuff. And this is, if I can provide a little bit more context, this is right in the .com era. So eBay would move up 30 points in a day. And it's like, now is the time to get in. Of course, the next day, what would happen? It's down 28 points. It's down 32 points. It was just so volatile. But I learned a lot. And I think the market has this way of teaching you. And if you become overconfident, the market has a really, really good way of teaching you a lesson. And those lessons, if you can learn from those lessons, you will do okay in this business. It's really hard. I won't lie to you, this is really, really hard. To be consistently profitable in this business is very difficult. It took me years and years, decades, to get to the level that I'm at now. And our goal is to share all of that with you and hopefully reduce that learning curve for you so that you can become more profitable a little bit more quickly. That handsome guy there is Vince Fora. I met him in 2012, and he took me under his wing, and I'm forever grateful to him because he taught me what technical analysis is all about. I was focused on fundamentals, I was focused on ratios, I was focused on company outlook, growth, reading Wall Street Journal, CNBC. All of those things have their place, but it wasn't the strategy that was working for me. So Vince took me under his wing and said, let me teach you about technical analysis. From there, we started this beautiful business where we can now help people learn the same thing, except do it in a much faster and much more efficient way. And of course, the last 3 years, you know about AI and all of that stuff. All of these things have become wonderful tools for investors and traders. I wanted to mention before I go on, I'd like this to be an interactive session. If you have symbols that you'd like me to look at when we talk about the system, and I'd like to spend 40 minutes talking about the systems. I'm not going to sell you anything. I'm going to hand all of that stuff over to Jeff because he's much, much more capable at doing that than I am. So I'll hand that stuff to him. I'll go till about 3:50 p.m. Eastern time. And if you have questions along the way, if I don't see them, please send them to Jeff. And Jeff, please interrupt me if you do have questions. I'd love for you to ask questions as we go. Let's make this as interactive as we can. Guy on the right, Vince, you know. The guy on the left, you probably know him too. That's Jeff. That's us at Wrigley Field. We were just starting to work together. And as I mentioned, a lovely, lovely time. This market is a little bit different than the market that we had last year. I'm sure I didn't need to tell you that, but this market is much, much more news driven. And a perfect example of that was what happened over the weekend. We get this news that comes out of the White House that there was some geopolitical tension in Iran. And to be honest with you, when we did our nightly video, which we do for our clients 5 nights a week, I honestly thought that the futures would open limit down. And the futures opened pretty flat, if not a little higher. It's very, very hard to just stick to technical analysis or fundamentals or looking at unusual options looking at those things in a vacuum and not putting everything together, I think you're asking for trouble. What I also want to emphasize it here is you need to have a proper type of protection on any position that you have in this market. As I mentioned, this market very news driven, being heavy on one side, being heavy on one stock, being heavy in one Forex pair. One bit of news can blow up your position and maybe even blow up your account. If you've listened to any of Vince's teachings, he's got a wonderful money management system that he teaches, and we actually practice that with our clients. And a lot of this is just about discipline. You can be the best trader, but if you're not disciplined, you're going to lose. It's a fact. And Dan Passarelli, the speaker before me, was saying our job as traders is to take money from the market. We don't have to be right all the time. We have to be right enough of the time that we take more money out of the market than we put into the market. I don't want to spend a lot of time on these slides. I think most of you know that trading blind is certainly costing you money. You need something that has somewhat some predictive power. In addition to the predictive power, you need to have a structure for your trades that when you lose a little bit, but when you win, your upside is unlimited. And I think what you're going to find, and what you probably have found, and let me know if this has been a problem in the past. We had asked this question to our group. What's more difficult, finding a position to get into or knowing when to get out of a position that's profitable? And 60% of the people that voted, 60, so more than just that 50-50 that you'd get randomly, 60% of the people said it's much more difficult to know when to get out than how to get in. Because as soon as you get out, and I'm sure you've had this experience, you think the market is really working against you, because as soon as you get out, it shoots right up and it keeps going, and you think, oh, geez. What you should be saying is, followed my rules, made my 20%, 30%, 8%, whatever the number is, followed my rules, and I'm going to do it again. The goal here is to be consistently profitable. Anyone, you go on Wall Street Bets, and you're going to see these kind of things. Now, this is part of the loss porn, and I wanted to show you what can happen if you don't follow strict money management rules. But Wall Street Bets and Reddit in general, social media even more in general, has made it feel like investing should be gambling. Investing should not be gambling. Investing should be more like card counting. If you're going to gamble, you should have an edge. Otherwise, you should not be in a trade. That edge can come from a few things. You've pored over financial statements. You've talked to, and I remember when I was in my auditing days, average everyday investors would actually call the CFO. Average everyday guy off the street, Joe Street, Jane Street, they would call and they would say to the CFO, hey, what are your plans for next quarter? What are you doing? And the CFO at that time it was a small biotech. And the CFO at the time was also working as the investor relations manager. And he would have these conversations like, hey, this is what we're planning. This is the drug that we're going to release. Here's where we are with FDA stuff. So that could be your edge. You're calling, you're finding out, you're in the trenches with what a company is doing. You're looking at insider buying. That's another thing. You're looking at insider selling. That's another thing. On the other side, you're looking at strictly charts. You're looking at price action only, and price in the end is the thing that pays. How you get there is somewhat of a choice. What we do is we try to combine all of that. So we've got a bit of the fundamental analysis. We've got a lot of the technical analysis. We look at the insider buying and selling, and we look at unusual options activity as well, because as the options market has grown, so has its influence on the overall market. We add to that a little bit of a volatility flare to make sure that if we're heavy on the long side, and if we get an event that's unexpected, that we have a bit of a hedge. If we're heavy on the short side, we've got somewhat of a hedge that if things go against us, we're somewhat protected. And we talk about and we do all this stuff, and I'm going to show you on our spreadsheet that we've been following for this year how we've been doing that. So we've talked about this. What if you could predict? It's not a lagging indicator. Software, I talked a little bit about how this was born. And what we wanted to do was take everything that I've just mentioned and distill that and bring that into one indicator that we programmed on MetaStock. We called it velocity because speed has certain advantages that consistent growth doesn't. And we're going to talk about all of those things as I bring up my charts here. Any questions so far? Let me just go to the control panel. Okay, nothing, I don't see anything yet, but please do ask questions if you have them. All right, so as I bring up the MetaStock platform here, let me get this out of the way. What you will see on the MetaStock platform is a chart of the QQQs. And you're going to see a few things. That red line that you see is a simple 20-day moving average. In this case, we're using a daily chart. You could certainly place that on a 5-minute chart, on a 10-minute chart. We're going to focus on the daily charts today, but the way we designed the system, we actually have 2 of them. So one is for swing trading and one is for day trading. The difference is that the day trading one is a little bit more sensitive to the intraday movements of each security. Okay. You'll notice that these bars are all colored green. Then we've got a set of bars colored red, and then we've got another set of bars colored green, and then we've got this small area in between that's colored black. Okay. If I compress the chart a little bit, and if we focus in on this area here in October, November 2023, you will see this area here that is a short. Okay. What our intention or driving force, the driving force behind the system here was when we have losses, we want to keep them small, but when we have gains like this, we want to let them go, and we want to have enough that they overcome these small losses. So here, our close is at 345. The exit gets painted here at, what is that number here? I call it 360. So 15 points, okay? When we get this long here, and you're going to see a few different notations here. So we have a long plus, we have a regular long, we have a short plus, and a regular short. The plus notations indicate that there is an additional parameter that has been met for that particular entry. The exits do not have a plus or minus because when you get to a stop loss, in the way I trade, I don't need a plus or minus. I know that my stop loss is hit. I'm going to show you exactly the way I set up my stop loss. My stop loss is hit, I'm out. That's the end of that trade. So let's focus on this trade here. Okay, there's a 20-day simple moving average. Again, nothing special here. I'm just using it as a guide. You can put on the 50 if you want. You can put on the 200, whatever makes you comfortable. It has nothing to do with the actual system itself. So we get this entry here at a close of 367.51. Okay, I don't need to see a breakout. I don't need to see a break above the entry. I don't need to see any kind of follow through. I don't need to see a close above. What I would like to see, what I would prefer to see, is that it takes out a previous high in the same direction as the trade. Okay, So let me say that again. I want to see, to increase my chances of success, I would like to see this bar here, or my entry, take out a previous high that's clearly defined in the same direction of the trade. Okay, so when this entry comes, the close here 367.51, the previous high comes in at 373.54. Okay, if I take this trade here on that long plus, I already know that I've got a tailwind behind me, and my chances of this trade succeeding are better than, for example, this trade here. Obviously, it's a short. I wouldn't take a long trade, but I know that the programming in the background has calculated all the things that it needs to flash along here. If I want to be extra conservative, if I want to be more conservative, and Luis will know this as an accountant, as a CPA, the first thing you're taught when you're learning about professional accounting is the principle of conservatism. You always want to be conservative. Now, if you're a little bit more risk tolerant than I am, so on a scale of 1 to 10, with 10 being extremely risk tolerant, I would say I'm probably near a 5. And I think a lot of that has to do with my stage in life, how old I am, how much responsibility I have, kids, mortgages, bills. I can't be like the 23-year-old that has come into some money somehow and is willing to YOLO it all on one thing. That's just not my style. It's just not comfortable for me. If you're a 23-year-old watching this, that may be comfortable for you, and I say great. If you can tolerate that, go for it, because with risk comes reward, but with risk that's not managed comes ruin as well. So just keep that in mind. Let's go back to this November 3rd trade here. So do I want this entry at 5 out of 10 on a risk tolerance level? I'm going to say I'm going to wait. I want to see if I can take out this high here, which is about 5% away, and take the trade at that point. When do we take out that high? It looks like we take it out right about here. So close here, 367. I'm sorry, it was just looks like it was just about a percentage point away, not 5. And we take out this high here. So high here, 373.38. High here, 373.54. Okay, so there's the high that was taken out here. Now, how do I structure this trade? That's the next step. A couple of different things I could do. One is just buy the commons, but at $370, I may not be able to buy a lot of common shares and still have enough powder, dry powder left for other trades. So that's the next step. We're going to look at some options. So here, I would look at a few different things. Commons is one. The second thing I would look at is perhaps a deep in the money leap. You minimize your theta. It almost becomes a proxy for the shares, but there's still a lot less at risk in case of a catastrophic event. And that's, sometimes people overprotect against a catastrophic event. If you look back over the last, let's call it 15 years, 20 years, we've really had two catastrophic events. We've had the great financial crisis in 2008, and we've had COVID in 2020. And COVID was unique in that we had a V-shaped recovery. If I go back, and you should be able to spot COVID pretty easily here on this chart. There it is right there. And then we have that V-shaped recovery that happened. I find a lot of people tend to overprotect and pay for insurance for a much longer time than they actually need to. Let's go back and find our entry here. There. All right. So remember, this is our entry here. It's on this bar on the 7th of November. Trade structures, trade options. 1, just buy the comments. 2, buy a deep in the money leap call. Or option number 3 is buy a 60 to 90 day expiry call debit spread. And the price on this one, price on this bar here, pardon me, the close is 372. Maybe you buy the 375, 385, 375, 400. Not sure what happened there. Pardon me. I think my business partner, Vince, was trying to log in at the same time here. Jeff, can you take over for a moment? Let me just contact Vince.
Hold on just a sec. Let me go ahead and do this. Oh, okay, yeah. Right, while he's doing that, let me go ahead and make myself the presenter.
Yeah, go ahead, Jeff.
Let's go ahead and go over here. And let's talk a little bit about how, actually, like, if you wanted, Rahul, I could probably show cues for you while you talked about it.
Yeah, it's totally up to you, Jeff. I just wanted to share the spreadsheet that we follow, what we do in our market chats Monday, Wednesday, Friday. We can do it. You go ahead. I'll follow along on your screen and comment as needed.
Yeah, hold on just a second. Hopefully it's it should be installed in here. Just trying to find it real quick. This is the webinar room, so if it's not in here. I don't have it, unfortunately. Of course.
Yeah. Yeah.
Do you want to show the spreadsheet? We could talk a little bit about that for now.
I'm sorry, say it again.
Would you like to talk about the spreadsheet for a minute?
Yeah, let's do that as we're rebooting here. I'll take the screen controls back if you're able to give them to me. Thank you. Yeah. So when we get back up, we will show you the plus minuses and the trade setup. So what we want to do with the group that we have is not just say, here's an idea, now go at it. This is actually my personal journal for all of 2025. And I'm proud to say, coming up to almost the middle of the year, it's June 23rd, 2025, we're undefeated. No losing trades at all. And the percentages that we have on our winning trades are nothing to sneeze at. 66, 22, 116, 428. This was a VIX put that we had bought to protect ourselves against downside on our long trades, and it just happened that we bought this on a Friday, and by Monday something had happened again. We talk about the news-driven nature of these markets. This put cost us 35 cents. We ended up exiting for 185 on that Monday. Certainly some luck involved there, and I'm not going to deny that, and I'm not going to say, oh, I knew exactly what was going to happen, because I didn't. It was just a hedge. But at the same time, there was some speculative theory to it to say, you know what, the market's gone up really fast. I sense something's on the horizon. The risk reward situation here seems favorable. And all of these calculations we're doing with our group in real time and documenting them all through our Microsoft Teams channel that we have for our group, where we document each of these trades. And you can see they're all timestamped. If we look at this one on DraftKings, velocity entry, Let's see if we are okay to go now. Well, Jeff, I think I may have to just log out and log back in. So
try file, go online.
Sorry, file.
Go online,
Okay.
right there. Sometimes that'll do a reconnection. Otherwise, a reboot always will.
Yeah, so it said it did do a sign on. Let's see.
QQQ.O.
Yeah.
Yeah. When you click on the triangle in the corner, what does it say?
This triangle here.
Yeah, there's a big red triangle. It says charting
Yeah, so it says
errors.
charting errors, data error.
Yeah, okay. Let's have you just restart MetaStock. So shut it down and then try again.
Okay.
And that'll probably get you back online. I actually also do have kind of the early build of it installed. So
I don't think we made a lot of changes to
no,
it,
we
did we?
added some of the lines to it and that kind of stuff. But yeah, I do think you're going to need to shut down MetaStock and restart it.
Yeah, let's do that. While that's happening, we go back to our trade ideas here. So DraftKings velocity entry on the 12th of June. And again, we were talking about breaking of that prior high. And in this case, we did have that break of the previous high. Okay, while that boots up, we did have that break of the previous high. We took an August 39.42 call debit spread for $1 for 128, and a little bit of luck here. This was around 141. Not around. This was at 141, and within an hour, DraftKings had shot up about 90 cents, if I'm not mistaken, and we decided to close out or scale out of that position at 150. So from 128 to 150, about 18%, or if we go back here, we can see the exact number, 17.19%. And you could have done a completely different trade. You could have just bought a call option. You could have bought commons. It again depends on what you'd like to do, but we're showing you what I'm doing here. And if you can see what, if you do want to follow along, that's up to you. These are certainly not recommendations. These are ideas and my documentation of my personal journal here. Going back a little bit, June 2nd, new trade ideas, SoFi, okay? Buy the July 18 $14 call, sell the July 18 $16 call. Net debit 57, stop loss for all personal stuff. And I'm going to show you how we set up stop losses here. I generally like to set my stop loss on stocks at no more than 10% of the level where the entry is. So for example, if SoFi was trading at, and I think if I do the calculation, it was right around 10%. Yeah, Jeff, I'm not sure why I'm getting this with, it says unable to log in, will launch in offline mode.
Yeah, I'm seeing that.
Yeah.
When it gets back on, I'd like you to try and do the file login again.
Okay, so just wait for it to come back up and then we'll try that. So going back to SoFi here, it's trading at around 1325, 1330 at the time that we got into this trade. Again, velocity entry, had broken a previous high. There was a comfort level with that trade, and certainly with the risk reward here. So let me try this now.
All right, Vince, go ahead and close out of the Power Console now and just hit file, go online. Let's see if we can get you online. Otherwise, okay. I can't show charts with you. We could play together if we wanted to.
Oh, that would be great. That'd be great. Let's see if it.
That looked like it may have worked.
Okay.
But I do have the triangle in the thing. Just go ahead and click on the power console.
Yeah.
Yeah, it's still offline. I think I think there's a technical issue that I could fix for you, but it'd take a minute. I think it
No,
might be
that's
better
okay.
for me to show charts.
Yeah, let's do that. So we'll work on it together. We can't both share screens at the same time, right?
No, it's one at a time, but I can show my screen, and if we need to go back to your screen, we can do that.
I'll tell you what, why don't I'll talk for a few more minutes about the spreadsheet and the Teams channel. And then then we'll go back to your screen, and I'll walk everyone through the strategy. So for SoFi, we had broken above the previous high. Again, clearly defined previous high. And the way to find a clearly defined previous high, and the way I do it, is I will compress the chart and look for the pivot highs, or in the case of shorts, the pivot lows. And I want to see these in the direction of the trade. So if it's a long trade, I want to see a pivot high. If it's a short trade, I want to see a pivot low, and I want to see it colored the same color as the direction of the trade. So for a long trade, I want to see a previous pivot high that is green. For a short trade, I want to see a previous pivot high that is red. So simple. And again, we walk you through all of this. We meet Monday, Wednesday, Friday, every week for an hour, where Vince and I are both on these sessions, and we talk to you about these trades, what we're looking at, what looks interesting, why does it look interesting, and what is an interesting way to play that trade. So SoFi here, the entry was 6.2, and on 6.5 we updated. Nice move today on SoFi, closing half the position at 77 cents. If you recall, our entry was 57. Out at 77, we'll consider rolling for the rest. So the roll would be going from a 14.16, for instance, to a 15.17 or a 16.18 call, maybe going out a little further in dates as well. So from 6.5, we go to last Wednesday, which would be the 18th. SoFi above 15 now. The July 14.16 call debit spread, now theta positive, trading at 107. Selling half of the current open position. So from 57 to 107, we can go exactly. So on SoFi, our last adjustment on SoFi here, 59.65%. So you can see if it had closed below this level here, the 12.16 level, our 57-cent spread, depending on where it closed, if there was a gap down, this could have, it's unlikely it would go to zero, but let's say it could have gone to zero. More likely, it goes down 7 cents, 10 cents, 15 cents, 20 cents. But on the first take profit level, and Jeff is going to show you on the chart, that we've actually plotted some of these levels with support and resistance to show you where take profit levels, or where levels of support and resistance exist, so that you can make more informed decisions of, remember what I said at the beginning, I find it much harder, or our clients have found it much harder to know, okay, I'm in this trade that I got into for 57 cents. It's now worth 65. What do I do? It's now worth 70. What do I do? It's now worth $1. What do I do? Close out everything, close out a little bit. Do I roll it to the next strike and keep some profit back? Jeff and the team have done such a wonderful job in plotting some of these areas where you can now make that decision. And when you have questions, you'll come to these sessions on Monday, Wednesday, and Friday, say, hey, I don't have much experience with rolling out call debit spreads. Can you tell me a little bit about it? And with our experience, that's what we can share. Now, all of this stuff, you can certainly go on ChatGPT and say, how do I roll out a call debit spread? And it will give you the basics. It will, in fact, it will give you more than the basics. What you may not have is actual real life experience. Remember, it's artificial intelligence. It's very intelligent, but maybe there's something that we've done in the past where you say, I want to roll it out to this strike, and say, you know what? In theory, it sounds great, but to get a proper fill, which could make the difference between a winning and a losing trade, it's going to be very difficult. So you may want to be mindful of that. So SoFi is one. RGC, again, we just brought this up. Our group members, there's Sandy and Richard, they're always talking about these interesting trades. SLV is something that I've been in from very early on, the 15th of April or so. This was, again, a velocity setup. Silver, as you probably know, has been notoriously choppy. Just when you think it's going to break out, it kind of comes back into an area of support or resistance, depending on where it is. Excuse me. And we found that velocity is actually really good at sensing breakouts before they happen. And when Jeff brings up his chart, we're going to look at Tesla, which had the breakout today on the robotaxi news. But Tesla was long on velocity, I believe, about a week ago. And I think that's the real benefit. Remember that slide at the beginning that, you know, we don't want to be looking at lagging indicators. We want to be looking at things that are forward looking and have some kind of predictive power. We want to take that. We want to pair it with a proper strategy, and we want to include with it some kind of hedge or some kind of protective aspect to things, so that even if the trade goes completely against us, and I'm going to show you a trade that did not go in our favor, in fact, did go against us, and we still made money on it. Not a lot of money, but on this Google trade here, on the 22nd of May, I'll come back to that. Let me finish up the SLV discussion first. So SLV, we had taken a 30-40 call debit spread. As you can see, we went out quite a ways. So from April, we're looking at the January 2026 30-40 call debit spread. SLV was trading at around 29.50 at the time. So giving the trade a chance to work over the next, call it 9 months. Okay. The 30-40 cost us $2.28. The first roll that we did, and from April 15th to June 2nd, this thing just went sideways and did nothing. The first profit take we did was at 278, so 22%. And then we also rolled out the remaining half of that 30-40 call debit spread to a 32-42 call debit spread. So that's that adjustment there. And at the time, SLV was trading, as you can see, higher than where we got in at 31.29. Our price for that 32.42 was at $2. We closed out part of that at $3 on the 17th of June. Kept some of that position as well. So we now currently have a 32.42 call debit spread that we got in when the price was 33.85, and it's still currently open. The Google example, I think, is a good one for us to look at. The entry here comes on May 22nd, and this was a combination of a velocity entry, some kind of positive rhetoric around Google in the context of, well, there's ChatGPT, how's Google going to survive? And there was a lot of discussion about, you know, YouTube being a beast, making them lots of money, Waymo being severely undervalued. So this was sort of, I want a Mag 7 name, and I want the best Mag 7 name in terms of PE levels, in terms of growth potential, in terms of growth potential to risk level. What convinced me was, okay, I like Google, and is it giving me a proper entry on the price action side of things? The answer is yes. So we did something interesting here. We did a buy right. So we started the trade by writing a call against shares that we had bought. So for every 100 shares of Google, we shorted a January 2026 160 call. The price of Google at the time was about $172, just a little bit less than 172. And again, this trade did nothing. From May 22nd, it just went sideways, would go up, would go down. This 145, I think, reached a high of 148 sometime last week when Google went up to 178. But again, there was nothing to do, did not hit a profit level. I didn't feel that it was necessary to make an adjustment at the time. And then we finally ended up closing out this trade on the 20th of June, which is the Friday. We did this live on our Friday 1 p.m. market chat. And we closed it out for 145.55 when the price of Google was actually 168 and change, and our entry was around 172. So even though the price had gone against us, the structure of this trade was such that we were able to eat up the theta from selling the short call, and we ended up with a break even or technically slightly profitable trade when everything went against us. Now, if you're a finance major, or even if you're not, you don't need to be a genius to know that, okay, Raul, yes, we get this, but this is a lot of money that has been tied up only to break even. You're absolutely right. But I would take this with a break even than this with a loss. And if you had just bought the 160 call, which was in the money at the time, you actually would be down, let's say at least 10%, if not more. So yes, we understand that there is a time value of money concept, and from May 22nd to June, call it June 22nd, it's a month. And if you had put that money into a risk-free bond at say 4%, at 14,500, 4% would be, what would that be? About $500. Call it $500 divided by 12. $40. That's what your cost of holding this is. When this 145 could have very easily have turned into 150. It did turn into 148. Again, an adjustment was not made, and that was by choice. But this could have turned into 148, 150, 152, all the way up to 160 as we were getting closer to the expiry in January. Okay, Jeff?
Yes, sir.
All right, go ahead and share your screen, and let's look at Tesla as our stock here. I just wanted to show them
already. It's like I knew what you were going to ask for.
Yes, so that green bar that you're seeing, that one right there.
This one.
And if you go back a couple to the last area of the green bars.
Are you talking about this one?
Yeah, right there. Is that a long or a long plus that we're
long
seeing?
Plus.
Long plus. So again, it meets a lot of the criteria plus an additional set. Our entry there was what, Jeff, on that long plus?
The close of that bar would have been 318.
And again, we don't need any kind of confirmation. So from 318, and what was the high of the bars a little bit further right?
Like this one?
Yeah.
365.29.
So from 318 to 365 in, what is that, about 12 bars? And you're taking profits along the way. I think even if you had structured the trade completely wrong, you would have had a very hard time not making money on this trade. And if you go to that previous short here on Tesla.
You mean this previous one?
Yeah, that one there. Okay. And our entry there comes in at what level?
Let's see, this one closed at 290.80.
And 290.80, and the low of that range.
Are you talking here or here?
Yeah, it doesn't matter. Either one, we're in that same.
This low was 217.
Yeah, so from 280 to 217, you can see that just staying in the trade, and yes, you get some drawdowns along the way, But when you're talking about going from 280 to 217 in such a short amount of time, you're going to be making money with this.
Yeah, I think it might be a good idea to kind of talk a little bit about this S2 and S3 means and how you would use that.
So the way Jeff and the team have programmed it, and it's very clever. I give them all the credit for finding these areas. The S stands for support, and the R's stand for resistance. So on a short trade, you'll see areas marked R. On long trades, you'll see areas marked S, and you'll see areas marked R on the, short and long trades respectively. So when you see that mark come up on a bar, that is an area that has been calculated through the programming that Jeff and his team have done to say, hey, this area is now presenting a level of support. And if you're in this trade, and again, we document all of this in the expert advisor as well. If you're in this trade, this may be a time to consider an adjustment. An adjustment could be closing out the trade fully, closing out the trade partially. If you have options, rolling out to a next strike, a next expiry date. And again, these are all listed in the expert advisor commentary when you get into the trade and as the trade is progressing. So Jeff, great job on putting those levels in.
Hey, we just did what you told us to do. I think you should take the credit.
I had dreams, and then you just made them a reality.
All right. Very cool. I do want to point out that this is kind of the pre-release version, and it didn't change a lot, but we actually kind of draw these areas on the chart in the new version. I think that's pretty cool as well. So in any case, we do have a question from Juan. Juan says, you have a moving average on your chart. What periodicity are you using? And I bet I know the answer to that one.
You do, because you know Vince very well. So he's taught me. I keep the 20-day simple moving average, of course, for a daily chart. I experimented with the 50, nothing. I just want something other than the bars to guide me. I have found that when the 20 meets one of these support or resistance areas, I pay a little bit more attention to it. So that's the reason I keep the 20-day simple moving average on.
Okay. I think this commentary is pretty much the same too. So if we kind of look at it, it'll tell us that there's a new long system plus. It gives us an idea of what days to expiration we should look at, what deltas we should look at, stop price guidance, and our profit targets. I love the expert advisor in the commentary.
Yeah, Jeff, and I was going to mention the support that you offer and the support that we offer. You're never alone with this. So yes, you get the general guidelines, but if you're trading an exotic option strategy, you're doing some kind of double condor or something like that, you show up on the market chats and you say, hey, here's what I'm looking at. What do you guys think? And you get real-time analysis and you get real-time feedback from two guys that have done this for a long time.
Great. I think we should kind of wrap up and talk a little. Of course, we do have scanning. I don't think we have the time to run a scan right now, but just to show you what that does look like, you can scan for buy signals, short signals, intraday or daily, depending on kind of what you're looking for there. So.
Yes, I'm sorry about the technical difficulties. If you have questions, want to know more about it, Jeff's going to give you the phone number. Jeff, you can give them our phone number. It's I'll put it in the chat if you want, or they can contact us, info@tradingwins.
Yeah, I don't remember it. I think it's 800 Trading Wins.
It's not. It's not.
Okay.
But
on that one.
Yeah, but you have questions. Jeff and his team, like I said, they are just so wonderful, and we value them as partners. And if there are any questions, please let Jeff know. He'll send them to us or contact us directly. We'd be very happy to guide you in the right direction.
Cool. And we, if you have questions, if you want us to look at charts, whatever it might be, if you want us to send you some charts, have some symbols you want to look at, just get in touch with us. So yeah, let's go ahead. I'm going to go back into the PowerPoint real quick. And I don't think the technical issues just happened. They only happen when you're broadcasting, though.
Thank you, Jeff. Thank you for rolling with the punches with me here. I appreciate it.
No worries at all.
Okay,
Thank you very
be
much.
well.
All right, let me go ahead and kind of do this. And just to kind of talk a little bit about it, yeah, you're going to have the scanning, you're going to have the expert advisor. Rahul did a great job with actually kind of putting that expert advisor together, giving you the commentary, showing you everything that's available and everything you can do with it. You do have the support and resistance levels. You can see where we've kind of put the lines down here. That's the only difference really between that and the version we released. As part of your purchase today, we're going to give you a year of the Trading Winds service. It's normally $95 a month, so it's like a $1,200 value. With it, Rahul was showing quite a bit about it, but you'll get daily trading ideas, you'll do training sessions, on-demand technical analysis videos, trade ideas. You'll get 1 year free of that as part of your purchase. In addition to that, we did a 2-part training session on that's coming up. We haven't done it yet. It's on July 3rd at noon Eastern. So this is a brand new product. We haven't sat down and done the boot camp yet. But on July 3rd, the day before July 4th, the 4th of July, what we're going to do is we're going to actually sit down. Rahul will do some training on how to use velocity in a little bit more detail. I'll give some guidance in terms of how to set up your list, how to do scanning, how to save scan lists, anything you might want to know in terms of using MetaStock, especially if you're brand new. And then the retail cost for all of this would be $19.97 for velocity. The membership would cost you another $1,200. You get that boot camp. It's included for free. And if you need a trial to MetaStock, we'll give it to you. You can find out why MetaStock has been rated the best software program in this price category for like 32 years in a row. The total price for this would be normally $3,400. Here, as part of the launch price, we're going to do $997. Again, that does include the 1 year of membership, as well as a 30-day money-back guarantee. You can do that at metastock.com/velocity. If you have any questions, you can call us 800-882-3040, or you can go to metastock.com/saleschat. I do want to kind of just point out to you, it is part of that big bundle package that includes everything today. Velocity, the price action pivots. We've had so many good speakers on talking about it. The add-on, just the cost of the add-ons, not all the bonuses, not all the kind of hand holding, not all the training, just the price of all the add-ons would be $9,000. If you want to get everything, we're going to give you $3,950. But to do that, you have to call in 800-882-3040 or go to metastock.com/saleschat. So a big thank you to Rahul for putting that together. Very, very good system. It's been very well accepted. People like it. Give it a go. 30-day money-back guarantee. So 800-882-3040, metastock.com/velocity, or metastock.com/saleschat. So as we move on, I want to remind you, if you haven't yet, go to thetradersforum.com. You can sign up to chat with other traders about the markets. You can. There's lots of information about technical analysis, candlestick patterns, really active market chat with people sharing ideas with things that they like. You can do that for free at thetradersforum.com. So there you go. And then, of course, MetaStock we've been talking about all the time. If you want to do an extended trial or sign up for any of the offers that we've done today, metastock.com/summitnow, 800-882-3040, or metastock.com/saleschat. So there you go. All right. Our next speaker, well, Brian, how you doing?
I'm here. I'm doing well, thank you.
Good. Do you know, is there something wrong with Jake?
I don't think so. I was in email contact with him earlier, and he knew
Okay.
what time to be here.
Okay, I'll give him a call. We don't see him yet, so I can give him a call. Do you want to kick off without him, or should we stall?
Well, why don't we just pause for a minute or so and give everybody a break, because it'll just take you a minute to check.
Okay. Yeah. That'll be fine.
And I'm sending him a text while you're talking.
All right. Greg, it's time.
Wow, I'm always ready for this. This is what I was born for. This is what we trained for, Jeff.
Yeah. So we have a tradition anytime we have a technical issue, we do dad jokes. Do you have one for me, Greg, or do you want me to start?
Bad joke?
Oh, I feel like there's one right on the tip of my tongue, but no, I can't think of one just right now. How about you, since you've actually got the book there?
I'm going to do them without the book. I've got a database preloaded with jokes.
Oh, okay. Please do. Go right ahead.
All right. And Brian, if you hear from Jake, let us know. All right.
I have sent him a text and everything, so hopefully he'll reply shortly.
Yeah.
Oh, he's calling me. Hang on a second.
All right, no problem. You can mute yourself too. Okay, Greg, what is brown and sticky?
I don't know.
A stick.
Okay.
All right, Greg. Here, let's see. Let me think for a second. Why do you never see a giraffe? Why do you never see a giraffe hiding in a tree?
I don't know.
They're very good at it.
You know, I'd heard the brown and sticky, but I don't think I've heard the giraffe one before.
Do you remember the one about where do you find a cow with no legs?
Wherever you left it.
Yeah. What do you call it?
I can't remember.
Ground beef.
Mm.
Hey, Brian, welcome back. You missed a
Thank you.
couple.
I'm sorry if I left my mic live. I was trying to just take a quick call from Jake because he actually thought it was on the 26th.
Oh, shoot.
And second problem is that his voice is just almost non-existent right now today. There's still having some vocal fold problems. So he said, just let me go with it.
Okay, no problem. Brian, I have an extra just bonus. Oh, Dan wants to know what you call fake spaghetti. I don't know, Dan, but you better give us the answer pretty soon. We're going to kick off. Let's see. Impasta. All right, one bonus one, Brian. Brian, are you a fan of Star Wars?
Am I a fan of Star Wars? Yes, I am.
All right. Can you tell me why Han Solo did not like his steak?
Did not like his what?
Steak.
Steak.
Mm-hmm.
I have no idea.
It was chewy.
That's probably the best use for Chewie I've heard. He was pretty obnoxious.
I
Probably
like
the
chewy.
least liked character.
All right, so I'm going to
Anyway.
I'm going to talk a little bit about Jake. I'm going to introduce you guys.
Sure.
Jake's a big friend of MetaStock. He did his first trade in the 1960s. He started trading eggs. Very, very interesting. He's written a copious amount of books on trading, day trading. He does a DSI. He does a market alert. Somebody I respect a lot. Somebody I've known for a long while. We used to live right next to Jake. It wasn't very far. Brian, who's going to kind of talk a lot about this today, did the Jake Bernstein expansion contraction. And with that, he took some of Jake's ideas and really made an elegant implementation of an indicator that has a lot of different uses. And I'm not going to spoil it. I'm going to let him talk about that. But without further ado, and without any more tacky dad jokes, Brian, let's get you started. Are you ready?
I'm ready.
Okay, I'm going to send the presentation over to you.
Fantastic.
Okay. And I will let you know when we can see it. Okay, I can see it. I'm going to get out of the way. I'm here if you need me.
Not a problem. I really appreciate it, Jeff. And again, Jake sends his apologies for not being able to be here, but he's had a lifelong problem having had polio as a child. And so his vocal folds have had some problems recently. And there's times that his voice is virtually non-existent. But and he apologizes for not being here today.
No worries. I'm glad you can make it, though. It's all yours.
It's on me. That's it. Well, you know what? I'm just going to get right to it. Obviously, we've got to have the disclaimer. I'm not going to read through this. Everybody knows that the future is basically unknown and can't guarantee a darn thing. But I would prefer to trade systems that are clearly defined. And that's certainly what I learned from Jake over the long run. So basically the real quick part here is expansion contraction is available at no cost in most of the platforms, and there is a free version at MetaStock. And of course, we do a lot of recordings and have clear rules. I'm going to include those today. So be prepared either for some screenshots or watch this again and get to the slides that have all the rules, because there's multiple trade setups from Jake's original moving average channel strategy that I designed expansion contraction from, and also the expansion contraction rules. And of course, since Jake and I both trade a bit differently, typically we'd have Jake also talking about a few of his ways of using it. But this is a slide on Jake's background. I'm going to say that his client list over the decades is like a who's who of huge companies around the world, investment companies and such. And so it's pretty surprising to see who does utilize his capital markets reports and analysis, as well as all of the other programs that he has. As Jeff had mentioned, the Daily Sentiment Index, or DSI, that is a Jake Bernstein only. Also, he's got the seasonaltrader.com, which is, again, been around for decades. And that's another resource where you can get clearly defined trade setups throughout the year in advance using seasonals. So again, Jake's got a lot of background, and I was a client of his back in 2014. So that's what got me started in rules-based trading, system trading, 100% objective, rules to get in, rules to get out, rules for taking profit. And in other words, something that we can code and back test, as I prefer to trade something that we can prove has been consistently profitable over time in the past. And I've got my experience basically on the job in Silicon Valley back in the late 1980s and 1990s, working in reliability assurance, and was trained in some statistical process control. So not formally educated, but on the job, and utilizing the statistical process control fit right in here, because it's all database and spreadsheets on that. But I've also coached, as that previous slide showed, for quite some time. And as a coach, one of the most often things I've heard is people want better entries, they want better exits, and they want to be more consistent. And of course, as you can see here, ideally, if you knew when to get in and out at a gain or a loss, and you knew it was the right thing to do at the right time and right now, that would certainly help with the confidence. But I'm also going to add in here that if you haven't proven any systematic process to yourself, past performance, although the regulatory bodies say it's not indicative of future returns, I'd far rather trade something with a positive past performance, assuming that as long as conditions stay the same, it should perform similar. And then, of course, true to the markets, when market conditions change significantly at some point, we may need to do some recoding, but this has been quite stable for a number of years since created. So as you can see in here, it is available for many different platforms, and we're using it in the technical analysis. Jake and I are clearly 100% technical. I'm going to assume that everything fundamental about a business or a stock, right, is built into the charts. So, but this, again, expansion contraction was built to be concurrent or non-lagging, because again, most indicators are lagging and they're behind, and such as moving average crossovers, so to speak, they will be lagging. Excuse me, was there a comment? And I'm going to assume not, but again, used to having Jake want to jump in here, so if I hear something, I may pause briefly. But anyway, expansion contraction is also different from other indicators. Excuse me?
Can you hear me?
Jake.
Yeah, I can barely muster a voice. I just wanted to thank you for taking over for me, and I apologize to everyone because my voice is just practically zero.
Well, I'm glad you got back on the meeting here. And of course, I did explain a little bit that you're having some voice difficulties right now. But we're glad you're here, and jump in anytime. As I said, if I hear you at all, I'll take a break because your input is very valuable. Okay, Jake?
All right, thank you so much.
I'm glad you're here. So, and again, I'm just going to show a whole bunch of example charts at first, because quite often when individuals start to ask about what is this and how does it work and everything, it helps to have the chart showing here. So I'm going to get into the setup conditions where we've got clearly programmed buy setups with a B, or sell setups that I've marked with the red arrow here with an S, and additional setups from expansion contraction. We'll get into the details in a minute, but we just kind of want to see, will we have sometimes where we have a clear buy and may end up with a gain or a loss. Absolutely, this is not 100%. Generally, the statistics over the years in back testing between 5 to 20 years has been in the 60 to 65% win to loss ratio. There have been a few times when it dropped into the upper 50s, about 57%, and occasionally up above 70, but I'm just going to go with the averages most of the time, as we want a strategy that wins more often and ideally has a long duration on the setup. So again, with the setups here, the average duration on a any chart time frame is basically about 24 to 32 bars or candles. And at the top, if you can see, this is just a Q's 1 minute chart. Just wanted to show 6 example charts of multi-time frames on here where we can see the clear setups, the coding on here from MetaStock, which has been great. When to get in and when to get out is all included basically in also the expert advisor that's available for this. This is an example of Amazon daily chart. Again, a clear buy, which I actually marked over here with the expert advisor that's just not showing on this screen, but it also triggered this as a strong buy. This duration is the first week of September, all the way over to the middle of February. The bear trade setup, that's duration was the middle of February down to the third week or so of April. And then since that point, Amazon has been the buy trigger and trading higher. So this is an example of an Amazon daily chart. I'm going to pop down to a Tesla, a 1 hour chart. In this case, we're going intraday on that. Also clear setups with the B's for buys and the S for sell setups. Is one thing I've definitely learned from Jake is you only have something on your chart if you absolutely need to have it. And so although we technically say don't have a lot of BS on your chart, in this case, I absolutely love having the buys and the sell setups on the chart as they are clear. I've marked a couple on here where there are a sell setup and just kind of drop the arrow down to using also Williams accumulation distribution for the setups on the systems. And of course, at the bottom, you're seeing the JBXC expansion contraction indicator, of which I will explain in a second. I just wanted to show some different time frames, different symbols, different markets, so you can see the clear setups and the duration on these. Apple 10-minute chart, and this time I did pop up with the expert advisor example. Again, the green diamond is just, sorry, triangle is marked on there with the buy setup to show it was a strong buy, and all of the expert advisor conditions on there that have been coded in by MetaStock based on the systematic process. And as you can see, lasted quite some time throughout the duration on this chart, which as you can see is on the bottom across is over several days. And that's off of a 10-minute chart where we can get not only say an initial setup, but there'll be some subsequent programming on here, which are expansion, contraction, continuation trades, which I'm going to show on here also. And the teal and orange moving average lines, that's Jake's 10-period simple moving average of the high for the teal line. And the orange line is the 8-period simple moving average of the low on that. And I put that on the chart in order for us to see the relationship between pricing and the moving average channel. So that's what expansion contraction was designed on. So on the weekly chart on this, we have a buy set up here off of the expert advisor, also showing a strong up back in February of 2023. That went all the way till it was a clearly defined sell setup in March of 2025. That didn't last very long, but as you can see, there even though I said 24 to 32 periods on average, we can extend beyond that quite some time in long-term trends. So to get into expansion contraction as quickly as possible, I did make a blow up basically here of the indicator. And as you can see, we've got some short-term lines. This is the green line and or the red line of two of the three components out of this indicator. And they're showing the short-term movement of price. Sorry about that, my cursor keeps disappearing there. So short term, when the green line is above the red line, that is short term bullish. Price is moving up through Jake's moving average channel. The expanding part of that is the strongest part of the move up. And if we're contracting and the short term lines are dropping, then price is somewhat, say, reverting to the mean or coming back towards the average. And we may continue the trend or we may reverse. But the lines on there are showing us short-term swings up or down, generally over the next week or two on that identification. And I've marked that on there so you can see both the red and the green line. And the shaded areas in the background, the cone, as Jake likes to call it, I've originally just called it the cloud, red or green shaded area. Those are the long-term trends. And so we can see when we're in a shaded cloud, on that one, we'd be in a downtrend. If the cloud is expanding, we're in the strongest part of a move down. If it's contracting, then we are weakening, correcting, and maybe reversing. In this case, a red cloud followed by a green cloud was a downtrend, followed by an uptrend on that. And so we want to know with this, say, dual perspective indicator, what's the trend long term using the clouds? And what's the current swing of price short term using the red or green lines? Gives us a very accurate example of what we are doing right now, or I like to call it reality at the right edge of the chart. And on that one, and when we get into the other parts of this, we can see that there are some gray or black dashed or dot dashed or dotted lines, along with a center line here, in this case at 0. I'll just mark that one out as the median, as in some platforms, it's halfway, sorry, it's half of the distance, I should say, of the amplitude of the cloud. And in other instances, it's just plotted at 0. And really what we're looking at is everything above 0, so we can get an idea of a trend with a green line above the red line, a strong upswing, and then also the green cloud in the background, which we're in a strong uptrend. And the strength is actually derived by using a moving standard deviation formula, which codes in the large dashed or the dash dot or the small dash lines. And I'm just kind of marked on here. I want to know what's normal. That's just using this mathematical formula. And inside one standard deviation is typically normal. That's what the market should be doing. Outside of that, we would consider that to be strong. So we can mathematically calculate strength or weakness using an indicator like this. And also when we see the cloud in the background or the cone start to contract, the peaks on these are often, in this case, a support, or with a green cloud, price is going to go way back up. This is going to show us some type of resistance on the charts. So basically, we've got uptrend, downtrend, strong or weak. We've got upswing, downswing, strong or weak, all in one indicator over time. And to be fair, there are over 30 tradable characteristics. And at least right now, we're just using a small batch of that. Through this explanation and MetaStock and other platforms also decided to code the bars or candles if you're using that, so that expansion contraction is clear with price. So we're seeing strong up trends and swings. We're going to see dark green bars. If we're weak up, it's typically light green, and that helps us visually see right now, are we up or down, strong or weak, also with the candles, as that way there's. Go ahead, Jake.
If I can just jump in here for 1 second while I still have a little bit of voice left. I just want to emphasize that no matter what it is, the big money is made in the big move. the big move takes time to happen. So even though these days most people want to trade short term or day trade, you will make money if you use the right method. But unless you're carrying a big position, the day trade won't work out in the long run. So when I look over my career of over half a century, the big money that I've made has been made in big moves. Big moves take time. I just want to emphasize that before I run out of voice. Brian, you're doing a great job and I appreciate it. I'll turn it back to you now.
Anytime, jump in, as we'd all prefer to hear. In fact, over the 11 years now, there's times I hear you speak and still pick up tips and tricks that I hadn't heard before. So it's always beneficial in listening to somebody with over 50 million years of experience. And yeah, I exaggerated a bit, but okay. So, and as I'd mentioned, it does measure the strength and weaknesses using that. But I just wanted to spell it out, and that way you've got the explanations on here. And as I was saying before, ideally, you'll always know what to do and when to do it with expansion, contraction. You'll be on the right side right now and know if the conditions are weakening and or have reversed. So they've been back tested, as I said, and we still see generally win more often and make more than you lose on average. And I know Jeff's run a test in the entire S&P 500, and that graph also a little bit later also showed more winners, fewer losers, bigger winners, smaller losers. And so for us, even though we wouldn't trade the entire S&P, it is nice to know that it's consistent in trading in multiple markets. So I am going to pop up here now. As I said, MetaStock has coded in the expert advisor. So we want to know what reality is, so to speak, at the right edge of the chart. We're looking at a past chart of the Qs, but at the right edge, this would just be in a weak bull condition on here, although admittedly the color coding on the green and light green are a bit hard to see with lots of data. Again, we are seeing that we're currently in that instance under a buy and have pulled back into the range and are just in a weak bull market. But ideally, it's totally clear. I've marked on this one the triangle for the setup on here. As you can see, this was 11/3/2023. The coding showed for the expert advisor that this would be a strong buy. And of course, that trade went from the 3rd of November all the way over to the middle of April, if I recall. I believe that's about April 14th before a sell would trigger. And there will be some sell setups and some buy setups that I determined to be weak, and I'm going to go through those rules on that. And so when we are looking through the charts, of course, we want to see, is absolutely everything completely clear? And in this case, I marked up the chart to see, of course, the overall long-term trend line with the rising green trend line. You can see on here the cloud of the cone changed from red to green and stayed green over a large period of time. There you can see pretty much, I think that was the 14th and not the 15th, but that's about where we were. I marked some red lines dropping down because basically we had a strong move up and a correction back into the moving average channel. We had a strong move up to a new high, a correction back into the channel where these bars are light green. That'll be evidenced with the red line short-term swing greater than the green line. So we're making a bearish correction and an uptrend. And we have a trend continuation. And each one of these are bearish corrections. And again, on here, I'm going to show a little later with the continuation setups are also marked with a smaller B. There's also Jake's swing trades. So again, that would be buying the 8 simple period moving average of the low in a defined uptrend with defined risk. And those tiles will be up a little bit later in order for you to see that. We did start to see some weakness and a correction. The reason I kind of just marked that one light red is that we just got really weak. The cloud and the lines are inside their standard deviation lines. And so when the short-term swing is inside its normal distribution or inside the standard deviation lines, it's weak. If the trend is inside its one standard deviation, which it clearly is in this instance, it's also weak. So in this case, we had a bear correction that turned into a sell setup that was a short-lived, about week-long setup on there that showed some strength initially, and then started to make a bullish correction and change into a buy setup on the marker. So we were strong up short term, long term. And again, that was evidenced in this case by the change from the red cloud to the green cloud with the green and the red lines above. So rather than having to interpret what the indicator's showing at the bottom, it's just coded with the bars. So ideally, it's clear. I do find that if you have a blink method at what's the trend, up or down, strong or weak, it's much better than looking at the charts for a half an hour and going through yeah, but scenarios and all that, thinking about the future. We're really just going to have to stick with reality at the right edge and assume that the future will continue. And fortunately, if it doesn't, we're going to see the changes. Marked out on here, again, range expansion, so some green lines showing that they are kind of moving apart from that in general. And an expanding market, as I said, is generally the strongest part of a move up. So as price moved up, the cloud expanded. As the cloud was contracting, showing some weakness, we had that period of a bear correction, which would have given opportunity for a swing trade for Jake buying at the moving average channel, 8-period simple moving average of the low. Or if you missed that, there's a continuation set up on here that's now the strongest part of a move up. As short term turned bullish, the green line went back above the red line. The cloud is still green, and so that would give us a continuation trade to move higher. You're seeing some diamonds on here. They're basically when price gets above a 3-factor 20-period ATR Keltner channel. I'm just using that from Chester Keltner, who suggested that it would make sense to take some profit at a price extreme on here. So that's what I marked. These are more take profit, not get out. But of course, if we do trade up to some kind of technical resistance or support, it would make sense, and the rules will include those setup conditions. So I did mark with the red arrow where the cloud peaked and then started to contract. That's why I marked that as a resistance in this case, because the trend was up. And further over to the right, you'll see a green arrow at the maximum width of the red cloud on here, identified support. And of course, we will have multiple supports and resistances based on an expanding cloud contracting. And of course, it should be pretty easy to see in 2020 hindsight. We had a significant support, especially since we broke out and made a new high. So we should be able to identify that clearly also. I marked a period of kind of consolidation where we were channeling more sideways, not making significant new highs or lows. And the cloud was contracting, showing us in many instances, and I will show some divergence here in a second, but if the trend is weakening and we're still making new highs and the cloud is contracting, in that case, it's showing us a divergence type pattern, and we've got clear rules for that, although admittedly I didn't include those in here today. The divergence, as I was marking on here, did show that the trend was up in this case, making higher highs, higher highs, higher highs, higher highs. At the same point, at the maximum range, lower highs, lower highs, lower highs, right into the consolidation or not trending pattern. And Jake's got clear rules on how to trade divergences with momentum or even with expansion contraction. And those are also something we will have no problem coaching on. I did a bull divergence example where price was making new lows and lower lows. At the same point, the red cloud on expansion contraction was getting smaller and smaller and smaller over time. And that labeled a divergence in here near the low just before a spike up and an attempt to make a new low. That one actually did not stop out on a divergence trade. I believe that was like 3 or 4 cents from being stopped out. And so holding on a divergence trade will make sense in some instances. Jake, did you have a comment?
No.
Okay.
Thank you, Brian.
If I literally hear anything, I'm okay stopping, because if anybody's got comments or wants to throw questions, then I'm okay with that.
I'll give it to you in sign language.
No problem. So we've got many different setup conditions in here. As I said, a little bit later, I will show all the rules, but for now, we're still just running through what is it? What does it mean, and how do we use it? A slightly older chart also here, but what I did was label out the blue line would have been the market on close entry on a strong buy setup trigger. And so I marked that with the blue line. The red line was the calculated stop included in the conditions. So you can just see how big was the stop. And profit target in this case, why there's two arrows here is it would have hit the first profit target and traded above the price extreme to hit a second profit target, and then continued in until there was a reversal. But I did want to pop in here and show you the size of the stops and the targets on that. And in this particular case, the historical results have shown that expansion contraction is hitting 3-to-1 profit targets, some 30 to 40% of the trades. And of course, ideally, if we could get big winners, even 20% of the time or more, that would be fantastic. So it's just one of the conditions in here, of course, in trading in the liquid markets. I also popped up a chart here just to show, right, that the JB expansion contraction, I'm showing a strong buy, all labeled out here in the expert advisor on that one, and labeled out right off of a B, which was the program buy trigger on that. So you can see that it will show you it's a strong strength bullish move or an upswing. Short-term things had been consolidating. Price was sideways before that. So it also gives us all of the conditions on the range of the expansion contraction. So it does start off weak as we were just consolidating sideways, and then continued quite a bit significantly higher in this instance. And I'm just going to show that again with the arrows. We had a buy trigger, price went up significantly, went to the latest exit on a sell reversal that would trigger a bear trade, and we were short-term bearish here in the gold market, would have created actually a small loss. And although there are a few B's in here, they were weak on that with the rules, and so the sell setup actually followed through until we had a buy trigger on strength with expansion contraction and Williams accumulation confirming on that one, and ended up in another long-term trend higher for almost 4 months, which would have ended, of course, on another reversal on a strong sell setup there, expansion contraction, short-term, long-term bearish, will AD below average. Again, this is another small loss in here with a few buys that also didn't trigger on that case, and then managed to trade further up on here. So on the daily charts, gold's had some get in and get up and get some bigger winners with a couple of smaller losers. The weekly charts have shown long-term trend. So that's why we do want to take a look at the daily and the weekly analysis in order to get an idea of potentially long-term big moves. And I'm talking about over years, which would be great. This is also now showing the continuation setup. So you can see the label shows there's a trend continuation buy, a new upswing began. Current long-term trend is still bullish. So we had a buy setup, price moved up strongly to a new high, consolidated or corrected a little bit back into the range. Everything stayed green from the cloud. And I had that mark with the green triangle for the setup here. So you can see that literally goes through and tells you everything that we had priced up to a price extreme right above the 3 ATR Keltner. And of course, might be called a reversion to the mean or comes back to average. But basically, both Jake and I have swing trades that you could consider to be buy the dip in a defined uptrend or sell the rip in a defined downtrend, as we definitely want to trade breakouts, bounces, and divergences are the setup conditions that we can exploit over and over and over again. I did pop up here with a second continuation trade after we priced up and made a new high, made a correction back into the range, shows the green triangle marking out again. A new upswing began in the current long-term bullish trend. Everything's still showing strength on there, which we popped back up and would have hit a price extreme for a profit target shortly prior to seeing a weak sell come up. So again, I like having the expert advisor on this to show information if you're not 100% certain on what to do. But again, I'm going to go ahead and show all the rules on the different setups, and that way you've got what was coded and back tested. So we do have another strong buy in this situation. This was after the week correction. Pop the triangle over here, which would coincide with the July 3rd buy, a strong buy on the daily chart for gold. And of course, that one led to the 4-month move to the upside. So I'm just really trying to show as many examples, either with the coding, and yes, the BS comes with the coding in either version. And of course, ideally, that's the only BS you've got on your chart. Still showed another strong buy. That was the third one. Just wanted to label that one out so you can see the triangle is above the coded B on this one. We can see it still said long-term trend changed bullish, supported by the short-term upswing. So the explanations earlier have been coded very well into this by the MetaStock coders on that. As I mentioned before, we may end up with some trades in here that might trigger and give us some small losses. But if we kind of take a look through that entire period, over a year long, there was a couple of small losses and several big winners. And ideally, what we're seeing are bigger winners, smaller losers, and win more often. And so far, the statistics have played that out. And I marked up on here also setups that hit at least the first target, because if this makes sense, if you've got your coded stop loss in 2 times the moving average channel width, and if we have a first profit target that we're calculating that's a similar size, ideally we're hitting the first profit target 60% of the time or more before hitting the stop, which would give us a loss. And that does ideally give us, say, a 60% win to loss ratio or better. And ideally, the net gains are more than the net losses so that we've got growth. And so far, what I've been seeing, as I said, about 60 to 65% win to loss and 1 2/3 to 1 profit to loss on that. So, and over time. Also wanted to pop in here. Go ahead, Jake.
Just to clarify, those green arrows show pullbacks to the bottom of the channel support in an uptrend. And the bottom of the channel support is an 8-period simple moving average of the low.
This 8-period simple moving average of the low. Now the B's on here are the expansion, contraction, trend continuation, but I did include your swing trade setups for everybody to have, as well as my swing trade setups. As that Jake and I use these a little bit differently, but that's okay. Ideally, if you've got a set of rules, then you need to possibly adapt a set of rules for your level of, say, conservative to moderately aggressive, or maybe aggressive risk tolerance and or objectives. As I'm conservative with the risk I take, but I'm aggressive with the strategy I use from the back testing. So,
thank you, Brian.
Jake, I imagine that you've probably got the same type of a process, although maybe you're a little willing to take a little bit more risk. But personally, I'm 2% of my tradable capital balance at the most risk per trade, and limit the number of trades with risk to no more than 6. That was after getting some of your coding more than a decade ago and seeing that it isn't necessarily about trade more often. It's about identifying higher probability setups that give you better, say, go ahead, Jake.
Managing risk is my job. So I'm not a
money risk managers.
I'm a risk manager, and that's what I do. If I'm managing my risk and I've got an effective strategy like this one, I will make money. It's very simple.
Right. Well, we will have losing trades. That is, I mean, if there's, say, a possible 35, 40% losing trades, ideally they're small. Some of the stats I've been seeing over time are the 2% stop outs have only been about 4 to 6% of the losing trades. And that means we are losing less in general than a full risk loss, and still have the potential for the bigger winners. So on that. But thanks, Jake. I always appreciate that popping in there. And you will hear us, both of us have slightly different approaches, but again, 100% objective clearly defined rules to get in, rules to get out at a loss, rules for taking profit, rules for the losses are risk limiting, rules for taking profit are profit maximizing. As again, Jake's always said, the big money's made in the big move, and it's not easy hanging out there for the big move unless you know what reality is at the right edge of the chart. So on these numbers, I didn't want to share, as I said, the expansion, contraction, buy, sell setups, swing trades, buy, sell setups that I'll share briefly, or sorry, in a second. Divergence, buy and sell setups on here, just applied to the current basket of stocks, as again, preferred to trade stock options. Jake's expertise, of course, is futures and stocks. My expertise will be stock options and currencies. And of course, both Jake and I coach and also do small group mentoring. And so for individuals looking to get coaching from Jake's decades of experience, that's also quite cost affordable. So that is also available. I did want to pop out some over some time, and I've got more years, but in essence, done quite well even with just the stock trades. Reason for having 7 here is that Microsoft back in 2024 in August stopped trending strongly. And as you can see, gave back what it was up and was just basically flat. And reason for Palantir popping up onto the list is it was strong trending, again, looking to replace a non-performing tech stock with a overperforming tech stock and also involved in AI. As we want to have some rules for when to rotate out of an individual instrument and what to pick to replace it. So second tile will just show current stats as of the first 6 months up to today. And so you can see Apple, Amazon, NVIDIA briefly is actually NVIDIA started off with a few losses at the beginning of the year, so it's just up a little bit, but the basket's still doing well. As I'd mentioned, it wasn't about trade more, it was about trade selection. And with a small basket, as you can see, if you look to add up some of the numbers, these have done well. AM showing a loss in here in the Aussie US dollar, presently up a little bit on there, but that had consecutive losers. And as all systems will, there are going to be times we get 1 or 2, maybe 3 or 4 consecutive losers, and ideally that's limited because with this win rate on the system, we could potentially get 7 or 8 consecutive losers, maybe 9, 1% of the time, about 1 out of every 100 trades, according to just statistics, with a 60% win rate. And so far, I'm not seeing that maximum on there. Previous sessions, I've shown the Japanese yen futures on here traded with the actual sell setups and some of the trade results over time as the Japanese yen seems to like expansion contraction quite a bit. And this has had actually was trading at about 85% win rate. And I'm going to pop up and at least bring up the spreadsheet on tracking out the trades. And to be clear, this is not a market I trade, because I don't trade futures, but we do want to know how does it do? What did it do? How did it do it? Right? What kind of average risk are we taking? What kind of gains are we looking at on here over time? And is it winning more often and losing less often? And although it wouldn't be ideal in here, I actually started this out after 3 consecutive losers back a couple of years ago to try this out for a client who wanted to trade futures with the Japanese yen. And typically, as Jake's mentioned in the past, if you've had some consecutive losers, it's the ideal time to take this. But rather than start after the consecutive losers, I went ahead and included them just to see what was the worst that could happen. So updated this to the most recent consolidating market where we've had a couple of small losers there. I'm going to run out of space to show them clearly, but I did pop up the spreadsheet. So when we do have some, in this case, 4 out of 5 trades were lost trades, and this still from the dollar value and the totals only amounted to about a little less than a 12% drawdown over time on that, and we can still see some winning at will drop from 85 to 75% over time, and is now at least showing the win to loss. And I'm gonna popped up the profit to loss ratio vertically on here. But if we want some proof, if we want to see the stats, I will have to say those coaching clients that I've helped that seem to get this go to the 100% objective rules, and they track everything, and they know what's working and what's not working. And if we have a drawdown, is it small and acceptable and within the realm? And at least what I will say, even at a approximate 65%, 60 to 65% win rate, really haven't seen more than a 20% drawdown, and that's on about 12% exposure. So been happy with that also. And we want to see, since we will lose, that they're not all bunched up ideally on this, but that will happen. I wanted to show, since we're walking this forward in essence over time, we will have losses. There will be some consecutive losers, and ideally that's still a small and acceptable drawdown. Now, I'm not going to hang out here on Grok too long, but I did ask, how do you develop a successful trading strategy, once to ChatGPT and another time to Grok. And there's some good things and some bad things here as you read through it. Moving averages, RSI, Bollinger Bands are popular starting points. But again, as you can see in here, you've got to define your goals. You have to pick the markets you're trading and what kind of time frame suits your style of trading. When it says study the data, it also says backtest. Well, if we think about this, we need rules before we can backtest. So maybe this wasn't put out in the best of order by Grok, but at least it ran through and it said, hey, a good strategy isn't a hunch, it is a system. It did pick the 20 EMA crossing above or below the 50-day EMA, which is just way lagging. So it really hasn't picked up on systems yet, but that may be that it just needs some training on that. We do want to test it on time, ideally back tested, or even with small real trades. And as it said, markets will evolve. So if you know your system, if you know why you get in and when to get in, and how it's been performing, you'll see when your performance is diminishing, and have a good idea, say, with a measured progress, when to make any types of changes. So keep a journal. It's not right about being right all the time. It's about making more than you lose consistently on that one. And I just re-highlighted this one. Best traders trade their system and don't chase every new idea. I'm going to have to say in the long run, early on, before Jake on that one, it is easy to chase every new idea. And even if you've got a system, not follow the rules, that's probably the biggest failure that I see in coaching individuals, as they know what to do and they don't do it. And there are times that I do the same thing. So I'm going to consider that to be human nature. So just wanted to go back here real quick and say we need clearly defined rules to get in that are risk limiting, profit maximizing. Ideal your plan is in writing, back tested, or to have third-party verification in the instance, since it's had to be coded out by a computer engineer. And then of course we're walking this forward, at least with the results that you're seeing on this that are just straight off the charts. Now, I'm going to pop through these next few slides pretty quick, but I know that those are watching this on YouTube on the replay or whatever will be able to go through. The previous slide was the strong buy setup. This one shows the weak buy setup with entry rules, stop loss rules, target 1, target 2, an alternative exit using Williams AD. And near the bottom, we do want to have a strategy that does help us, say, add to the winning trades. So, in a defined uptrend, if you're adding to a winning long trade with a Jake Bernstein swing trade, buying at the 8-period simple moving average of the low to add to your winning trade. That way, if we could add to a winning trade, all with the same risk we're taking now, a big winner will be bigger if you are adding to a winning trade in a strong trend. So quickly here, the strong expansion contraction sell setup, a weak setup, all the same information on this. I'm going to put in Jake's swing trades, as I said, in a defined uptrend, today's low is less than or equal to yesterday's 8-period simple moving average of the low on that one, then right, we are looking to put on an add-on trade on that. Or if you're not in, a reason to get in, buy and support in a defined uptrend. Put on Jake's swing. I've also added my rules. I'm looking for a little bit bigger pullback to the 20-period simple moving average in a defined trend, and a swing sell setup. Same information in here on that is what the testing was done on. So as the expert advisor showed us on that, we will have clearly defined setups and triggers that basically follows Jake's setup, trigger, follow through process on that, as that does work once you get it and you follow it. And we need those rules to get in, as I said, rules to get out at a loss, when to take a profit, when to add to a position, and ideally you've got back tested confirmation. And the reason I say liquid trending markets is that I'm sure if we took, say, expansion contraction down to maybe penny stocks, it might be a market that isn't so conducive to trading in that case. But we do want to trade very liquid markets, and I kind of shoot for 1 or 2, maybe 3 of the top weighted stocks in strong trending sectors in that instance. And as I had mentioned before, we got the Power Console and expert advisor use with MetaStock. And here was the graph run expansion contraction on the entire S&P 500, showing that it did get bigger winners on the green histogram bars. Some 2/3 of the way to the right there, it did start to show some losses, and over to the end, the bigger losses on that. But at least you could see wins more often in a graph, and the losses are smaller in relation to the winners significantly on that. So Jeff, I know you're probably sitting there in the background. Did you have some things to add into all of this?
I'd like to talk if you guys are done about how to get it.
I tried to leave you some time at the end.
Yeah, no worries. I can. Very, very good.
And apologies to you, Jeff, and everyone. Thank you for doing this, Brian. I much appreciate it.
You're welcome, Jake. Glad you could make it.
I'm glad you made it, Jake, and I hope your voice is feeling better pretty soon.
Thank you so much.
I do have 2 questions that maybe you could help me with, Brian.
Sure.
Jay wants to know, is it going to be beneficial if you only trade the strong buys?
Well, think about that. If you're beneficial, if you're only trading the strong buys, you're picking the strongest part of a move. And so, yes, it's going to be beneficial if you were, say, conservative and you're saying, I don't want to trade the bounces that support or any of the divergence trades. I just want to trade the strong setups. You will still have some losses. They will be small, and you will get some small winners, and you will get some big winners. As I said, the stats still did show out that with that 24 to 32 period on average trend filter, that could give you some bigger winners on there.
Now, the other question he had is, can I just scan for the strong bias? And I do know the answer to that if you don't.
Yes.
Yes, you can. I don't know if yes meant you didn't know the answer and you want to do this, but either way, it's yes. Yes, you can do that.
Yes, you can scan for it. And that, again, we want to take as little time to find what to do and when to do it. Don't need to spend hours looking through thousands of stocks. Again, this isn't about trade everything. This is identify what's strong trending and high volume, or in my case with options, I want to make sure it's high open interest and have weekly options available. And personally, I use debit spreads on these setups with a shorter dated rolling strategy. That was also from back testing options over 10 years to find out which strategy would cost me less and make me more in the same time, and all the other option choices as that we should also be a specialist in rather than a generalist.
I'm going to show how to do that on the screen too. And I think that's a good transition point for me. But when you run the scan, Jay, right here, there's a column. This is a scan that was run back in April, by the way. But you see right here where it says strong, Humana, CVS Health Corporation both came up with a strong, where United Health Group, all health stuff on this day, and Elviance Health had a continuation. So that's how you tell the difference. You can absolutely scan and just find the ones that have the strong setups. So Brian, thank you, man.
Thank you very much for having us.
Yeah, of course, every time. Okay, I'm going to take over. Just with, let me go ahead and do this first. I really like the design that now I can only see my face really big. Let me go ahead and kind of at least get that out of the way. I do love the way that this is set up, and I love kind of the uses for expansion, contraction. It can give you the trend strength, the long-term and short-term. It can give you range, whether it's expanding or contracting, support and resistance levels, overbought, oversold conditions, divergences, the short-term breakouts. I call it the Swiss Army knife of indicators, and we won't go through. They did a good job of actually explaining that, but I do like the way that we kind of put this together in the expert advisor. So when you open up a strong buy, maybe just scan for a strong buy, you can see exactly how the long-term looks. In this case, it was bullish, it was strong. The short-term was upswing, it was strong. Your range, you've got a weak contraction. Short-term breakout, no. Your major and minor support levels, your targets, your stop loss, all of that is kind of put together in kind of a dashboard view. As you scroll down, it's going to give you more information. But I love this expert advisor. I love the way that it can kind of help you really focus on kind of what's important about what you're looking at. And I think we did a really good job with that one. I just showed you the scan. Of course it can scan. Why invest in software if it's not going to help you find opportunities? I think that's the best use for software, but it'll help you find bullish and bearish divergences, the buy signals. From there, you can look at just the strong ones if you want, the long-term bearish and bullish trends, sell signals, and short-term breakouts. So all of those are different scans that you can run with it, and it's all included. It does include a system test. Here is that system test that Brian was talking about. This was S&P 500. And it worked very, very well against that S&P 500. So I think the system is awesome. It has the entry recommendations, the exit recommendations, stop losses, profit targets, that dashboard view that breaks everything down for you. Of course, you get the expert advisor, the explorations, the system testing, that's all included. And of course, we sat down with Jake and Brian when this was released, and they talked quite a bit about how to put together and use JBXC. When they were done, I did kind of a how to use MetaStock, how to scan, all that kind of stuff. So if you're brand new to MetaStock and you're getting it so that you can take advantage of that indicator, great. That training's really geared towards getting the most out of it right out of the box. So normally this would be $5.99. Here it's going to be $4.99 as part of our introductory offer. It's going to have a 30-day money-back guarantee. It's going to include a MetaStock trial if you need it. MetaStock.com/JBXC. You can also call 800-882-3040, and you can go to MetaStock.com/saleschat. So great add-on. Again, we back it with a 30-day money-back guarantee. And it is part of the all add-ons that we've kind of been talking about all day. Normally, if you bought all of these separately, it's $9,000. If you want to get all of them and Oscar Carboni's trend lines and training, the price on that is a huge discount, $3,950. So if you'd like to do that, give us a call, 800-882-3040, metastock.com/saleschat, and we can kind of help you get going. As we move on, I want to say thank you to Stocks and Commodities Magazine. They've been long-term partners of ours. They've supported all of the trader summits that we've done and all of the conferences we've done. And they've done that for close to, gosh, I think 14, 15 years now. So we've been doing them for a long time. They've been supporting us for a long time. And if you'd like to get a free magazine and you haven't registered yet, go to metastock.com/traders-summit. Not only can you get like free bonuses, education packages, everything like that from everybody that spoke today, you can also get a free issue of the Stocks and Commodities magazine. So those guys, Stocks and Commodities, Jason, Sean, all those people that have been so helpful with sponsoring and supporting the events. We really appreciate it. You can also go to traders.com if you want to see Stocks and Commodities magazine website. So we are MetaStock. We've been rated #1 in our price category for 32 years in a row. I might have mentioned that before, maybe. Again, we've been talking about scanning and testing and how to identify trades and how to test ideas and all that kind of stuff. It's been rated #1. Oh, I said that already just now. If you want to pay for a month, you can get the second and third month for free. The price for our DC program is only $75. And for $75, you can run it until September 23rd. It's $25 a month to try the software that's been rated #1 for 32 years straight. MetaStock.com/summit deal, 800-882-3040, and MetaStock.com/sales chat. So as we kind of migrate into our last speaker, I just want to thank you for being here. Thanks for all the questions you've had today, all that kind of good stuff. Our next speaker is Oscar Carboni. Oscar is a huge friend of MetaStock. Our marketing manager, Greg Lewis, calls Oscar Carboni a force of nature, and certainly he does a great job. What I like about having Oscar on is he does a really good job. I don't know what he does to get the amount of energy that he has, but he certainly can talk about the markets. He certainly can show charts, and you can find out more about Oscar if you go to livewithoscar.com. But stay tuned, he's going to talk to you right now. Oscar, how you doing, buddy?
Jeff, I tried to unmute Oscar. Oh, there he goes.
Is that better?
Sure, that's much better.
Today, in fact, thank you, MetaStock, for allowing all of us to present. Thank you for allowing us to help other traders out there. MetaStock is fantastic. So, Jeff, we love you guys.
We love you too.
So
this is Oscar, but all caps and with a bunch of spaces in it, so and an exclamation point. I can see your chart, Oscar.
you can see my chart. That's good.
Yeah.
That means we're getting somewhere. This thing is going in the right direction, Jeff.
Cool. Well, I'll get out of the way and I'll let you take it from us. Take us home.
All right. Well, thank you so much. First off, good morning, good afternoon, and of course, good evening, traders from across the globe. Thank you for watching this MetaStock presentation, and thank you for sticking around till 5 o'clock to watch my presentation. So, I don't know how many of you know me. Some of you might know me. Some of you may have seen me in other webinars for MetaStock in the past on YouTube or wherever else. I'm all over social networking. But my name's Oscar Carboni. I've been working in this market or in the market since I'm an 18-year-old kid down on the trading floor, literally before there were computers. And somehow I ended up being some computer scientist nut at 12 years old and worked on computers even though they didn't exist and wrote programs. Got to the trading floor at 18 years old. There were no computers yet. Everything was point and figure. You literally held a pencil with graph paper and you put X's and O's on charts. My analytical expertise as far as learning about programming and going to college for it and being a programmer since I'm a kid. And then I got involved in technical analysis. As soon as I hit the trading floor, no one did it. It was point and figure. Well, at some point, I reached a spot where I was a professional floor trader who was a professional technical analyst who had computer skills. And I have to tell you, in 1980, you couldn't find one entity with all of those assets. And what started to happen was, I promise you, if you use anything today, if you use a chart like the one that we're looking at on MetaStock, if you use a price ladder, if you use anything at all to trade these days, it has gone through me through the 80s and 90s for me to help develop this whole thing that got us on the internet. So I really understand the software that you guys use from the beginning before it existed. I really understand markets. And I started as a point and figure guy on the trading floor, so I really understand analysis. All of that has come together in something I like to call the Omni, or Oscar's Market Navigational Indicator. And we'll get to that. So, again, MetaStock, thank you so much for letting us present. Traders, this is a very, very, very risky game. In fact, you know what? Forget about telling you it's risky. Yes, this is risky. Never trade without stops. Let me show you why. I wasn't going to use this chart. But before we even get into my webinar, let me show you something. This is the reason why we place our stops first. That's the bar in crude oil today. This bar is 1 day in crude oil today. One bar, 1 day. Why does the Omni method place its protective stops first? Imagine if you got long up here due to your program, your thoughts, your charting, whatever you wanted, without a stop, and this thing started to go. imagine what could happen to you in a trade if you're the average person that doesn't have 100 grand to lose today in a crude oil trade. What would you do if you had no stop? Place your stops, place them first, so this type of day can never be the end of your trading career. I didn't really want to go there, but this just happened today, and my job is to help teach my Omniacs and traders around the world. So look at that chart and remember, place your stops first, okay? With that in mind, had you placed a sell stop here and then tried to get long, but the news came out and it broke, you would have been short by accident because you had a stop in and no bed would have happened to you. If you placed the buy order and the stop, you would have bought, you would have been sold out on your stop and nothing would have happened to you. If you placed the buy order without a stop, this could be your fate for the day. And maybe this the end of your trading career. Place your stops first. Okay, kids, here's a great example. Let's go back to where we were. So, calling and trading markets, getting that correct, then being consistent at calling markets and getting them correctly is a very, very difficult thing to do. Without the proper training and a methodical, mechanical approach, there is no way any of you are going to get this right. I promise you, you've got to have a mechanical, methodical approach. I am happy to announce that the Omni is exactly that. It is literally a proven over long periods of time, decades, a methodical, systematical approach to calling market pricing. The Omni is built on technical analysis and the charts exclusively. It has no fundamentals, no news in it. It doesn't care what the president tweets. It does not matter. It is pure. It is based on market movement only. It's as pure and honest as the chart itself. A chart is pure and honest. Why? Well, I've been saying this my whole career, basically. A chart, like the one you're looking at here, is merely a visual look at all the markets, news that was coming out, did come out, coming out, government reports, cookbooks, CEOs getting ready to jump off bridges, markets that are doing well, tweets from the president. It's all built in to one chart. You know what that chart doesn't have? No reputation, no bills to pay, no child support, nothing to lie about. It is honest, it is pure, it's called the chart. If you can read charts correctly, it is the best roadmap on this planet, I promise you. So, let's see where we should take this, because what I do with my webinars is I don't have a PowerPoint that's already been built, and when they say, Oscar, it's your turn, I get to use my PowerPoint. I find out I'm doing a webinar, I wait literally to the night before that webinar. I see where all the markets are, and I build the webinar right there, basically as it happens for you. So I've got nothing pre-canned except for the charts that I went to look at, which prompted me to want to do this webinar. I can't wait to show them to you. So as we know, the chart is pure. If you can read charts properly, they are the most accurate, reliable roadmap to future market pricing that there is on this planet. There is no other approach I've ever seen to be consistent as well as the chart. We'll show you what's going on. So, should we consider fundamentals, tweets, and news to decide how to trade? Or is technical analysis and the use of the charts the way to market forecasting? I promise you it is. I promise you it is. I'm going to show that to you right now. Simple analysis is much more powerful than any complicated piece of analysis, and you'll see why as we get through some of these charts. So if you don't mind, follow me on this little journey. Take a little ride with me today. What we're going to do is we're going to go over something I like to call my AI portfolio, because for MetaStock in the beginning of 2024, January of 2024, they invited me to do a webinar, and I put together what I called the AI portfolio of very inexpensive stocks. And if you MetaStock fans and Omniacs hold on to these, every time I do a webinar, I will update that portfolio. And if you hold all of these, you will catch the big AI revolution. So we're going to start out with that portfolio first. I've gone over it in at least 3 webinars. We're going to start by going over that portfolio. Once we're done looking at the AI portfolio, and I let you know if we're adding in or taking anything out, which don't worry, we're not, then we will see where the markets are going now and what that means for this week, next week, how you could possibly make some money going forward. So let's get into this, traders. I got a bunch of stuff I want to show you. Right off the bat, the power of technical analysis. If any of you don't recognize just how strong it is, I'm going to show you something that all my Omniacs know of in my trading room. Here is a chart. This is the monthly NASDAQ chart. So that means every one of these bars is a full month's worth of trading. One whole month, January, February, March, it's a monthly. Last year, around somewhere around right around the end of November, I worked on a NASDAQ chart and I came up with something and I showed it to my trading room and I said, we've got a target all the way down to here and it could happen by April of 2025. And then I said to them, you know what? Let's just put that off to the side. We're going to pretend we never seen it. We don't know anything about that chart because we're going up right now. I don't want to talk about the downside. If we start to drop, we'll bring this chart back in. Well, sometime around May, we had to bring this chart back in March. Yeah, March, April. Sometime around March, the end of March, we decided to bring this chart back up and look at it. Here's where we were when I derived the target right here. This is the target, that round circle. Watch what happened since November. We almost hit the target. I mean, that's an insane piece of analysis. You know why? Because we're talking thousands and thousands of points. We're at 21,350, we'll call it. It dropped down to 16,004. The analysis was right on the money. It knew this was going to happen in November of last year. Is that not sick? How did I come up with that? I'm never going to show you that. That's for me and my family, but I will show you a bunch of great stuff. So what's next? Let's see. I have a bunch of charts. I wrote them down, which I normally don't do, but for this, I think you need to see a lot of charts. So once we looked at that ugly NASDAQ chart, we put it away, which was a good idea. And now I'm going to show you the AI portfolio, and we're going to come back. But I'll tell you right now, charts, it's a very, very strong testament to the power of technical analysis. Being able to make a call like this in November is out of control using just charts. Now let's see what would have made all of that happen. The AI portfolio, we're going to go over that one first. So this is the AI play AIQ.O in MetaStock. It's the global AI technology ETF. The Omni started to like it right about here. We did a webinar right here to tell you we loved it, you should get in. We've done webinars since, actually we did the webinar here when Omni liked the chart. Then we did the next webinar, and then every time I do a webinar, I put a W and a diamond next to it so I can inform you and you can watch this portfolio grow. So Omni started liking it right here. And I said, put this one in your portfolio and put it away. Look at how high we've gotten so far. The only thing that made us fall out of this channel were the Trump tariffs. That was the only thing that made this stock or ETF fall out of the channel. Otherwise, wow, has this been catching the AI move, right? But let me show you how the markets work. I'm from Wall Street. There are a lot of people who claim to be from Wall Street, but they may not have been in the nitty gritty, if you will, in the roots of Wall Street like I was. So there are things I've learned that many people haven't, and I've seen this over the years. Something simple like geometry. Watch this. Here's an example of market geometry. It is all about market geometry. You want to be good at markets, understand geometry. Watch this. I am going to show you that. Let's see, we're going to take a look at this. We are going to do that, and we're going to apply. Watch this. Back here, I've got a little teeny trend line. Right here, you see it? Goes from this low to this low, right? That's it. That's the whole trend line. Doesn't go any further. Now watch what happens when we simply extend this trend line. Watch this. Look at how Wall Street came in and bought it just about here. It never hit. They bought it here. When we started liking it, they bought it again here. And the only time it was able to get through this was tariff. And of course, that was powerful, right back up, right back into it. But look at how that geometry worked. The line was only this big, and it caught all the lows all the way up. Simple, right? But powerful. Wall Street uses a lot of stuff like this. Very simple but powerful techniques. So it actually worked on the upper side too. You want to see something crazy? Watch this. Let's get rid of the extension. We had from this point to that point, watch what happens when you extend. It catches just about every high all the way through. Is that not easy? I mean, come on, simple stuff, right? You have to know your geometry. Anyway, this is about the AI portfolio. Just that there's nice geometry on the chart. I wanted to show that to you. So AIQ, we love it. That stays in the portfolio. Here's the last webinar we did. It's marked with the W, and we'll check this out again in our next webinar. But here's the beauty of it. We got long here, or at least we instructed OmniX to get long here in the 25 mark. We're trading in the 40 mark. So far, so good, right? Let's go find another. Another one of our AI portfolio, stock portfolio, was the BOTZ, BOTZ.O ETF. Look at the insane respect being paid to this orange average right here. Let me see if I can grab this little thing. Look, it won't let me grab it. Sometimes it's stubborn. Come on, you. Get over here, you. Look at this. Look at Wall Street just keying off this average. Just keying off a simple average. Simple stuff. But you know what? Averages are algorithms, whether you know that or not. Now, have you noticed? If you haven't, take a look at this area right here where I keep writing tariffs. That is a V bottom that formed as the tariffs were announced. Boom, boom, V bottom formed. Very interesting, right? So much respect to that average, and there we are again at it right now. What else is in this portfolio? The third stock in our portfolio is Buzz. This is a very strong ETF. This has been fantastic since we got into it. Look at it here. This is where I'm starting to like it, all the way down here. And look at what's happened, barring the Trump tariffs. Nothing has stopped this thing from going up. It's been magnificent. Nothing goes straight up. And once again, what do you see here, kids? It's the same thing. You're going to see it on every chart. It's got a meaning, and we'll get to that meaning towards the middle or end of this webinar. But look at every single one of these so far that we've seen. You've got this V bottom happening right where the tariffs were announced. Bam, V bottom, bam, V bottom, bam, V bottom, happening to charts all over the stock market. Well, if the charts individually are making V bottoms, what's that tell you about the S&P, right? The stock market, V bottom. We'll get there, you'll see. All right, so Buzz, good one. Love this ETF. How do you not? Look at that chart. It's a wonderful looking chart. Nothing goes straight up. A great chart. Let's go to the next one. In the portfolio, we also had IQM, the Franklin Intelligent Machines ETF. Now, I've said since I put this chart out, ugly, ugly chart. I mean, look how ugly the chart is. But look at how Wall Street's using this 25 bar moving average, or algorithm, if you will. Amazingly, they're just all over it. And I went, well, if they're going to use it, I'm not stupid. You know what I'm saying? I'm going with what Wall Street uses, because that's what you're supposed to do. You're not supposed to create something that puts you in a corner, that you've created some complicated system and you're so smart that no one else knows these parameters, and you try trading that, you're trading in a world by yourself. The markets won't understand you. You've got to be using the most common, widely used analysis on the planet, so that everybody who's good at what they do is using the same sort of thing. That's where you want to be. Not in a program that was written to make you think that, hey, you're going to be the best genius trader in the world because you've got this program and no one else knows how to do it like this. No, it's not where you want to be. You want to be in a situation where the majority is doing it like that. Works much better that way. I promise that's true. So ugly chart, nice ETF. What I will say is, traders, if you like this webinar, if you like what you see by the end of this webinar, I want you to fill out an application at omnibootcamp.com. It's a very simple application, and then you can set up a phone time to speak with me. If you'd like to come out to one of my camps, if you'd like to study with me, go to omnibootcamp.com, create a time, and we can speak on the phone. That time you create for yourself, so it's convenient for you. Make sure you do that on the X. I think you're going to like what you see. So with this Franklin Intelligent Machines ETF, see here where we tested support, this great trend line that's been holding all the way through. Well, the support got tested for what? The Trump tariffs. Boom, down we went. Right back up, back into that channel. Support now works again. So far, so good. We love the Franklin Intelligent ETF. You know, I wouldn't buy it one stock only, but we like it in the portfolio. And again, I'll remember to mark every one of these webinars with a W so that when we go to the next webinar, we can follow our progress. But once again, Omni liked it down here. It was a lot cheaper than it is now, right? $30, $35 cheaper. Let's go to the next one. Loop.K. Omni started liking it back here where it says Omni. Well, we did our webinar, next webinar, next webinar, next webinar, next webinar. Here we are for this webinar. Support got tested here. It broke. Support got tested again, broke into the tariff lows, back into the channel, now above the channel. Nothing happened here except for there was a tariff hiccup. That's all that happened there, kids. So watch this. What else do you see? Another V bottom. Well, this is starting to become a theme, isn't it? And V bottoms are real. The charts know, the algorithms know, Wall Street traders know. That's a V bottom, kids. It's happening all over the place. So we still love Loop, stays in our portfolio. Learns. This one we took out of the portfolio on the second webinar. We did a webinar here to tell you we liked it. Webinar 1 since we got in. Webinar 2, we told you remove it. We do not like it. Too many red arrows. Get this one out of the portfolio. So we removed it back here in like March of 24, just a couple of months after we started the portfolio. Oddly enough, if you follow it, well, let's leave that ellipse alone. Oddly enough, if you follow it, it actually went a lot higher than we liked it, right? Even though we removed it from our portfolio, even the laggards seem to have caught up. So very interesting, this AI portfolio, we took 2 of them out, if I remember, over the course of a year and a half. Even the 2 we took out came back. So this has been a solid portfolio. Let's go take a look at the next. And I created this for you MetaStock users, you know that, right? Okay. Look at this guy, the Wisdom Tree AI Fund. But because it's called AI Fund and it's in its name, you got to assume the AI world's going to love it. I don't think they loved it as much as some of the other stocks, so we bailed out of it around when we did a same time in March when we did the portfolio, and when we did the webinar and bailed out of that other stock, we also bailed out of this back then. And still, if you look at it, I mean, it had a rough ride, but it's still higher. Not that it means anything to us because we're out, but it's still higher than where Omni pegged it, liked it back here. All right, let's go to the next one. Ubot. Ubot.K, it's a robo AI automation ETF. We removed that as soon as we stopped liking it. We got in at this red circle. We removed it from the portfolio here during a webinar with MetaStock, and we haven't really touched it since. That's had the biggest drop of all of these AI stocks. That's the worst tumble I've seen out of all of them. So I'm really glad that we did remove this last year. Let's go to the next one. Think. Think.K, THNQ.K. Very interesting, lots of rotations. However, same sort of action, loves to be in this channel, loves to work around this average, and V bottom gets put in like everything else. I've also made almost every V bottom a different color because I thought maybe by the time I get done doing this enough times, now we have an orange one, it will sink in, kids, that we probably have bottomed here. Let's see, we want to go here and make it thicker. And now once again, V bottom. After the tariffs were made, we got, not only did we get back into the channel, we got above the channel. Beautiful V bottom. Love it so far. Omni Camp's coming soon. Make sure you go to that Omni Bootcamp I told you about, omnibootcamp.com. Go there, make sure, fill out an application. I won't hurt you. I won't bite you on the phone, I promise. Nothing bad will happen to you. All right, let's see what happens next. So we did think. Quantum. One of the best so far has been this Defiance Quantum ETF that we put in back here when it says Omni gains interest. Look at how smartly this one has traded. Look at how beautiful it's been. What a strong, strong ETF to be in our AI portfolio. And again, a different color of the bottom. Crazy, right? So if you have enough V bottoms in the individual stocks, you know, the individual stocks make up the stock market, right? The S&P is made up of 500 individual stocks. NASDAQ's made up of 100 individual stocks. Russell is made up of 2,000 individual stocks. But if those individual stocks look like this, so does the market, right? They're the integral components to the market. So Defiance looks fantastic. Love the V bottom. I love the way the Wall Street came in and bought at the 200 moving average every single time. Look, every time it got here, boom, they bought it here, they bought it here, they bought it again during Trump tariffs right there. An amazing ETF so far. Moving along with this AI revolution, right? These were great stocks. Do any of you remember this portfolio? Because this is probably the 1, 2, 3, 4, this is the 5th webinar I'm doing showing you all these exact same stocks to put in your portfolio. All right, what's next? We put this guy in here. Let's see. October of 24, we added MSTR. In a webinar for MetaStock, we added MSTR at the price of 184 with a target of 277. It hit 277 with ease and continued on. Here we are now. We know we love MSTR in our portfolio. I am here to tell you this. If we could stay inside of this, if we could stay inside of this apex that's building, when we go up, we're going over 500. Above 500, the only key is we need to stay inside like we've done since the back of it. As long as we stay in, we stay inside of this thing, we're going to 500. Keep your eyes on that. And okay, so let's do this. Let's move to something different. I've shown you the AI portfolio. You see that we haven't removed anything since the 3 that we removed last year. The AI portfolio is looking fantastic, and I hope all of you, some of you, have participated. Now, let's go look at some other good stuff. Let's go back and remember, let's talk about the power of technical analysis. I showed you this insane chart. It might look like, oh, Oscar, you missed it, but imagine if you were around for me calling it and it started to happen. It was an insane thing to see. So there is power in technical analysis, a lot of power in technical analysis. So we're going to go over some of that power right now. Let me see what I have here. Oh, here we go. Look at this pretty chart. Speaking of the power of technical analysis, on Sunday, April 6th, this is proof that the charts know best. On Sunday, April 6th, I started filming a series of YouTube videos. I do a video every night practically to tell my Omniacs around the world what's going to happen tomorrow. Then I sit in my live trading room and we go through those trades as if it was a script that we're following like any actor would. We follow our script. In fact, I've always got a trade plan on me at all times. And I would say there's no trader worth his own salt that doesn't have his trading plan for the day in his back pocket at all times. So got my trading plan. I know what I want to do. I do a series of videos. I do videos every night so that we can act out this trading plan the next day together in my live trading room. So I do a video, YouTube, tell people what's going to happen. The video series was called Do Not Bail Out of the Stock Market. Wall Street support is on the way. This was the day before the big crash was coming on Monday. Monday, April 7th was labeled Black Swan Monday. Morgan, Goldman, CEO types, News, Kramer, you name it, they all came out on Sunday and said, we're going to have a crash on Monday and then a recession. These are the biggest banks in the world their CEO is coming out on a Sunday saying that we're going to have a crash. My video came out Sunday night before markets opened up at 6 p.m. My video said this very chart. Charts know best. E-mini S&P, please stay calm, do not bail out of stocks. And I showed them this exact chart. I said, look, we're going to drop. It's going to happen. We're going to drop between 49.75 and 47.75 right here. We're going to drop between 49.75 and 47.75. Don't worry, when it gets down there, Wall Street will come in and buy this. And that was a video I did Sunday night. Then I did one Monday and Tuesday and Wednesday and Thursday, and they were all titled the same. Do not bail out of stocks. You know what happened? This. We went right to my spot. I mean, it magically dropped right between 49.75 and 47.75. It went to 48.32. Just like I told you it would in the video, just like the analysis I put before your eyes, and I got my Omniacs long for this as often as we could. Boom, straight up. I used the chart. I didn't go with fundamentals. I didn't go with feelings. I didn't go with Morgan Stanley or Goldman Sachs CEO coming out and saying, jump out of everything you own, bail out, it's the end of the world. I went to my charts. My charts told me, be brave. Get on YouTube and tell people don't get out. Show them why. And I showed you this very same chart. We literally got there, boom, just like it was planned. And we started getting long. Now get this. We have gotten all the way back to 60, 74, 75. So far, we might have gotten a little higher today. We went all the way down to 48.32. There was nothing there but an empty circle. The market stopped cold there. Now, I've got a call. Everyone who follows me knows I put a year-end call out every year. 7512 is the year-end call for E-mini S&P. When I made that call, we were down in the 4,300, 4,600 area, S&P. I said this year, 7512, people thought I was insane. Well, the market rallied so far 1,242 points off this low. That's 1,242 points. If it rallies 1,400 more points, we hit 7512. Now, we rallied 1,242 points in a month and a half. 1.5 months, that's all this is. April to June. Well, April, May. April, May into June. That was all it took, right? Boom, boom, boom. So if between April, May, and June, we were able to go up 1,200 points, don't you think we could do 1,400 for the next 6 months of the year? Absolutely. Call remains 100% valid. And what's really interesting about that call is it turns out to be the exact same number on my badge I've been wearing since I'm a 21-year-old kid in the trading pits. Somehow I came up with a 7512 projection for this year in S&P, told all of you cats about it. Then we crashed. Everyone said, Oscar, you're crazy. We're on our way, kids. You know what I used to get there? Technical analysis only. No fundamentals, no nonsense. Don't care who the president is. Don't care what we're doing. Don't care if they're shooting weapons or burning or blowing up weapons to get rid of them in stockpiles. I don't care about that. The charts will take us home. So this I was able to show people. And then I said, now look what happened since we got down here. Check this out. Now let's go look at some of the daily stuff. Let's go to a chart number 6. I think I've got, okay. E-mini S&P. This is the E-mini since that drop. This is the Trump tariff drop. All we've done so far was put in a tremendous V bottom, a tremendous head and shoulders inverted. Overall, this is a bullish formation. Left shoulder, head, right shoulder. But in this case, it's inverted. It's upside down, right? Shoulder, head, shoulder. It's upside down. By the way, that's the queen for you Brits out there. So beautiful, huge inverted head and shoulders with a V bottom. E-mini S&P. Unequivocally, that is real. NASDAQ, look at the size of this head and shoulders. Inverted, usually overall a very bullish formation. What do you see? V bottom. One of the things I thought you'd start to recognize as a theme in these charts is this V bottom. V bottoms are real. Wall Street watches for them. So another V bottom, E-mini S&P, now NASDAQ. Let's see if we have anything else. Let's see, I've got a bunch of stuff to show you today. And then maybe if we have some time, we can do some questions and answers. Russell, another massive head and shoulders, inverted, pointing up. And if you wanted to, you could call this some sort of a V. Right? You still got a V. Even though it's ugly in the Russell, you still have a V bottom. So inverted head and shoulders. The right shoulder might not be complete yet in all of our indices. At some point, the right shoulder will be filled in completely, and up is where it should go. All right, what else is out there? The YM, the mini Dow. Once again, although not perfectly symmetrical, but this is a fine art, not a science, so it doesn't have to be. You've got a left shoulder, inverted, head, right shoulder means the whole thing's an inverted head and shoulders, but the key, another V bottom market. This is the Dow, another one that V bottom. So as you can see, there's a theme here. The theme is the market thinks it bottomed and the street doesn't. And I love that theme because the charts know better than the street. They always do. And I use charts. I don't use anything else to figure out what's going to happen next. So what else do I want to show you? Oh, yes. The power of technical analysis. You've seen some of that. Now let's go look at this chart. Boom. We call this chart masterpiece. We've been using it for years. In fact, I use this very same chart to call the lows in COVID, but now we're past COVID. This is chart masterpiece. It's your weekly NASDAQ. It runs inside of this channel. It almost never falls out ever. I mean, it just stays inside the channel, right? No matter what happens, it just behaves inside this channel. And boom, something happens. Yes, it didn't hold. Why? Well, let me just put this back where it belongs. Why didn't it hold? Trump, tariffs, boom. First time it didn't hold. What did the market do? Right down to where we expected it to go. Back up. Now we're back inside of the infamous channel, above this wonderful green average. That is a beautiful looking chart. There's no reason why you wouldn't love the NASDAQ looking at this chart. Now, is this going to be a double top? I can almost hear someone asking me right now. Oscar, is this going to be a double top up here? Well, we'll see when we get there. Let's let it name itself when we get there, right? It still has a few hundred points to go. And once we get there, we'll figure it out. But this NASDAQ chart is a wonderful testament to technical analysis. We are back in the saddle as far as the market's concerned. Street sees this. We're in an Oscarism F flag. It looks fantastic to me. Nothing goes straight up, but these markets don't really want to go down. What else do we have? 21. If I could spot 21, I want to show you that one. Boom. So once again, look at this. Now we're going to add an average to that S&P weekly chart. Barely breaches the average here, holds. Breaches for a few days, holds. Weeklies, for a few weeks, excuse me. Holds perfectly, 1 week only, holds perfectly, holds, finally a breach. Serious when it gets breached, back above the average, and a V bottom formation. You see the theme here? It's not bearish anymore. There'd have to be a serious geopolitical event coming way out of left field to throw these markets out of the run that they're on right now. They're not going to go down. Nothing goes straight up, but these are not geared to go down. Now, technical analysis, by its very nature, morphs with the market. As the market changes gears, so does analysis. The analysis I'm showing you right now, as of this moment, we are not calling for any downside. Maybe pullbacks to get long. This is going up for the year to my 75.12. Could that change? Absolutely. And then I would do a webinar to show all of you, or you just come to one of my YouTube videos, and they're current each night to tell you what I think will happen the next day. So ES weekly bar, that remains intact if you ask me. And so I showed you why we should place our stops first. I'm really glad I did that chart. That chart was literally going to be last right here. Show them the crude chart, but I wanted to get that out first. So what else do we have? I was asked about a couple of markets, which I will get to right now. First one is 15, correct? Yes. Ethereum. Oscar, what do you think about Ethereum? Well, let's step back 1 minute. I did answer the question about 75.12, right? We're going. What do I think about Ethereum? Well, I think Ethereum runs in sympathy more than anything else with Bitcoin. When Ethereum's bullish, it's usually because Bitcoin was bullish. When Ethereum's bearish, it's generally because Bitcoin was bearish first. But what you had happen here was you built a nice, strong bull flag. We fell out of the bull flag for 2 days now. Well, I guess 2 days, but bounced off support. What's going to happen next? Me, I don't know. I got to wait for my Omni signal, and then I'll let you know. But likelihood is you're going back into this flag. It's going to jigger jag around in the flag and work its way out of the top end. Is the likely event because it is a bull flag. However, right now, we're going to say it's not a bull flag. Do you know why? Because it fell out and maybe we were incorrect for even thinking it was. So we're going to remove that bull flag for now and let this call itself. All we're going to care about now is support. Let's see if the support holds. If the support holds, maybe we'll rebuild the flag on that. That's where we're at with the with Ethereum at the moment. It's trying to gain its legs again. It will likely gain its legs and go, but you needed to hold that support right there. Now, on the way down with Ethereum, we had a bearish channel and it created bear flags all the way down practically. There's one here, there's a little one here, it created lots of bear flags. Then we went into a green bull channel and bull flags started to get created like the one here and the one we just pulled off the chart for now, because we don't know for sure if it's a bull flag anymore. We're out of it, so let's find out. So, but you see how bull channel, bull flags, bear channel, bear flags, it sort of points. You know what I mean? Ethereum sort of points. You just have to know the signs. And what else is out there, Mr. Bitcoin? Boom. Now look at Bitcoin and look at this insane algorithm average, if you will, that they've been using on Wall Street to nail Bitcoin. It goes all the way back further than I can show you on the screen. Holds, holds, finally gets under, and what happens? Now it's resistance. Boom, drops. Gets under for 1 day, can't hold it. Boom. Now gets above and stays and stays. Then once it gets under, watch this action. Fail, failure, 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 failure. Little jigger jagging. Finally, it works its way above. And as soon as it got here, we gave out a signal. We gave out 3 signals, 94.2, 10200, 121. We immediately hit 94.2, no problem at all, hit. Then we went up and hit 102, hit. Next target will be 121 after this pullback is over. So that's what I've been kind of messing around with on Bitcoin and Ethereum abstract sort of analysis. Of course, the Omni itself is less abstract and it's more pinpoint. The Omni, Oscar's market navigational indicator, if you will, that tells you exactly where to get in, where to get out, where to place your stops. This is more abstract, showing you the flow of the market. If you want to learn the Omni, which is what I use to send out trading recommendations to traders all over the world, that's kind of easy. First thing you should do is come to my site, livewithoscar.com. Why? Because it won't cost you a single dime. It's free. Not even a credit card's required. You would go to livewithoscar.com, click register. It's very simple. Fill out that, you'll get an email. The one problem about emails these days is the likelihood of that email going to spam is very high. So the chances that my email is going to go to spam. If you see it, just go to your spam, unspam it, send the code back, and you will be able to join me in my live trading room. I am there right now, live. There's usually 2 cameras, the one over my head and one pointing straight at me, but I'm using that for this webinar. So you could join me in this trading room. I'm here 24 hours a day. It would cost you absolutely zero, not even a credit card. We gather here, us Omniacs from around the world, and we get through these rough and tumble markets together. OmniBootcamp.com, which I showed you earlier, is where you could just go fill out an application to speak with me and or come to OmniCamp. Would love to see you guys show up there. Certainly come to the free trading room. It's the coolest place to hang out. You know, I'm a professional trader my entire life. I don't mess around. You know what I'm saying? My stuff is as real as it gets. If I send you a trade, it's the realest trade you're ever going to be in. Win or lose, there's no kidding around here. I'm live on camera and microphone all the time for you cats. I put out videos the night before to tell you what to do the next day. Then I sit here live getting you through those trades. You can't fake that. When I do host my Omni camps, which are only for 3 to 5 people, I invite them to my home office and we work together for 5 days. You know, if you've got something to show people that doesn't work, You don't invite them to your home office where your wife and family lives. You fly to another city, you rent a room somewhere, you bring them to that ballroom, you sell them your bullshit crap software, you fly away, they fly away. When it doesn't work, you guys aren't together. When I teach you the Omni, you come to my home, you spend 5 days with me. Then we have a separate trading room that instead of just the public trading room, there's a private trading room, and only the Omniacs who've ever come out to my home course get to go in that room for continued education. So there's good stuff happening here. But let's continue with the charts because I like that more than I like anything else. So if we go back and look at a couple of other things, watch this. It's not just the indices that I showed you that are telling us what's going on next. It's the other ones too. Look at Netflix on a weekly. This is a Netflix weekly bar. Leaders are still pointing straight up. This is a big one of our leaders. It is pointing up, not down. It holds the 40 bar moving average or algorithm like a banshee. And if the leaders are still leading towards the upside, you got to expect the laggards have to follow, right? There's not, and look at this one. Netflix looks fantastic. Who else looks fantastic on there? Oh, check this one out. This is Meta, Facebook. Look at this crazy bull channel it's been in. The only thing that got it out of that bull channel for a short period of time were the tariffs. And we V-bottomed. See the theme, kids? We V-bottomed. The leaders are leading. We have V-bottomed. We are going higher as this year goes by, based on analysis, not the insanity that we're seeing, not what's going on in the Middle East, not what goes on at the White House, not what's happening in the newspapers or on Twitter. What we see on these charts is the absolute roadmap to future market pricing. That is what I wanted to show you today, traders. That's my presentation. We'd love to have you show up at the Omni Trading Academy in our trading room. Entirely up to you if you want to hang out with me, but I certainly would appreciate your company, and you'll learn a lot just hanging around me. Jeff, with that, unless you've got questions, I will yield my time back to you, sir.
You know I got questions.
Well,
I think the one I want to start with, Franz wants to know, is there any hope for bond futures?
Let's go find them. Is there hope for bond futures? If you give me just a moment, I may have a chart. Bond futures already drawn up for us. The problem with this system is that I can't name the chart. It only has a number, and I don't know what it means. I never know what chart it is till I look. It's insanity. All right, so we could do it another way. We'll just bring it up. So let's just bring up bonds for you somewhere. We'll pull up this guy and we'll do bonds. T-bonds, we've got something going on with T-bonds now that's slightly interesting. In fact, let's make this a little bit longer chart, being that you guys want to know about bonds. Let's make this a continuation so we get more bars. All right, so now we have more bars. What's going on with bonds right now is somehow, some weird way, it's actually building this. Look at this. It's actually building this right now, which I was not expecting to see when I started doing my homework. Some kind of, maybe it's V-bottoming, I don't know. Let's label it first and I'll show you what else is going on. T-bonds. CMU, that's the daily, right? So this could be starting to bottom, maybe, maybe not. The other thing that could be starting to happen here, which you may find, if I can find this little thing, I'll show it to you. You may find that some of the newspapers out there, like Investors Business Daily, might be calling this the bottom of a cup. Because they like to call everything a cup and handle. And if that's a cup and that's a little bit of a handle, we are going to end up going higher. Now, why do we need to go higher? Let me show you on the weekly. We need bonds. Let me label this again. I'll show you just what we need in the next 2 weeks, maybe the next month. So the weekly, what we need out of this weekly is this. See this trend line right here? We're going to need the market to get up here, and I'll explain why in a minute. So let me make it a little thicker and a little brighter so you guys can see what it is. All right, boom. We need bonds to complete what it's doing here. We need these bonds to go to about here. And I think the government is going to try to get us there. because we've got a huge refinancing coming. And if we can get bonds to just move a little higher, we can take hundreds and hundreds and hundreds of millions of dollars off the interest that we will owe when we roll our bonds, when the government rolls their bonds. Now, I am not here to tell the Fed what to do, nor would I know how. But I do know the bond market, and I do know the Fed needs the bond market to come up to about here. And I think they are going to do that. Now, if you use simple analysis, they even have a trend line target to get them there. Look, they have a trend line to get them there, right? This high to this high, that's a trend line. They are looking to go here. The government needs bonds there in the next couple of weeks. If we can't get bonds to go there, we're going to come knock on this door again. Now, if you don't know this, by the way, when T-bond prices go up, right, when you've got a T-bond going up, what's happening is the interest rates are literally going down. When T-bond futures go up, it forces interest rates lower. Whether Jerome Powell speaks or not, the rates just get lower. The banks start charging less. Everything is less as far as interest is concerned when the bond market is going in the upwards direction. When the bond market is going in the downwards direction, interest rates are going up. We don't want bonds to continue going down. We need them to get higher up here. But this is probably your expected area, 119, 120 in T-bonds. I hope that helps.
That was great. VCM LTD in YouTube wants to know if the charts are saying about anything about crude oil after the Middle East stuff.
Crude oil, which one? I think we're 17. So crude oil, and this is no longer July now, this is August. Crude oil, looking at this chart, has done everything we expected it to do so far, except for actually hit 47.5. Dropped down to our 55 target, hit it very smartly, came right back up. But if you take away everything on this chart except for this, you'll find that Wall Street and the government are both keying off of this thing right here. See this average and this trend line? This trend line connects the last high to the high before and the high before and the high before and the high before. Look at what they did. They got above, they hit the average, right back down. We're trading here now. The likelihood is crude will end up going to my 47.50 target. Why? Because we just took out all the stops. What does that mean? This guy, stops got put in above that line when the market went up and people didn't get stopped out. They had stops there. And then it went up and tried to take them out and didn't. So people are still in. You usually put stops over a major trend line like this. Here, you see how they took out the stops and then gone? Well, they just took out the stops. Down we're going to go. We've knocked on this door 4 times. It finally broke. It's going to break again. I think crude oil heads down looking at this chart. So we've been so right about crude with the exception of this one little spot right here, that I'm just going to stay with the Omni call. 47.50 will come our way. Anything else, sir?
All right. Yeah, I think we have time for a couple comments and one more chart, if you don't mind.
Sure.
Lex says, do you have an opinion on HIMS? HIMS had a huge gap down and a bad day. HIMS.
All right. Let's see if I can find the chart to mess with that doesn't mess with anything else. Is that a .o on here? What's HIMS?
I think it's, let's see. I think it's .k.
.k. Oh, look at Google. Well, it's in front of us. Right? .k. Ordinary shares. So, you know, it's a funny thing. We talked about this. We talked about this stock in our trading room today, and you know what we talked about? It was in the newspapers. It was in the Wall Street Journal on this day. And what I told them in the room was, my experience has always been once it finally hits the Wall Street Journal, it's too late. And oddly enough, we had that conversation today. And look at this thing. It was in the papers over the weekend. I read about it. And look what happened here. So in all honesty, I don't even have an opinion of this. I mean, it just flips around way too much for my liking. I don't like all the gaps. Look at all these unfilled gaps. They're all over this chart. I just don't like charts that gap around like that. And what you see in here, I mean, that's massive gap. So it is a gappy, spotty type of chart to begin with. And as you can see, this must have been one of the Wall Street darlings before we got above it, because it came right back to it. Right? Look at, they blasted off from it. stopped it from going up, stopped it from going up, stopped it from going down, stopped here, stopped here, stopped here. Look, it dropped right to that same area. Isn't that interesting? So I don't really have an opinion about this stock. It's nothing I would trade. I hear about it a lot. Doesn't tickle my trading bone. So I don't want to give you an opinion that I do not.
Yeah, absolutely. Do you have an opinion on silver? It's like Pete wanted to know if it go. He sees a cup and handle that started in the 1980s.
So does every silver bug in the world. Let's go look at silver. Let's see, maybe we can throw silver on here. Oh, silver fans. Yeah, silver was all ready to go. So we, oddly enough, when we were using this chart, we had a bunch of great silver trades right along this area. But one of the things about silver I've told people for many, many years is silver is to metals the same thing as natural gas is to crude oil. What does that mean? When you shale or drill for crude, you get natural gas as a free byproduct. Comes out of the ground, you just need to store it. You don't have to pay for that one because it comes out as a byproduct of you've got a crude company, you're shelling for crude. Well, I got all this natural gas I didn't even have to pay for. It's what happens when you shale. Now, when you mine zinc, copper, especially copper, oxides, silver itself, gold, when you mine all of that, do you know what you get? You get free silver, just like they get natural gas. I've been calling silver the natural gas of the metals as long as there's been a natural gas market. So silver fans, here's what I will tell you. I started on the exchange in 1982. Mentor, friend of mine, love him to death, passed away years later. Dominic Orsiello said, "Hey kid, I've been watching gold and silver since I started on the floor. I used to be one of those board boys that put the chalk if the market changed prices. I wrote it with chalk on the board. And here's what I got to tell you. One day I became a broker. I was young. This guy's in his 60s now. I was young. The price of gold was about $65. The price of copper was here, and the price of silver was right where it is now. The odd thing is, in my career, gold's gone all the way to $265. Copper's gone up to almost $1, and silver's in the same place it was practically when I started. This is what was told to me at 18 years old. Well, I can say to you, 43 and a half years later, when I started on the floor, gold was $245. It's now thousands of dollars. It's $3,000. Copper was just under $1. It's now almost $5. You know where silver was? Right here. Silver was somewhere in the 30s when I started. Now we're talking, he did 40 years and I did 40 years. Neither of us have seen silver follow platinum, palladium, copper, or gold. Will it ever go? I don't know. You get it for free when you mine for everything else. So will it go? It really doesn't have the chance to go unless somehow they stop mining for other products and then silver becomes slightly more rare. So we can pray it's going to go. We can flip it to a weekly and say, well, for a weekly, it looks fantastic, and it does. And the cup and handle, by the way, what they're speaking about is this one. I don't know if you guys recognize what he was mentioning. He's talking about a cup. Well, that's backwards. Hold on. So about a cup. This area, they're calling it a cup. You can make it bigger if you want and call the whole area right here the cup. And the handle happens to be this thing right here. It's what Wall Street's sort of calling it right now. It did actually get above that cup and handle and go. So I'm not going to tell you that silver can't go, but I have to tell you I haven't seen it go in 40 years of a career before me and 40 years of mine. It still hasn't gone anywhere yet. So here's what Dominic did teach me. He said, hey, kid, whenever silver sticks its ugly head up, take out your lawnmower and chop it off, is exactly what he told me. I've got to reiterate that to you.
One of these days on silver, one of these days.
He's waiting 80 years. He's dead for 20 of them. He's still waiting.
Steve wants to know, the Omni is an indicator you put on a chart. Are there instruments and or timeframes that you like it better than others?
So I think for If you're a day trader, your best time frame is a daily bar chart. Because if you want to trade a day trade, you trade the day's range. If you want to be a 5-minute scalper, you trade a 5-minute chart, but you know what you're supposed to do after 5 minutes, you got to be out of the trade and find another one. People will use a 5-minute chart and then stay in for 3 hours. You want to use a 3-hour chart and a 3-hour trade, go to that. But try to be the same size trader as the chart you're using. The markets will respect your use of those charts. Daily would be my favorite though.
No more questions, just a comment. I saved it for the last because I agree with it completely. Michael says, love the energy and of course the market insights. Thank you very much, Oscar.
Thank you, thank everybody. And always, I have to end with stops are in. Watch out, kids. Emotions are out. Thank you for tuning in, everybody. Come visit me at livewithoscar.com and we'll hang out in my trading room and get through these rough and tumble markets together.
Oops, sorry about that, Oscar. That's some feedback on my end. Thank you so much, Oscar. Great to have you.
So long, people. Great doing this presentation. I love doing MetaStock stuff.
All right, very cool. And what a way to end, right? Love Oscar. He does such a great job. Thank you so much. We did sit down just a couple of years ago. We recorded a masterclass with Oscar. We did technical trends, formations, the mystique removed. In it, he shows how to properly draw up your chart, how to put trend lines on there, how to do support and resistance levels, 3 hours of overall instruction, and you can get it. Well, it's available immediately as soon as you purchase it. Normally it's $4.99. Here at the event, it's $3.49. And so we'll give you $150 off. You can buy that at 800-882-3040. You can go to metastock.com/saleschat. You can also get it at metastock.com/summit deal. I'm going to ask Greg to put that into the chat for me. Metastock.com/summit deal. All right. We had a great day today. Had all these experts come in, talk about their stuff. If you want to get all of their systems, their methodologies, those things that have been kind of created using their experience, you can get all of them as a package deal. The total price, instead of $9,064, would be $3,950. You can do that by giving us a call, 800-882-3040. You go to metastock.com/saleschat. Thank you, Greg. I appreciate that. As we get out of here, I wanted to say thank you to all of our sponsors, Stocks and Commodities Magazine. Been supporting us for years. www.traders.com if you want to find out about them. Great magazine. The Traders Forum, if you haven't joined yet, you should. The Traders Forum can be found at thetradersforum.com. We do technical lessons. There's all kinds of resources. You can chat with other traders. Very great forum. We're growing it. We've said 1,000 members. You could be one of the, maybe 1,004 if you sign up right now. www.thetradersforum.com. And everything we talked about today, you can find at metastock.com/summit deal. You can call us at 800-882-3040. If you have any questions, get in touch with us at metastock.com/saleschat. I want to thank all the presenters for being here. I want to thank you. If you're watching us on YouTube, thank you. If you liked and subscribed, if you did, but you'd like to, go ahead and do that. Thanks for being here. Thanks for being part of the show. I appreciate it. I hope you learned something. Stay healthy. Stay well. I'll see you next time.